Two eldest sons, Brandon and Kyle, to run the core of his business group after his resignation from Cantor Fitzgerald. President Trump is planning tariffs on auto, semiconductor, and pharmaceutical imports of around 25%. Today, the president told reporters he will announce more about the auto tariffs in April. Here is Trump speaking to reporters at Mar-a-Lago.
It'll be 25% and higher, and it'll go very substantially higher over a course of a year. But we want to give them time to come in because, as you know, when they come into the United States and they have their plant or factory here, there is no tariff. So we want to give them a little bit of a chance.
Incidentally, half of the factories for S&P 500 companies are outside the U.S. Trump also signed an executive order to expand access to in vitro fertilization treatment, known as IVF. We go to foreign policy next. Top U.S. and Russian officials met in Saudi Arabia for talks on halting the war in Ukraine. Both sides agreed to work toward an end as soon as possible. However, Ukraine and other European nations were not at the talks today. Ukrainian President Volodymyr Zelensky repeated calls for Ukraine and Europe to be included. Here is Secretary of State Marco Rubio. He said peace talks will include all major parties.
I came away today convinced that they are willing.
Everyone, good morning, good afternoon, good evening. जिस भी टाइम जोन पे हो, वेलकम वंस अगेन टू दिस लाइव स्ट्रीम. आज 19th of February 2025. वेलकम. स्टार्ट करते हैं सेशन. फिलहाल के लिए देखोगे प्राइस को. क्रूड ऑयल याद रखना, ये क्रूड ऑयल का मैंने मार्च का चार्ट लगाया है, कंफ्यूज मत करना. दिस मार्च चार्ट. नेचुरल गैस का नॉर्मल चार्ट है. काफ़ी बुलिश हो गया था कल, रेजिस्टेंस भी होल्ड नहीं कर रहा था. एक रेजिस्टेंस है फिलहाल के लिए, यहाँ से एक सेलिंग का प्लान है नेचुरल गैस. दैट इज द ओनली रेजिस्टेंस वी हैव राइट नाउ. नीचे सपोर्ट देखना पड़ेगा. देयर इज नो एग्जैक्ट सपोर्ट बिकॉज कल सारे के सारे रेजिस्टेंस ब्रेक हो गए थे. ऑल दोज लेवल्स आर एक्ट लाइक रीटेस्ट जोन. But yeah, these are the support resistance in 15-minute time frame जहाँ पर एक selling we can plan. बाकी निफ्टी बैंक निफ्टी देखोगे, कल जैसा मैं बता रहा था, सपोर्ट स्ट्रॉन्ग ही है, होल्ड करना चाहिए. आज अच्छी खासी बाइंग आई थी लोअर एंड से. 3-4 15 मिनट की जो स्टार्टिंग की कैंडल ही थी वही कंटिन्यूसली. बैंक निफ्टी फ्यूचर में बुलिश बनी, उसके बाद थोड़ा साइडवेज चला गया है. बट ये अभी भी देखो सपोर्ट होल्ड किया है मार्केट ने. मेन देखो मुझे लग रहा है कि मार्केट की इस चीज़ का वेट कर रहा है. ट्रिगर पॉइंट क्या हो सकता है, वो हो सकता है अगर इंडिया और यूएस के बीच में कोई ट्रेड एग्रीमेंट नहीं होता है रिगार्डिंग द ट्रेड ऑब्वियसली, तो फिर हमारा मार्केट बड़ा गिर सकता है. ठीक है, अगर टैरिफ लगा दिए, रेसिप्रोकल टैरिफ इंडियन कंपनीज पे प्रेसिडेंट ट्रम्प ने, बड़ी प्रॉब्लम हो सकती है इंडियन मार्केट को, और बहुत बड़ी बड़ी जो कंपनियां हैं उनके स्टॉक फॉल कर सकते हैं. बाकी अगर कोई कंसेशन बन गया या कोई एग्रीमेंट डील हो गया रेसिप्रोकल टैरिफ लगाने से पहले, तब मुझे लग रहा है एक ट्रिगर पॉइंट हो सकता है अपसाइड का. अगर नहीं हुआ ऐसे और कोई टैरिफ लगा दिया ट्रम्प ने, हमारा मार्केट बहुत बड़ा गिरेगा, याद रखना, बहुत बुरी हालत में. तो इसलिए अभी भी सपोर्ट होल्ड है. लेट्स सी किस समय तक, कितना लेट, कितने देर तक होल्ड कर पाता है ये सपोर्ट जोन. लाइक नहीं किया गाइस, लाइक भी करते रहो. डोंट फॉरगेट टू लाइक द स्ट्रीम. कोई क्वेश्चन है तो कमेंट बॉक्स में पूछ सकते हो. नेचुरल गैस में सेलिंग का प्लान है यहाँ पर एक. ठीक है, यस नेचुरल गैस तो एमसीएक्स का ही चार्ट है वो. व्हाट्सएप पे मत पूछो, लाइव मार्केट में क्वेश्चन पूछ लो. ठीक है, कल काफ़ी बुलिश हो गया था. लेट्स सी ये लास्ट रेजिस्टेंस होल्ड करता है नहीं करता है इसमें. बाकी 130 हो जाएगा अभी थोड़ी देर में. लंदन सेशन ओपन हो जाएगा. मुंबई सेशन के बाद लंदन सेशन से थोड़ा बहुत वॉल्यूम हम एक्सपेक्ट कर सकते हैं, आ जाना चाहिए. नीचे देखते हैं कहाँ तक गिर सकता है. अगर नीचे फॉल आता है कौन सा लेवल हम देख सकते हैं. लेट्स सी, नीचे एक बार ऊपर का एक रेजिस्टेंस और बना देते हैं. इसके ऊपर अगर प्राइस कहीं निकला इन 15 मिनट टाइम फ्रेम नेचुरल गैस में, तो फिर और कौन से लेवल देखने के लिए मिल सकते हैं. ऊपर एफईजी है एक दो, वहाँ पर थोड़ा बहुत रुकेगा बिकॉज लोअर लो फॉर्मेशन के साथ वो स्टार्ट हुए हैं. बाकी 370 375 तो वीकली रेजिस्टेंस भी है, इफ नॉट रॉन्ग। वीकली टाइम फ्रेम पे देखोगे दैट इज अ वीकली रेजिस्टेंस एज वेल। 370 देखोगे ना, 370 वीकली रेजिस्टेंस भी है। बाकी इसमें इतना पीछे दिखा नहीं रहा है 15 मिनट चार्ट टाइम फ्रेम पे, 30 मिनट यूज़ करना पड़ जाएगा। देखते हैं, ठीक है, अभी फिलहाल के लिए इतना पीछे दिखा नहीं रहा है MCX में लेवल, कि अगर इस लेवल के ऊपर निकला तो फिर नेक्स्ट रेजिस्टेंस कहाँ मिलेगा। मोस्ट प्रॉब्ली वही 370 के अराउंड मान के चलो, क्योंकि वीकली रेजिस्टेंस है तो वहीं रुकना चाहिए फिर। नहीं, 15 मिनट में भी नहीं है, 30 मिनट में भी लेवल नहीं दिख रहा। बहुत पहले आया था इस लेवल पे प्राइस, एग्जैक्टली अगर देखोगे ना, 2023 की हम बात कर रहे हैं, 2 जनवरी 2023, तब आया था इस लेवल पे प्राइस। तो 15 मिनट और 30 मिनट में पीछे देखोगे लेवल जाएगा नहीं। 1 आवर टाइम फ्रेम पे जा रहा है बस, ओनली 1 आवर टाइम फ्रेम, उसमें भी कुछ क्लैरिटी नहीं है। सीधा 2 आवर ही लगाना पड़ेगा, 2 आवर में ही दिख रहा है एक चार्ट और रेजिस्टेंस। तो या अगर 2 आवर्स टाइम फ्रेम पे देखोगे तो थोड़ा सा चेंज हो जाएगा, बट या अप्रॉक्सीमेटली आप मान के चलो 385 से 395 एक रेजिस्टेंस बन सकता है इन केस ऑफ अगर प्राइस ऊपर निकला तो। बट ये 2 आवर टाइम फ्रेम का रेजिस्टेंस रहेगा, 15 मिनट में कोई नया रेजिस्टेंस बनेगा तो तभी देखेंगे। तो 2 आवर टाइम फ्रेम पर ही दिख रहा है बस, तो 15 मिनट का कुछ लेवल है नहीं इसमें, इसके ऊपर। दैट इज 2 आवर टाइम फ्रेम रेजिस्टेंस जोन, अगर होल्ड नहीं कर पाता है। वैसे बनने को 15 मिनट में बना होगा, बट उतने पीछे नहीं दिखा रहा है तो मार्क नहीं किया कह सकते हैं। बिकॉज वीकली टाइम फ्रेम पे रेजिस्टेंस है 370 75, तो वहीं पर रुकना चाहिए लॉजिकली देखा जाए तो। फिफ्टीन मिनट में यह एफईजी है 360 के अराउंड, 362 और 364 के अराउंड। नेचुरल गैस बुलिश क्यों हुआ है? न्यूज़ होगी शायद वेदर की, मोस्ट प्रॉब्ली। कल वो कैंडल देखोगे कंटिन्यूसली ओपन इक्वल टू लो बनाना स्टार्ट किया था मार्केट ने 9:15 से, उसके बाद रुका ही नहीं। दो 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 रेजिस्टेंस है, दो के दो होल्ड नहीं करी। रेजिस्टेंस एरिया पे भी मार्केट देखोगे तो ऐसा नहीं कि पहली बार आ रहा है, तीसरी बार आ रहा है इस लेवल पे। फर्स्ट टाइम यहाँ से जब सेलिंग आई थी इस पर्टिकुलर जोन से, तो मार्केट ने एक लो बनाया था 321 का। फिर दूसरी बार जब सेलिंग आई इसी लेवल से, मार्केट ने फिर एक और बहुत बड़ा लो बनाया था, तो उसके बाद ये थर्ड टाइम आ रहा है। लेट्स सी, थोड़ी बहुत सेलिंग तो आनी चाहिए क्योंकि यहाँ पर लोअर लो बना है। लॉजिकली देखा जाए तो फेवर सेलर्स एक्टिव होंगे थोड़ा बहुत। ज़्यादा देर कंसोलिडेशन नहीं करना चाहिए बस। ज़्यादा देर कंसोलिडेशन हुआ तो प्रॉब्लम हो जाएगी बायर्स के लिए, क्योंकि फिर दोनों साइड फाइट होती है। नीचे आएगा तो देखो यहाँ पर एक एफईजी है डाउन साइड पे नेचुरल गैस में, वहीं पर थोड़ा बहुत रुकना चाहिए। एफईजी ब्रेक हुआ तो और नीचे जाएगा। दिस इज एफईजी ओवर हेयर, डे लो के अराउंड देख पा रहे होगे। ये एक एफईजी रहेगा जहाँ पर प्राइस थोड़ा बहुत रुकना चाहिए। इसके नीचे ब्रेक हुआ तब थोड़ा सा और एक्सपेक्ट करेंगे कि नीचे गिरे, अदरवाइज नीचे डाउन साइड पे फिर टारगेट इतना ही रहेगा सेलिंग साइड पे। हाँ, इसके नीचे अगर कैंडल क्लोज जाती है तब फिर आप थोड़ा सा बड़ा टारगेट एक्सपेक्ट कर सकते हो। वैसे देखा जाए एग्जैक्ट सपोर्ट तो वो काफ़ी नीचे है 331, उसके बीच में प्राइस कहीं ना कहीं रुकने की कोशिश करना चाहिए। लेट्स सी, क्योंकि गैप अप गैप डाउन हुआ है तो कोई और सपोर्ट अगर बना है तो देख लेते हैं एक बार।
Willing to begin to engage in a serious process to determine how and how quickly and through what mechanism can an end be brought to this war. Whether we can ultimately reach that outcome will obviously depend on every side in this conflict's willingness to agree to certain things.
That is U.S. Secretary of State Marco Rubio speaking in Riyadh. Meantime, Rubio told European allies that the Trump administration would keep its sanctions on Russia in place until a deal to end war in Ukraine is reached. We got reaction from Jennifer Kavanaugh. She is senior fellow at Defense Priorities.
It makes sense that the United States and Russia would start by dealing with some of their bilateral issues. That does not mean that Ukraine should be excluded for all the rounds of talks, but certainly the United States and Russia have a long history of tense and difficult relationships. And there are a lot of bilateral issues that the two countries need to work out before they even sit down at the table with the other parties.
That is Jennifer Kavanaugh from Defense Priorities. The former president of Brazil, Jair Bolsonaro, has been charged with attempting a coup. Bolsonaro was charged with overseeing a vast scheme aimed at undermining Brazil's trust in the 2022 elections and then overturning the outcome when his allies could not find evidence of fraud. Now, Brazil's Attorney General has indicted Bolsonaro and 33 others for a series of crimes. The case will now go before Brazil's Supreme Court for a decision on whether to arrest Bolsonaro and have him face trial. Earlier today, a federal judge denied a request from 14 states for a temporary restraining order to block DOJ from accessing internal systems and from firing federal employees. Judge Tanya Chutkan said the states had not shown they would suffer imminent or irreparable harm while the case moves forward. We got reaction from Representative Debbie Wasserman Schultz, Democrat of Florida.
It takes 3 House Republicans to stop Elon Musk and his Doge bags from rummaging through millions of Americans' personal information when it comes to their IRS records, their Social Security numbers, their financial information, their most significant personal information.
That was Representative Debbie Wasserman Schultz of Florida. Meantime, U.S. Treasury Secretary Scott Bessent pushed back at criticism from Democrats about what DOJ workers are doing with U.S. payment systems. Here is Bessent speaking with Fox News anchor Brett Baer.
I think it's unfortunate that they're trying to kind of lampoon what Elon Musk and the Doge team's doing. I think it's very unfortunate they're trying to be fearmongers with the American people.
That is Treasury Secretary Scott Bessent there speaking earlier to Fox News. Bessent also said U.S. taxpayers do not need to worry about the security of their private data while the Doge team seeks to make the federal government more efficient. And he said only 2 people at the U.S. Treasury had read-only access to payment systems, and that means they don't have the ability to make any changes. And Bessent went on to say the Doge team has already identified an estimated $50 billion in savings. In the stock market today, there was a rally in chip makers, and it helped to drive the S&P 500 to a record high. More from Bloomberg's Charlie Pellet.
The S&P 500 index is now at 6129, topping its January record, but there are questions about NVIDIA's earnings next week and whether that could be a catalyst for further gains. Dan Suzuki is Deputy Chief Investment Officer at Richard Bernstein Advisors.
It's going to affect market sentiment for the broader tech space. So to that extent, I think that people are going to be watching it. It can drive a lot of near-term volatility.
Equities have been stuck in a narrow range amid uncertainties, including tariffs, inflation, and the geopolitical scenario. In New York, Charlie Pellet, Bloomberg Radio.
And that is news when you want it with Bloomberg News Now. I'm Doug Krisner, and this is Bloomberg.
Donald Trump has already changed the way we think about the U.S. economy. Now he's back in the White House, and Bloomberg's Trumponomics podcast is here to help. I'm Stephanie Flanders, head of government and economics at Bloomberg. Whatever the big question
Today,
of the week.
The latest from the ground in Saudi Arabia as talks begin between Russia and the US.
Ukraine is top of the agenda, but Europe feels sidelined. We look at what security guarantees they can offer to be part of any peace deal.
And a Delta plane flips upside down in Toronto, leaving several injured. It's Tuesday, February 18th. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes every weekday. I'm Tara Oakes in London.
And I'm Christopher Waljesper in Chicago.
US and Russian officials are meeting in Riyadh for the most significant talks to date between the two former Cold War foes on ending Moscow's war in Ukraine. The conversation could pave the way for a summit between US President Donald Trump and his Russian counterpart, Vladimir Putin. Humaira Pamuk is on the ground in Riyadh with the latest. Please note she spoke to us from the busy press room at the venue.
We understand from the US side that so far they want this largely to be focused on how to end the Ukraine war. That was one of the biggest promises of US President Donald Trump throughout the campaign. From the Russian side, we understand they're looking at this a little bit more broadly. We're hearing them describe these talks as a way to reset the wider American-Russian relationship and perhaps restore some trust between the two Cold War foes.
What's the atmosphere like there? It's a rare rainy day in Riyadh, right?
Yes, it is a rare rainy day. Journalists on both sides were very enthusiastic to get into the room fast and first so that everybody can get the best shot. We have seen the principals sitting across from each other in an ornate room on a table. At the top of the table, the American traveling press shouted questions. We asked if Washington was sidelining Ukraine. And we've also asked what kind of concessions Washington was going to ask of Moscow. Neither of those questions were answered. They ignored our questions and sat there with a rather stoic face.
Do you have any indication at this point how long you'll be waiting for any sort of announcement, any sort of readout from talks?
We understand that these talks will probably take the entire day. There's been reporting that the Americans want the Ukrainians to sign a piece of paper promising some of their minerals. And the Russians want to, as I said, make it a broader discussion. There are issues between Moscow and Washington about how their embassies operate in these respective capitals. I understand Russians are keen to tackle that issue. So there is a lot on the agenda, and that is going to take a full day to iron out all of those. This is almost a precursor. This is an opportunity to test out if there could be further talks between Americans and the Russians. And this is a test to see if there could be a bigger summit between President Donald Trump and Russian President Vladimir Putin.
While the US and Russia talk Ukraine, it's fair to say European leaders have been a little sidelined. They're trying to ease their way back into the conversation, and several have met for an emergency meeting on Ukraine in Paris. British Prime Minister Keir Starmer.
At stake is not just the future of Ukraine, it is an existential question for Europe as a whole.
Speaking after the talks.
But we Europeans will have to do more.
Our European Affairs editor Andrew Gray in Brussels has been looking into what European leaders can offer the negotiations.
So we're starting to see leaders talk a bit more about the possibility of some kind of military force to enforce the peace in Ukraine. And we're seeing some leaders who are saying they would be willing to put boots on the ground. The British Prime Minister Keir Starmer is one of those. France has indicated it would be open to that idea. Others saying too early or we can't do it. So the German Chancellor Olaf Scholz saying far too early talking about this, and Polish Prime Minister Donald Tusk saying Poland has no plans to do this. So you can see already some countries much more hesitant about this idea than others.
Do we know how the Kremlin might view European troops in Ukraine, even in a peacekeeping role?
Right, that's a big question. We don't know for sure. We certainly know from some of their statements in the past that obviously they regard NATO as a hostile force. The question becomes then, would they accept troops from NATO nations if they were not under a NATO umbrella, if you like? So we'll have to see whether that is something that could be negotiated and how it would work.
As you mentioned, Keir Starmer said that in the end, there needs to be a U.S. security component to this. But what might that look like?
There are some capabilities that only the Americans have, intelligence gathering, military transport, that kind of thing. But there would also be a political element. What the Europeans would want is some kind of assurance that if they ended up under attack, that the Americans somehow would have their backs, would come to their aid, because that provides then an additional deterrent, if you like, and further deter the Russians, because they would know if they were attacking European forces, in a sense, it would also be bringing America into the conflict.
We just had a crash on runway 23 here. April, Roger. Yeah, we're discussing.
Flights have resumed at Canada's Toronto Pearson Airport after a Delta Airlines regional flight flipped upside down while landing.
Walk around the aircraft there. Yeah, we've got it. The aircraft's there's upside down and burning.
Passenger Pete Carlson told CBC News about being on board during the incident.
Where all of a sudden everything just kind of went sideways. And then next thing I know is kind of a blink and I'm upside down, still strapped in.
Officials say 3 people were critically injured, along with 15 others who were taken to hospital for varying injuries.
But everyone seemed like they were there to make sure we helped each other and moved out of harm's way.
Toronto Pearson's fire chief, Todd Aitken, says they'll be reviewing the incident, but haven't yet determined a cause.
This is an active investigation. It's very early on. It's really important that we do not speculate.
Weather conditions at the time of the crash indicated gusting crosswinds and blowing snow, according to a flight tracking website. Toronto received more than 8 inches of snowfall in the days before the crash.
A U.S. judge says she hopes to rule by today in a lawsuit aiming to block Elon Musk's Doge team from accessing information systems at major government agencies. U.S. District Judge Tanya Chutkin in Washington, D.C. heard arguments on Monday, even though federal courts were closed for the President's Day holiday. The emergency request was made by 13 Democratic state attorneys general. They argued their states may not be able to carry out educational or other programs due to the Department of Government Efficiency's efforts to dismantle initiatives and direct mass firings.
Doctors have changed treatment for Pope Francis' respiratory tract infection to tackle a complex clinical situation, the Vatican says. The 88-year-old pontiff has been suffering from the infection for over a week and was admitted to Rome's Gemelli Hospital on Friday.
A bus crash in Bolivia has killed at least 31 people, according to local police. A police officer says the driver of the bus likely lost control of the vehicle, causing it to drop over a 2,000-foot precipice in the southwestern municipality of Yocala.
Australia's central bank has cut rates for the first time in more than 4 years. The Reserve Bank of Australia cut the cash rate by a quarter point to 4.1%. It's the first reduction since November 2020, when the pandemic saw rates slash to an all-time low of 0.1%. The RBA says it's still too early to declare victory over inflation and was cautious about the prospects of further easing. The rate cut will provide some relief to borrowers and comes as good news for Prime Minister Anthony Albanese, who's facing a tough election to be held no later than May 17th. And if you have a hankering after central bank content, check out our most recent episode of Reuters Econ World podcast. It's all about central bank decoupling and is available wherever you get your podcasts.
And for today's recommended read, a special report about how a Russian-linked propaganda campaign has been pushing to undercut Germany.
Or if somehow Russia is brought back into the Western world, and this whole idea of this multipolar world really comes to bed, that opens up a lot more international assets for investors to be looking at. You know, you can think about Chinese assets, for example. A lot of investors really shunned moving into China because of the political tensions between the U.S.
संदीप गुंजी गोल्ड का चार्ट इंक्लूड कर दो भाई टोटल 3 चार्ट रहेंगे आई थिंक इट विल बी फेच गुड नंबर ऑफ व्यूअर्स सब मैं लगाने को 3 चार्ट लगा दूं यहाँ पर बट उससे प्रॉब्लम आ जाएगी थोड़ी सी प्रॉब्लम क्या आएगी लाइक स्क्रीन बहुत ही नैरो हो जाएगी आप लोगों को चार्ट ही नहीं दिखेगा करने को तो यहाँ पर मेरे पास ऑप्शन है कि लाइक आई कैन मेड 4 चार्ट्स मैंने करके देखा हुआ है पहले तो बहुत ही नैरो हो जाता है चार्ट एक्चुअली फिर वो सपोर्ट रेजिस्टेंस प्रॉपर्ली दिखेंगे नहीं कहो तो एक रिमूव कर देते हैं नेचुरल गैस क्रूड ऑयल में से कोई एक रिमूव करके गोल्ड का चार्ट लगा देते हैं आई नो बहुत सारे लोग गोल्ड में भी ट्रेड करते हैं वोट कर लेते हैं व्हाट चार्ट्स डू यू वांट ऑन द स्क्रीन क्रूड ऑयल, नेचुरल गैस, क्रूड ऑयल, गोल्ड, गोल्ड, सिल्वर, या फिर ये सही है नेचुरल गैस और क्रूड ऑयल?
Putin by the end of the month. That comes after the top U.S. and Russian diplomats raised the possibility of broader cooperation. Joining us now is Alina Snegier, European University Institute Fellow. She does join us on the phone. Alina, a pleasure to have you on the program. We look forward to your analysis. This is important as we talk simply about whether or not this rehabilitation of Russia or these early signs of it are a good thing for Europe. Your thoughts?
Yeah, hi. Thank you for having me, and it's my pleasure. Well, to my mind, it's obviously a dangerous thing for Europe because Russia has actually all that it wanted and still wants. It has the war because Russia is intended to continue the war because Russian economy is completely reassembled reconstructed as a war economy now. And so Russia will continue the war because it also legitimizes the Russian leadership before Russian society. So it's a very strong consolidating factor. The other thing that Russia also is very keen and successful in negotiations, in useless and fruitless negotiations, like negotiations just for negotiations. And meantime, Russia continues the war and continues its aggressive and assertive foreign policy. And Russia wanted from the very beginning, Russia demanded that it's not about Ukraine, it's about the European security order and Russian influence in Europe. And now Russia has it on the table. Like Russia demanded that these negotiations are not with Ukraine, must not be with Ukraine, but with the United States. And Russia has it on the table already. So, and Europe is now at the place, some kind of the place of Ukraine when Russia says that Europe decides nothing, that Europe is not, doesn't have an agency, but there are two, actually three maybe, but right now two global actors who will decide the fate of Europe. So for Europe, there are no good news, unfortunately.
Yeah. I mean, Alina, I'm really wondering whether Europe is understanding Russia at this point. The whole idea of peacekeeping troops in Ukraine seems anathema to Vladimir Putin. The idea that you'd have NATO troops on the ground, as Starmer is suggesting, surely that is never going to fly with Vladimir Putin.
Yeah, of course. So about understand if Europe understands. I think right now they are a kind of awakening. So they are frightened. They probably do not understand it yet, or it's very hard indeed to accept this reality, even if you understand it. It's very hard to accept that your life is changing in a bad way, and you still hope that this normality would continue, but it wouldn't. So for Europe, it's indeed a very the last wake-up call. I mean, because it's not just about Russia, it's about the closest ally, which is not probably an ally anymore. We don't know yet the future actions of the real actions of Trump administrations, what they would do. Right now, they're just saying something, but the actions. So for Europe, it's indeed, and the salvation for Europe.
Alina. Alina Snegier, European University Institute Fellow. I'm sorry, we'll have to leave it there, but really great to get your analysis. We're heading towards the opening trade. That's next. This is Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and
York, I'm Menace Crenny.
And I'm Danny Berger. Let's set your agenda.
Live every weekday, only on Bloomberg. Context changes everything. The names that move markets are on Bloomberg.
Has your staff tried to block any payments here at Treasury?
We have not. Elon and I are completely aligned in terms of cutting waste and increasing accountability and transparency for the American people. I believe that this Doge program in my adult life is one of the most important audits of government or changes to government structure we have seen.
Nobody covers business like Bloomberg.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
The top names in tech are on Bloomberg.
OpenAI is not for sale. The OpenAI mission is not for sale. Elon tries all sorts of things. I wish he would just compete by building a better product, but I think there's been a lot of tactics. Many lawsuits, all sorts of other crazy stuff. Now this, I feel so confident about our research roadmap and also our product roadmap that we're just going to try to build the best technology we can and get it into people's hands. And I think that's mostly going pretty well.
Nobody covers technology like Bloomberg.
You up to the minute global financial news whenever and wherever it happens. I'm Jonathan Ferro.
And I'm Lisa Abramowitz in Davos, Switzerland, and this is Bloomberg.
Bloomberg Invest is back. Join me, Shonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
A few minutes ago until the opening trade, a little bit of an interesting session over in the U.S. because you did see a little bit of a rally. Perhaps this is where you are seeing the stage set for today's trading day. Let me walk you through it. This white line, of course, is the European session. Seeing some positivity. A lot of that was driven over in the DAX. A lot of that was driven, by the way, by that German defense sector. The peace dividend very much showing up right here and continuing over into the U.S. session, pairing some of those gains only for the chip sector to stage a final comeback. And that's what closed the states into the green in those final minutes. Now, this is crucial because how much of this is really a reflection of the geopolitics? How much of this ultimately is a earnings story on that side of the Atlantic? Let's take a quick look at the futures picture, because when I say cautious, I mean cautious. Underperformance in Eurostoxx 50, perhaps paring back some of the gains we've seen. But if there is one place, I'm going to call it marginal moves to keep an eye on, it's the CAC, and of course one hand on the DAX as well, Lizzie.
Yeah, looking at some of the individual stocks that we're watching as we head towards the open, Chrissy, we have had various bits of earnings this morning. HSBC reporting a profit beat, a $2 billion share buyback. BAE Systems beating estimates. Strong demand for weapons, as we've been discussing. Philips turning back to growth for the first time in 3 years because they've resolved mostly their issues on the sleep apnea devices. But then, of course, we factor in the tariff story, semis, autos and pharma in focus, and defense stocks, again, as the Ukraine talks keep going.
Certainly something we're going to be keeping a very, very close eye on. When you look at the futures picture, already you are seeing a little bit of caution. This is important simply because we know that the outperformance of the DAX has been driving the rally specifically in Europe. It's been a defense story. Some of it has also been a little bit of an earnings story. Lizzie, you pointed to that. That rotation is going to be crucial. The earnings picture is happening at the same time when we're seeing that moment in the sun show up in the currencies picture. It is, of course, the opening trade right here in Europe. It might take a little bit to get some of these pricing here, but right off the bat, slightly negative sentiment coming from the FTSE 100. Underperformance over in Spain as well. The IBEX there down about 0.2%. Remember, if we're talking about autos, pharma, semiconductors, remember what the second biggest manufacturing hub in Europe is. It's Germany and then it's Spain. So really perhaps reflected in the sentiment over in the Spanish index. Getting opening prices on the stock 600 as well. Flat at the moment. Of course, we're going to wait for a few minutes for some of that pricing to go through the French and the German indexes. But for now, sentiment already kind of flat, kind of cautious, not seeing the exuberance, Lizzie, that we've seen in the last couple of weeks or days.
Yes, indeed. We wait again for the DAX to open. But as we look at the sectoral picture, for now, we have about half of sectors in positive territory. Energy leading the gains this morning, higher 0.5%. Bottom of the basket is travel and leisure. Those shares down 0.5% as a sector this morning. We've been talking about the defence names, Critty. Rheinmetall eking out gains again, Leonardo too. But the likes of Thales actually in the red. So it's a mixed picture today when it comes to defence. That narrative a bit more mixed today. But we have had results, as I say, from HSBC. Those shares up 0.2% following what we saw over in Hong Kong. And we also have BAE Systems higher 0.3% off the back of their earnings. Glencore down 3.75%. Interesting that Glencore is actually looking at moving its primary listing over to London. And that would really be a blow, of course, wouldn't it, to the government, with Glencore having been on the London Stock Exchange since 2011. So another stock looking to move its listing out of London.
Absolutely. Those shares down about 4% as we speak. Right off the bat, we are seeing a reflection show up in some of those autos stocks as well. So that's where my focus is. Energy seems to be the outperformer. BP, Total, Shell, of course, taking the cake there, as you mentioned. Glencore on the backseat. Take a look at the movers, though, for the downside. Novo Nordisk and Mercedes-Benz. There's your tariff story. There's your tariff threat. Specifically, as we talk about the countdown to the German election, Novo Nordisk down about 1.4% there. Mercedes-Benz down about 0.9%. I'm also trying to get a clearer price on HSBC here, because we do know they're talking about a restructuring. We're talking about those cost cuts, those earnings coming out earlier as well, higher by about 0.1%.
Yeah, I just want to check in on the bond picture as well, because, of course, we did have that UK CPI number at 7 a.m. London time, and we actually have on the 10-year yield up a basis point at 4.57%, so barely any movement there. Up a basis point on the 2-year yield as well at 4.2%. So really not a lot to write home about, as I say, because the Bank of England perhaps more focused at this point on the growth story than the inflation story, even if you have seen increases at the headline core and services levels when it comes to UK inflation. Well, we can discuss more now with Koku Agbo-Blower, who is Global Head of Economics and Cross-Asset and Quant Research over at SocGen Corporate and Investment Banking. Really good to have you with us. Let's just start, though, with that inflation story here in the UK then. Do you agree that actually the focus has turned to growth from inflation? That seemed to be what analysts are saying off the back of that BOE meeting recently, cutting despite upping the inflation forecast.
Yeah, absolutely. I think it is quite a conundrum, because you need to solve the sort of inflation virus that really started with COVID. And this is sort of the original sin, so to speak, because government spent a huge amount of money to save human lives. And ultimately, we're paying the price of too much government debt, etc. But the whole point of raising interest rate is to slow down growth and slow down consumption so that inflation, in turn, can come back down. But then you have this dilemma of, if you have not enough growth, then tax receipts fall and debt and deficit increases. So I think it's clearly a focus on trying to move out of too much debt through growth, as opposed to having to raise taxes and cut spending. So it's clearly a balancing act, both from governments and central bank, to make sure inflation goes back to target and that we can lower interest rate over time, so that it doesn't sort of forces us into another stagflationary environment.
Yeah, I mean, our reporters have been talking about the Treasury asking non-protected government departments to cut, in real terms, budgets by 11%, maybe to fund that defence spending. When you hear about that, which some would call austerity, how does that make you feel about investing in the UK?
Well, it definitely increases uncertainty. I think the UK has, I mean, since Brexit, sort of a sticky labour market, because we have less migrant workers, and I think ultimately what matters is trying to increase productivity gains to make sure that we are able to offset this upward pressure we have on from the labour market side and sticky wages into a more sustainable inflation going forward. But listen, I think at the end of the day, there are a lot of issues that the government will have to deal with: aging population, climate change, and financing the energy transition, and, as you mentioned, defence. And this is at a time where debt to GDP have increased quite meaningfully globally across Europe. And this is where we'll have to find ways of perhaps changing the goalpost in the medium to long term.
Yeah, I mean, I've seen the only place that borrows at rates like the Bank of England's with this sort of growth is Italy. Really concerning that you underscore that.
Yeah, it's fascinating because at the same time we're talking about offsetting some of the public deficits with, on the one hand, more spending in Europe or perhaps spending cuts in the United States. That's what we're hearing, at least some of that offset by the likes of tariffs, for example. At least that's what's being floated by the American administration. Let's talk about that tariff story. Of course, Donald Trump overnight talking about tariffs in Europe, in autos, pharma, semiconductors. You're seeing a little bit show up of that in the likes of Mercedes-Benz and Novo Nordisk. Is that something the market should be more actively pricing? I'm just comparing this to the last time, the last administration. There was way more panic, and now there seems to be less so. How do you square that?
Well, that's a perfect point, because at the beginning of the year, even end of last year, you saw 10-year bond yield in the U.S. rising on the fear that we will have a widespread tariff across the board, and that would potentially trigger another inflation outbreak. And yet, if you look at the price action, bond yield, after rising roughly 50 basis points, have come down 40 to 60 basis points, simply because tariffs are not set in a permanent manner. So we saw that with Canada and Mexico. So the market is seeing tariff more as a negotiation tactic than it is a disruptive sort of measure for global trade. That being said, there's definitely a scenario where we could see, President Trump could definitely change his mind, but the market is less concerned on tariff today than it was at the beginning of the year. I think what matters more is how you reduce deficits, and I think, the government Trump plan and Scott Bessent mentioning the 3-3-3, so 3% deficit, 3% growth, and 3 million barrels of oil equivalent, is an interesting focus, because if you're able to bring down deficit, maybe tariff may not be needed as much as it is today, given the magnitude of the deficit.
Yeah, absolutely. I mean, I think speaking of the tariff, the numbers coming out of Mario Draghi's kind of FT column over the weekend has got everyone scratching their head more so than usual. I want to come back to that kind of tariff and inflationary piece as well, because they're interrelated. I love that your title is Global Head of Economics and Cross Asset, because again, I'm going back by the Trump playbook from his first administration, where higher bond prices equaled sell-off in equities, higher dollar equaled sell-off in equities. What is the cross asset correlation that moves the equity market?
Well, this is an important question, because when you look at multi-asset portfolio construction, the Achilles heel of every multi-asset portfolio is the equity bond correlation. And this is how the whole industry was able to thrive, because when bonds go up, equities go down, or vice versa. So bonds are supposedly the safe haven. And what we saw in 2022, 2023 is the lack of diversification, because equity and bonds fell at the same time. And today, with central banks starting to cut interest rates, so we had 100 basis point cuts by the Fed and the ECB last year, we're starting to see equity bond, the normal nature of equity bond correlation reasserting itself. So in general, when we have sell-off, after the DeepSeek event, for example, you saw the bond market rising and offsetting some of that the losses from your equity portfolio. So we think that going forward, this will reassert itself, because we're no longer fighting inflation as much as before, hence the previous question that we focused on, because central banks have moved away from aggressively fighting inflation to preserving growth as much as possible.
So this moment in the sun that Europe is having right now, you're seeing it in the currency market, you're seeing it in the equity market. Everyone's like, oh, Europe is performing. The fundamentals are looking strong. Apparently that dynamic has completely changed in the last 5 weeks or so. How sustainable is that? Is this just a temporary rotation? How are you thinking about it?
Well, this is where I think we should quote the great philosopher Mike Tyson, who once said, everyone has a plan until they get punched in the face. I think clearly the valuation gap between US and Europe has been, at extremes. And what you're seeing now is a sort of normalization of some of that dispersion. But we think it has legs. So we sort of see roughly 10-15% upside, because the valuation in Europe and also the positioning has been so low. So European banks are obviously outperforming. But I also want to mention one interesting phenomenon is China. So the Chinese shares are the best performing globally, up roughly 15%, a bit more than Europe. And this is since DeepSeek. So maybe we may have the Chinese magnificent seven, driving the Asian shares after having underperformed significantly over the past few years. So that's something to monitor. But for now, we see the valuation gap closing by roughly 20-30%. But we don't think it changes the fundamental issues of Europe in terms of profitability, productivity, etc.
That was a lot of grown-up fancy talk for saying European equities are about to get punched in the face, is what that sounds like.
Yeah, I mean, Markets Live have been talking about how defence stocks in particularly are having their moment in the sun, as you say, Kriti, but they're more overbought now than US tech in the AI and .com bubbles. You're kind of saying that, especially including for defence, traders just got to chill out a bit.
Well, I mean, if you look at investing, there are different dimensions to markets. So you can trade equity bonds, you can trade style, etc. And thematic baskets adds more diversification. So let's say new dimension to the way you can invest. So thematic basket around rebuild Ukraine or defense clearly have done very well. But I think it has a lot more leg because, you know, Europe needs to spend between 2 to 3% potentially of GDP for defense, according to NATO guidance or rules. We're talking hundreds of billions of dollars. So these are, in our calculation, roughly 10 to 15% revenue growth for the sector going forward. But I do agree that when you have themes like that, they can get overbought very quickly. But I think it is only the beginning, and we don't see this to be in overpriced territory just yet.
Okay.
One way to trade this, however, is not just simply buy the defense stocks, is to buy the whole supply chains, because it will be the manufacturer, but also the parts and equipment that will benefit.
You said the entire supply chain. That brings into focus the commodity sector. We're talking, and I'm having a little bit of AI deja vu here, in that you invest in the AI players, but you don't invest, and then you go on to invest in the grids, the chip makers, etc. Who is that second level or that second tier in the defense space? Because to me, it immediately sounds like ammunition factories, aluminum makers, steel makers. Is that the way to think about it?
Yeah, I think it's also probably in terms of logistics and sort of all the advisory, IT equipment, etc. That's how we design our baskets. But I think the commodity picture in of itself is going to be more relevant to the energy transition and climate change fight than the defense aspect of things in terms of usage and metal intensity, for example.
All right, fascinating conversation. Koku Agbubloa, Global Head of Economics, Cross-Asset and Quant Research over at SocGen Corporate and Investment Banking. Fascinating. Maybe we might just get a punch in the face to European stocks. We may also get a continued moment of sun. Fascinating to have that conversation. Just a quick check on how German markets are doing. Tom McKenzie is in Berlin. He's at the epicenter of where all of that price action may actually show up. Tom.
Yeah, and still in the sun, literally, with the sun out here in Berlin, but also on German stocks as well, because the DAX is up. Despite the tariff threats, the DAX is up about 0.2%. And let's remind ourselves that the German index is up about 15% year to date, outperforming substantially the S&P, of course, which has put in gains of a little over 4%. So the gains continue despite the tariff threat. Yes, autos are under pressure. We'll break it down in a second. But there's the top line read on the German market today, up 0.2%. We'll see how that evolves through the session. Let's flip the board and have a look at the auto sector then, because, of course, the majority of cars produced here in Germany are shipped overseas. It's a sector that accounts for about 780,000 jobs, about 5% of GDP. So when you're talking about tariffs of 25%, that is consequential, of course, for the German auto market. So you look at BMW right now, down 0.7%.
गाइस 1:30 हो चुका है, लंदन सेशन ओपन है। थोड़ा बहुत वॉलेटिलिटी एक्सपेक्ट कर सकते हैं। नेचुरल गैस ऊपर रेजिस्टेंस, नीचे सपोर्ट, ये फिलहाल एक रेंज है। इसे एक साइड पे ब्रेक कर दे तो फिर थोड़ा बड़ा मूव आएगा, नहीं तो ये दिस द रेंज फॉर नेचुरल गैस। क्रूड भी देखोगे, क्रूड का भी सेम ही चल रहा है। क्रूड ऑयल को अगर देखते हो यहाँ पर करंट एरिया पे 15 मिनट टाइम फ्रेम पे क्रूड ऑयल को देखोगे मॉर्निंग से थोड़ा सा कल एक बाइंग थी, यहाँ पर एक एफईजी था, याद होगा, यहाँ पर रुका था काफ़ी देर, मार्केट उसके ऊपर ही ओपन हुआ था, तो एक फाइनल टारगेट था वहाँ तक वो अचीव कर चुका है।
Sleep device for that.
मार्च का चार्ट है क्रूड ऑयल फ्यूचर का।
ETFs like no one else. ETF IQ, Mondays on Bloomberg.
"22 minutes into the cash trade here in Europe, and we are looking at HSBC shares down more than 1% after their earnings. They actually reported fourth quarter pre-tax profit of $2.3 billion, beating estimates, and a buyback. So what's going on? Let's speak to Bloomberg Intelligence's senior banks analyst, Tomasz Nerzel. Tomasz, what's going on here? Why aren't traders liking what they see when it comes to HSBC?
It's not about any bad news, or maybe it is more about lack of news. If you look at the HSBC share price rise since August last year, it's more than 30%. So market was expecting what the bank delivered today in terms of ROTE expectations. I think there's a better outlook for NII this year, which is positive, I think. But, because of this rally, market expected this. Most of the good news were already priced in the stock. So there's not about bad news. It's about maybe disappointment about the cost-saving program they delivered.
Talk us through then the buyback story, because I think it's fascinating. When you see cost savings like that, it's either loved by the market or hated by the market in terms of the direction it's going in. Buybacks are not being well received. That's usually a positive catalyst.
Yeah, well, look at HSBC. With today's announcement of $2 billion, they will deliver $11 billion for 2024. So it's a massive buybacks, and with the ROTE and the very strong CET1, they're gonna keep possibly buying back more shares in 2025. So the story is not changed. $2 billion, $3 billion. Well, the market was expecting this level. So as well, there's no negative surprise. It was sort of expected by the market. So $2 billion was the lower mark, and they delivered on this one.
Buy the rumor, sell the news, perhaps. Tomasz Nerzel joining us from Bloomberg Intelligence on the nitty-gritty of HSBC shares. Those are down about 1.4%. Not the only one. In good company, Glencore shares also slumping. The company posting a slide in their full-year profit. It's the world's biggest commodity trader, saying that the optimal location from its primary listing, quote, remains under study, feeling a little bit of speculation about what would be the most high-profile exit from the UK exchange to date. Keir Starmer's worst nightmare, I imagine. Let's bring in Mark Burton, who leads Bloomberg's metals and mining's coverage. All right, walk us through this. There's so much news flow around Glencore right now. What is top of mind for you?
Well, I think the debate around whether it should remain in London is obviously key. It would be more bad news for the London market. It hasn't been too specific about what would kind of drive a move to another exchange, but if you look at some of its kind of its core businesses, and you look at what some of its kind of competitors have been doing, you can kind of imagine why a shift might be under consideration. Glencore obviously has a massive coal business, and when it acquired a majority share of its rival Teck's coal business, it was originally planning to spin that out and list it in New York, where the kind of investor mood towards coal miners has kind of brightened since Trump's success in the elections. The coal market generally has been under a lot of pressure because prices have fallen, but that I think is one kind of possibility that a move to New York might look appealing. BHP obviously was kind of pressured into, or encouraged into, a move over to Sydney. Rio similarly has kind of faced pressure to do the same. Yeah. So there's a kind of a broader debate about whether there's just an irresolvable valuation gap in the London market relative to peer exchanges.
But of course, we've seen other miners reporting. BHP profits also slumping on the China weakness yesterday. Is this kind of much of what we're seeing among the miners, what we've seen from Glencore today?
Yeah, I think BHP's results told you everything you need to know about the weakening kind of iron ore outlook specifically. Glencore, by comparison, is kind of very light in iron ore, but all of its other key commodities, there's been a lot going on there, not all of it positive. The drop in coal prices is one drag. Cobalt, previously a major boon for Glencore, as formerly the world's top supplier. Yeah. Cobalt prices have absolutely collapsed, and that's a major drag as well. A few other bits and pieces not performing too well
either. All right, Mark Burton, who leads our Bloomberg Metals and Mining coverage, we thank you. As we look at Glencore shares down 4.3% off the back of that potential look to move elsewhere for its London listing. But coming up on the programme, Trump says he's preparing to impose tariffs of 25% on car imports. We'll discuss next. This is Bloomberg.
AI, how it has penetrated pretty much all sectors, including music. AI can write music, compose music. How do you see AI changing the landscape in fashion?
Yeah, AI definitely helped. When I did the jewelry, I used the AI, helping me to give some idea, but ultimately you still have to do a lot of it. It just give you a very superficial.
Years is that the accounting of these companies, especially the ones that are public outside of China, the numbers cannot be trusted. And we are in a world where I think that matters less and less, a world that is dominated by passive flows, where active investing is receding or has been receding for quite some time. So maybe that matters less. But then you layer on top of that the geopolitical risk. It's funny, this morning we had a meeting with a potential investor, and the meeting was going really well. But at one point they told us that they were pretty invested in China, they were excited about it, and they look at things like that based on geopolitical or assessments of governments, et cetera, and government policy. And at the very end, I made such a mistake from a sales perspective because they asked, well, what do you think of China? And, blah, 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 blah. I think Xi has been an absolute disaster for China. And literally the response was, well, okay, on that note, thanks for coming. So I think that, if you're willing to take the risk that you wake up one day and, China has gone to war to try to retake Taiwan or has barricaded the island, and that could lead to a kinetic war. If you're willing to take that risk, great. There's a price for everything. There's a price for that risk. I've been seeing Westerners like that for a couple decades, not really understanding what category of uninvestable China is in. They'll say the right things from time to time, lure the capital in, and I think that is part of the geopolitical strategy here, because China has always sought to co-opt opinion leaders and key people who are key economic and business leaders, always sought to co-opt them in the West, basically the Western elite. So the more that they can get everybody, levered to China, I think Xi is viewing this as a negotiating tactic should he ever make that move on Taiwan. So, I don't know. I think it's different.
But Xi has always talked about making that move on Taiwan, and he hasn't. And perhaps there is sense in that. And perhaps for investors, there's comfort to take from that. You talk about how it is uninvestable, but how do you view the rally we've seen so far? As a trader, as an investor, you're losing out on this rally.
Well, I don't know. I sleep a little better at night, I'd say.
You are hearing the right murmurings from Xi Jinping, on the back of the meeting he's had, for instance, with the tech leaders. Perhaps, he's realizing that he needs to do something differently.
Well, and it's not to say that this is unique to China, but, I lived there for a number of years, and, I was actually lied to a decent bit. So and just because China hasn't actually made the move, I mean, that has more to do with military readiness. Taking an island from a military perspective is incredibly difficult. Now, if he's going to make that move, the one thing that he's balancing is that the U.S. is obviously increasing our military readiness. And what happened in Ukraine with the firm resistance that the Ukrainians gave the Russians, I think really has given him pause. It'll be interesting to see what the Trump administration is going to do here vis-a-vis Russia and Ukraine, because if Ukrainian interests are reasonably well represented or protected in the, quote, peace talks, which, to be honest, there's not really a strong indication that they will be, but if they were, Ukraine is manufacturing, I think, about, 300,000 drones a month. So for the U.S. strategy to, the U.S. and Taiwanese strategy to defend the strait is to create a hellscape. So Ukraine actually has a lot to offer there from a military perspective. So that's something that, I think Xi Jinping is watching very closely.
Let's look closely at the rally we've seen so far, pretty much driven by the tech sector. And of course, the key players, Chinese version of the Mag 7, the BAT, your Baidu, your Alibaba, your Tencent. It's such a massive rally. We've seen an addition of more than, $1 trillion, I think, in terms of market cap. And that's driven pretty much by DeepSeek, right? Do you buy into that? Do you see that as more hype than anything else?
Well, I'm really not the person to ask about that, but I know some people who kind of know the space. And one of the more interesting takes I've had on this is it's from somebody who's a household name venture capital guy. And what he says is that, he's felt for a long time that large language models have almost hit a wall in terms of how much incremental development can be done. And so for him, DeepSeek, and the headline number of 5.8 million is a misstatement, and that was only for the whatever phase of development. I don't even know the term for it, but the overall cost was far more substantial. But he said this just shows that really with large language models, there's not a lot of additional, juice there in terms of what they can do. So, but that's not artificial general intelligence either. And that's where, that's really what both China and U.S., and when I say the U.S., it's the corporate sector, are going after.
So is it fair to deduce then, if you're not buying into that argument, we are not likely to see a broadening of the rally that we're seeing in China?
Oh, man. I mean...
you have strong views
again,
on this market.
So I think more as an investor as opposed to a trader. There's obviously momentum here behind these names. As somebody who's been a short seller for the past 15 years, you have to respect momentum. You have to respect sentiment. I wouldn't stand in front of this train at this point in time, but I'm not a trader, so I can't tell you that I think, whether I think in the next 1 to 2 months this continues or dissipates.
Let's talk about a stock you've been talking about. Presumably you know it really well, Tesla, right? What do you do with Tesla now that Musk has a role, in a way, in the U.S. government? When you take a look at how it's down at how Musk is positioning for the company. He says the future of the company lies in robots. That includes the robotaxi, which actually doesn't really look too appealing to me personally. How do you look at Tesla?
It's one thing to ask whether you bet on Elon Musk, but I would not bet against him. So I don't count the capital structure arbitrage trade as betting against him because it was pretty hedged. Maybe that's me being intellectually disingenuous, but I wouldn't bet against him. Now, in terms of the robotaxis, literally, I think he's been saying that Tesla's robotaxi capability is imminent. I think he's been saying that since 2016. So, take that with a grain of salt. Now, you do see in the U.S., Waymo is offering robotaxi services where I live in Austin. It won't drive on the freeways. My understanding is that Tesla's technology, because they won't use LiDAR, is not up to par with Waymo or even with Cruise. So, yeah, I'd be skeptical of that. I mean, do they find a pliable local or state government somewhere in the U.S. that says, okay, you can run this service here? Yeah, maybe, but I don't think it's, I mean, even Waymo is not ready for prime time if you're not driving on the freeway.
So, Carsten, would you be a buyer of Tesla then, or not?
Well, I'll check with the quantitative screen that we have and let you know.
But as it stands now, I mean, given where he is with Trump, given his relationship with Trump, given the chances of him being able to influence regulation, for instance, how does it play into your calculation?
Well, that's really a double-edged sword. I mean, one of the things that I was just, marveling over on the, 16.5-hour flight here was when you look at how Elon Musk has really changed his positioning politically over the years. He used to be a darling of the left, right? Pounding the table that, oh, we need to electrify the economy, we need electric cars, or else we're going to die as a civilization, we're killing ourselves with CO2 emissions, et cetera. I mean, politically, we know that he's totally switched poles. But, I mean, he's allied himself very closely with the, no, let's be realistic here about energy transition. If we're going to transition, we need natural gas, we need nuclear, and, electrification is a pipe dream. We don't have the battery technology. I mean, that's what the smarter people on the right, and I happen to agree with those views, that's what they're saying. So Elon Musk is now aligned with them. So my question is, with all the focus that he's putting, all the energy he's putting into Doge, which, by the way, ahead of the election, I had no idea whether this was really just him trying to be a provocateur or whether he was serious. He's serious. He's really focusing on this Doge, and I think he's actually doing some very interesting things there. But my question then is, in his head, has he admitted to himself that Tesla it's never going to be, that electric vehicles are a long, long way away from supplanting ICEs, and that it's really a niche product, and that it's, and has he convinced himself that, no, we shouldn't be pushing, running head first into trying to electrify the grid or trying to electrify our economy? I wonder if I suspect he has switched views on a macro level, but especially with how he thinks about Tesla. And that would be a little bit embarrassing for him to say publicly. So yeah, maybe just banging the table about, oh, AI and robo-taxis is how he tries to cover up that sentiment shift internally.
It's impossible to talk about the markets without talking about Trump and Trump's tariffs. In fact, we've been so consumed by Trump and his tariffs. How are you looking at the first moves he's made so far? When it comes to China, less than anticipated. Could have been 60, he went 10. But he went full on with Canada and Mexico at 25%. And that's giving some relief, I guess, to markets or investors who are looking at putting money in China, for instance. I mean, how does it shape your calculations when it comes to where you put your money?
The other issue that Trump has, if he's going to really go crazy with tariffs, is inflation. That's a big part of how he won the election. Now, he does have smart people around him. Scott Bessent, Treasury Secretary. I think Scott understands that you can't just go and jack up or impose tariffs on all imports and without causing inflation and diminution in the standard of living of Americans. So, but what's he going to do and when? And just because he hasn't gone crazy with China doesn't mean that he won't down the line. I mean, it's kind of funny because he's using. I wonder if he might at some point discredit himself with at least his tariff threats. I mean, Colombia didn't let a plane land, right? So he gets on Twitter like, oh, we're going to hit Colombia with these tariffs. Okay, we'll let the plane land. But I mean, how many times can he get to do that? He humiliated Trudeau with the tariff threat. I kind of wonder if the game there, and also with the EU and the tariff threats, I do think that he's trying to push the political left out of power. And I suspect that's because he views that if we get more right-wing governments in the West, we're going to form a better, stronger coalition against China.
one more issue as well. With Trump, there's been a pullback on ESG and diversity. And we've seen a lot of other companies also doing the same, You've always thought about how green companies are, I think in your words, grifters. How do you look at investment in green companies now?
So what I started saying, I began getting questions about ESG, I think it was 2018. And, so I don't know if I was doing a TV hit when I got the first one or if it was print, but when I was asked, what do you think of ESG investing? I said, well, you know what? I think it's the paper straw of investing. Now, it's ironic because I come here and I only get paper straws, and I have to tell you how much I loathe paper straws. I mean, they don't work. They are inane. But what did I mean by that? Okay, my analogy was this, because one of the banes of my existence, my daily existence at that time was I would go to Pete's Coffee, I would get a big plastic cup with a plastic lid, and they'd stick a paper straw in it that made my drink taste horrible. And so I looked at this, and I'm like, what are we solving with this paper straw? Like, look at the quantity of plastic in my hands that I'm going to dump into a bin somewhere. We're not solving anything. It's purely performative. Well, that's actually what ESG investing was, and that's what ESG investing still is. It's performative. It's easily gamed.
Tom, we were just... What can your part... You're in Hong Kong really for quite a short time, but talk to us about the message that you're bringing to the conference.
Yeah, no, we are really excited to be here. I think it's important after last year and seeing, that there is a lot of enthusiasm in crypto, and so it's really good to see how much people are here, and we are excited to come after our earnings. We saw that crypto volume have increased 400%, and so for us it's been a good year, and we want to capitalize on it.
Yeah, we can get to the earnings in just a moment, but in terms of capitalizing on crypto flows in particular, this is really a US story, and it's a US regulation story as well. So what are you anticipating in terms of that roadmap for 2025?
I think for us, what we are focusing on is really building for the future. We know that we can work with regulator. Robinhood is already regulated by FINRA, by the SEC on the brokerage. On crypto, we are regulated by the New York DFS. And so we know that we can work with them. So we are excited to see that the new administration want to work with crypto companies. They created this task force as well on the crypto side. And so we think that, with them, we can actually build a bill that will help everyone to offer crypto to, safe way to customers.
What does that look like exactly? What is the work that you're doing with the task force, for instance?
I think right now, we're waiting for them to set up the task force and set up draft, and we will comment on the draft. But what we think is exciting is that, there is a clear will for them to work with industry. We saw a lot of funders coming back to the US, for example, and that I think is a good message because, in the past year, we were actually seeing the opposite, where people were leaving the US to build crypto in Asia or in Europe. So right now we're really excited to be able to build on top of that.
And are you making any sort of business changes in anticipation of that? For instance, new teams maybe, new headcount? We've always been really focusing on building a product that works with the volume in the market. So we actually launched Robinhood Crypto in 2018 when it was really the winter. And we've been able to always kind of develop more features for when it's time for people to actually reuse it. But since the administration changed, we actually added more crypto. We added 7 assets, and we are planning on doing more of this because for us, I think it's really important to offer what people are asking for. When you think about what people are asking for right now, of course, a lot of the action has been driven by meme coins. Yeah. What's your policy on how you add meme coins?
Yeah, so we have a listing framework and a listing committee that meets and kind of review a lot of points for every asset. So, from compliance, operations, security, on the engineering side as well. But at the end of the day, a lot of it is coming from customer demand. And, we've seen a lot of customer demand for some of these points. And we're trying to make sure that we can offer what they're asking for. At the same time, we also offer a product called Robinhood Wallet, which is a self-custody wallet where people can have access to a lot more of the assets. And so, for us, the goal is going to be to offer like a fewer list of coins on the platform, and it will be a bit more limited. But if you really want to access anything on Web3, you can use a Robinhood Wallet for that.
It's a fine line, I guess, so sometimes between offering what customers want and also offering tokens that offer some sort of value or utility. So a Trump token, for instance, you added in the last couple of weeks, you said, and it's sort of unclear exactly how that would be used or what its purpose is. So how do you weigh that up?
Yeah, I think it's a combination. I think in some ways the meme coins have been also a very good introduction to crypto for a lot of people. We've seen people, starting with a bit of Doge or a bit of Trump, and then getting more interested in learning about Bitcoin or transferring to a wallet and doing more things on Web3. And so I think for us, it's important as a platform that we are agnostic about the assets. Like we don't want to make decisions for the customer. But if customers are asking us for something and we feel like we have a way to offer it safely, we'll do it.
And I guess as well, you've got, as you mentioned, going back to those earnings, because you did have over $1 billion in revenue for the first time ever, or at least as a public company. So what is the plan to grow the business? Because again, that is quite an aggressive expansion policy or strategy as well.
Yeah, I mean, Q4 was very good for the crypto business, but I think, to your point, it was a combination of all the businesses at Robinhood, and I think that's the strength of the company, is that we don't rely on just one business line. But at the end of the day, I think we have a lot of advantages compared to some of our competitors. Being able to be one app for all type of asset class. You can have a retirement account, a brokerage account, and also crypto on one platform. It's really important.
And what about in terms of trying to grow the market in different areas as well? What's your plan for different geographies?
Yeah, so we have the international expansion. We launched the brokerage in the UK last year. We also launched a crypto offering in some countries in the EU, and we also announced the acquisition of the company called Bitstamp that has licenses in many countries. So for us, I think it's going to be part of it. We want to grow the business internationally on top of all the new business line that we are developing.
Tokenization is an area that we obviously have heard a lot about. A lot of people have discussed it. We still haven't seen any projects maybe getting a lot of demand just yet, but what's your outlook for that?
Well, we actually think that Robinhood is at the perfect crosspath between traditional finance and crypto, so I think that's something where we can do a lot to help bring tokenization to life. But I actually think that, there has been use case of tokenization. The stablecoin, for example, is a perfect example of tokenizing the US dollar, and we've seen a lot of adoption, not just in the US, but also in other countries that want to have exposure to the dollar, or also from institutions like us to use stablecoin to actually help move assets on the platform a lot faster. So I think we will see a lot more of that, and I think Robinhood is very well placed to have a play here.
Predictive markets as well, it's not something exactly in your purview, but still this is an area where Robinhood has faced some issues in the past. I'm thinking here about the rollout with the Super Bowl, for instance. What exactly happened there, and what's the plan moving forward?
Yeah, I think we
राजेश प्रभाकरण जी, नेचुरल गैस सर क्यों ऊपर गया अचानक? एक्सपायरी से पहले नीचे आ सकता है क्या? अभी देखो, नीचे इसके पास सपोर्ट है अच्छा खासा. नीचे जाने के लिए एटलीस्ट प्राइस को वापस ब्रेक डाउन करना पड़ जाएगा नेचुरल गैस में. 338 के नीचे, 338 के नीचे कहीं कैंडल क्लोज होती है, फिर ब्रेक डाउन जिसे हम कहते हैं वो होता है, तब एक पॉसिबिलिटी बन सकती है. अदरवाइज तो ये फिलहाल तो सुपर बुलिश ही है. तो फिर आपको अराउंड वही एक सपोर्ट जोन मिलेगा नीचे डाउन साइड पे. तो अभी अगर और नीचे आना है तो ब्रेक डाउन करना पड़ेगा नीचे डाउन साइड पे 338 का. ठीक है, जो एक गैप है कह सकते हो, ये गैप फिल होना चाहिए इसको, अगर थोड़ा सा और अगर आप करेक्ट करना चाहो। कुछ ऐसा एरिया आप समझ सकते हो। 338 के नीचे क्लोजिंग जरूरी हो जाएगी, तब हो सकता है थोड़ा सा बेरिस हो जाए, अदरवाइज अभी के लिए तो बुलिश ही है कम्प्लीटली। बाकी ऊपर कोई ऐसा मेजर रेजिस्टेंस बचा नहीं है, नीचे सपोर्ट लेगा तो लेगा, करंट एरिया पे थोड़ा बहुत रुक सकता है, अदरवाइज जब तक कोई और नया रेजिस्टेंस नहीं बनता लगता नहीं है। नेचुरल गैस फिलहाल के लिए बुलिश ही है, अनटिल अनलेस 338 के नीचे चला नहीं जाता। थोड़ा सा अगर नीचे आ जाए तो बाइंग अच्छी हो सकती है इसमें। यहाँ से एक्सपेक्टेड है कि थोड़ा लोअर एंड के आसपास आ जाए, तो यहाँ ही कुछ जितना छोटा एसएल मिले उसके साथ एक बाइंग कर लें लाइक दिस। थोड़ा बहुत रुक रहा है, लेट्स सी कितने देर और होल्ड करता है इस लेवल को। चलो गाइस, डोंट फॉरगेट टू लाइक दिस स्ट्रीम। जिन लोगों ने अभी तक लाइक नहीं किया फटाफट से लाइक कर सकते हैं। अगर ये निकलता है सपोर्ट लेके नेचुरल गैस, तो फिर ऊपर ही जाना चाहिए उस केस में। ट्वेंटी 75 वीकली रेजिस्टेंस है, सो वहीं पर रुकेगा फिर उस केस में। ऊपर एक एफईजी बनाया वहां तक।
If we think about what's possible in terms of what the Trump administration facilitates for what is really, in a lot of ways, a national treasure that has been wavering for a long time now, what could they do?
Well, this is a great and open question right now. And really, for the past couple of years, the U.S. chip making, domestic chip making capacity and capability has been a focus of policymakers. The Biden administration pushed through the Chips and Science Act to help give companies like Intel a boost to do more production of advanced chips here in the U.S. And for Intel, at least, that effort has not really borne the kind of fruit that officials here had hoped for. And really, by the end of the Biden administration, they were also thinking about, well, what can we do about it? The money that we're promising to Intel is not yielding the kind of results in terms of new outside customers for the company and the investments that the company has to make to be able to regain that kind of preeminence as an iconic maker of semiconductors. It's really struggled there, too. So one of the options that has surfaced, and the Trump administration has floated this at least to TSMC, is that TSMC would take a partial stake in the company's manufacturing operations, especially here in the U.S., but perhaps also abroad. It's very early stages. The details remain unclear, and it's not even clear that President Donald Trump would even go along with it. But the idea of TSMC doing something on the manufacturing side would open the door perhaps for Broadcom to perhaps make a play for the chip design business that Intel also has. So lots of movement. Investors have been looking for a solution on the Intel front, and this could be it coming from Washington.
Southeast Asia's IPO pipeline is expected to improve.
Good morning. We're half an hour from the open in Hong Kong, Shenzhen and Shanghai. You're watching The China Show. I'm Rebecca Chin-Wilkins with David Inglis.
Good morning. Let's get to your top stories today. Cash rate. They're also looking at a higher inflation forecast for the year. So they've taken their forecast from 2.5% up to 2.7%. So again, just to reiterate, of course, this easing cycle is well into its cycle here. So 50 basis points again, following similar moves in the past. The RBNZ also sees scope for low rates through the course of this year so far, as the economic outlook, they say, has remained subdued. Kiwi dollar on your screens, on offer, 0.25%. Top of the next hour, of course, will be press briefing. More details on that once, of course, we do hear more coming out of the RBNZ. Right. And for more on the story right now and just more context, of course, you can turn to your Bloomberg TLIV Go to get commentary analysis on all these breaking lines coming through as I speak. Right. Takes us straight into the market action right now, and we are looking at mostly declines across equity markets. We did hit, of course, another record on Wall Street. We are looking at U.S. futures on the way up. There's an Intel story to tell you about, maybe mechanically, that did lift sentiment somewhat. We're looking at declines actually just about on the ASX and Taiwan coming online. It's really where you are in Korea, and maybe to a lesser extent, we are roughly unchanged over in Japan. That's keeping things honest and at least respectable as far as the Asia-Pacific benchmark is concerned. As you flip the boards and have a look at the overnight session in the U.S. on the Chinese equity front, just to mention as well, more lines coming through out of the RBNZ, that the committee, it was a consensus on the policy decision. Global uncertainty is seen weighing on business investment. We'll talk more about the tariffs in just a moment. 1.3% decline overnight. Baidu, of course, will be in focus this hour amidst the decline in the revenue from last year. Very quickly, A50 futures last we checked were down about 1/3 of 1% on both contracts to that extent. There we go. And 1.7%, that's a little bit of downside after 5 straight days of upside on Chinese 10-year yields. Very, very quickly, a ton of money coming through the Stock Connect yesterday, and this is certainly one metric we'll watch again very closely today. So the biggest amount, net amount in 4 years coming through the Stock Connect from mainland into Hong Kong, 22 billion, that's Hong Kong dollars across the Stock Connect into the close of the session on Tuesday. We'll watch for this, of course, very closely today, Rebecca.
Yeah, absolutely. And to your point there, of course, that premium between Hong Kong shares and Chinese shares tightening, we're watching to see whether there's any kind of correction there as well, potentially. Elsewhere on the agenda, we're looking at home prices. We have January prices. This is MBS data coming through today. Big question mark is whether or not we finally start to see signs of stabilization in the property market. And it's really the sort of bulk and boost that we saw through the Lunar New Year that we're watching for when it comes to January. We'll probably be eyeing month on month there, Dave. But just to bear in mind that actually if you want to be comparing it to what we saw last Spring Festival, you really should be looking at February last year to see the kind of difference in boost in sentiment and so on. Anecdotally, it was quite a busy period over that break. The other property news, actually, just to keep an eye on today, is Sino-Ocean. We have this really important Hong Kong ruling, first of its kind case where a restructuring could go ahead without the backing from a major bondholder group. It could set a very, very important precedent for all the other Chinese property restructurings that were coming through. So keep an eye on that, as well as, of course, a host of earnings coming through, and we are still in the data window for the MLF to come through.
Yep, more on that in a moment. We're looking at the tariff story again with President Trump really talking slightly more detail now on what to expect on April the 2nd, I believe is the date he just floated there. So be prepared. They are prepared to impose tariffs on things like cars, chips, and some healthcare imports around 25%. Let's bring in Derek Wallbank with us right now, our senior editor, on the details here. Yeah, Derek, April 2nd, I believe, is the date that the president has put out there. What else do we know?
Well, look, David, this is a pretty broad-reaching effort. Trump has signposted for a while that he wanted to do a significant amount of tariffs on auto imports, on pharma imports, on chip imports. So that's not necessarily the big development. The development here is a little bit of meat on the bones of that, right? 25% tariff is the idea here. Details to come. We've already started hearing about how this is going to be maybe some sort of gradual thing in there that people may need time to be able to adjust their plans. Remember, we've talked before about how these tariffs are not just trying to get manufacturing back in the United States, but are also sort of start points for negotiation. So what kind of things are these going to cover? Are these going to cover, let's say, all chips or just maybe the best ones? Or, all of that is sort of remains to be seen. Now, April is shaping up as a bit of a big moment for tariffs. We are expecting to get a little bit more then as well when you're talking about some of these reciprocal tariffs that Trump has been talking about before that could also include non-tariff barriers. So there really is a lot of wait and see coming in here, but it is coming into some clarity for markets.
Derek, we also had details emerging over this meeting between US and Russian officials. It's probably not understating to say it's caused a real degree of sort of existential angst in European capitals, as well as, of course, we've had a response from Ukraine as well. Just tell us what we know so far about that meeting and any reactions that we're getting to it.
Yeah, the big thing that came out of me from that, Rebecca, was the idea that the U.S. really wants to get onto a path toward normalization of relations with Russia. I think we have spent a lot of time thinking in the build-up to this about the Ukraine-Russia aspect of this, but there is also the other side of the U.S. and Russia's relationships with each other, right? That has been heavily frozen. You're talking sanctions on top officials in both directions. Even things as simple as, like, are airlines allowed to fly over airspace? There's a lot of different aspects to this. And that thaw was, I think, one of the big things that we saw coming out of this, or at least the intention toward thawing. Ukraine has made no surprise about its disappointment in not being included in these talks. I noted that Trump had a little bit of a reaction to Zelensky's disappointment at not being included in there, suggesting that he had 3 years to figure out how to solve this. You can imagine the reaction that has gotten in European capitals. I'm also noting that we've talked a bit about Europe wants to have a seat at the table and have a bigger play there. We've seen Emmanuel Macron sort of step into the breach to be a leader on that, convening European heads of government, as well as trying to have talks with Trump and Zelensky as well to kind of facilitate more of the connection that Europe says they are not getting enough of.
Bloomberg senior editor Derek Warbank there for us. And sticking with this theme on tariffs, the U.S. Senate has confirmed the billionaire Cantor Fitzgerald CEO Howard Lutnick as President Trump's Commerce Secretary. He was approved with a vote of 51 to 45. Lutnick will now lead the administration's tariff and trade agenda. He also oversees a department with responsibilities ranging from fisheries management to export controls.
Right. Let's have a look at some earnings right now here. And one stock in focus will be Baidu. ADR's down about 78% overnight. The company reported this drop in top line, although a smaller one if you compare that to what the street was expecting. Let's bring in Min Min Lo, our China correspondent, to take us through the takeaways here from the earnings report.
Yeah, I think the takeaway here is that Baidu's core revenue is really still dragged down by the fall in ad sales. Its core revenue was up 1% year-on-year, but ad sales had fallen by 7% year-on-year. And I guess that's a reflection of the broader economy, the consumption slump, but also Baidu's ability to compete with some of these newer, younger players, the social media apps like Xiaohongshu and Douyin that is snatching eyeballs away from Baidu's platform. And you look at its AI ventures, it's also facing competition from the likes of DeepSeek that is built on an open source model, and Baidu has been pouring huge sums of money to try to push out its own proprietary technology, and it's getting squeezed there. It recently announced that it was going to make the Ernie chatbot free, refunding that $8 a month subscription fee. So also facing problems around monetization of some of these technologies, and the only thing that was bolstering the numbers in the last quarter was the demand for cloud computing. So its cloud revenue was up 26%. This is driven by that increase in development activities, services provided to startups and developers who are chasing after computing power. But bear in mind, this is a segment that has very low margins and it may not be enough to offset that weakness in ad revenue. But Baidu is saying it still will focus on doubling down on developing or discovering that killer AI app, which they say has not yet emerged in the current landscape.
I mean, Dave and I were chatting yesterday about the tech symposium. It's been largely taken as a sort of positive signal for the private sector, but another way of interpreting is also this call to arms from Beijing for Chinese companies to kind of get in line. And we now have had these lines, in fact, from Xiaomi saying that Chinese companies as a whole may unite better when encountering external pressures. I mean, just tell us a little bit about what this means and why we're seeing statements like this coming from Chinese firms.
Yeah, I mean, it's interesting. This was at the sidelines of the symposium yesterday, and some of these entrepreneurs were giving interviews to state-affiliated media. So this was a post that was posted on Chinese social media account Weibo on an account affiliated to state TV. And Lei Jun is there saying that, they will be able to better counter external pressures if they come together. You have other tech entrepreneurs saying that this is a message from the government for them to overcome all difficulties. And it's also a sort of morale booster from the government, a pat on the back. The government saying, keep doing what you do, keep showing us the innovations, the breakthroughs, because the private sector contributes to more than half of tax revenue and more than 60% of economic output. And really, they have been the one that have been at the forefront of all of these breakthroughs when it comes to, DeepSeek and the like. And it comes amid this tech rivalry with the United States, the export restrictions, the chips restrictions, and I guess it's, as you said, that call to arms, calling these entrepreneurs to get in line with the government's vision for the year to push forward with their breakthroughs in the new productive forces.
Min Min, Thank you so much. Min Lo there, our China correspondent. One stock to watch going into the open today. I've not really seen much on pricing right now. That could change, of course, these next few minutes or so. Right. Just to recap, that rate decision at the top of this hour, the RBNZ cutting by 50. Again, they do see scope for more moving forward. And just, of course, keep in mind that we have a press briefing, a briefing out of the central bank, 3 p.m. out of Wellington. So that's in about, well, that's a long version of saying that's going to be in 45 minutes from now. Keep an eye on that. Lots more ahead here on The China Show. Good morning.
Good morning. You are watching The China Show. And here in Hong Kong, the annual Consensus event is getting underway, bringing together top companies in blockchain, digital assets and Web3. Let's cross over to the conference where our tech reporter, Annabelle Jewellers, is standing by with our next guest.
Thanks, Rebecca. Yeah, well, this might be sort of the magic of live TV behind us because it just had a dragon dance that started here. But we will bring in our next guest. This is the Wintermute CEO, Yevgeny Gavoy, joining us this morning. And thanks, and I hope you can hear me over the sound of this as well. But we were just talking before there in the ad break about the market moves that we're seeing in crypto. And you were saying, and you've made the point on X as well, that you don't really feel like crypto markets are pricing in the SEC reform in the US just yet, but what are you expecting then to happen?
Yeah, I think the crypto native crowds, and first of all, thanks for having me, despite all the noise. I think the crypto natives are not necessarily pricing in like all the regulatory improvements that are coming up. Like there is an overall over focus on meme coin mania, and all the recent news with Milei, for example, and like SEC, CFTC has been such a big drag, for a lot of better word, on the industry before, and now it's definitely getting better.
So, what do you see as being the exact regulatory roadmap? What would the steps be that you would expect in, say, 2025?
I think it will go in multiple steps. So to start with, we do expect a lot of better lawsuits, a lot of negative things to be dropped, primarily against the token protocols, basically tokens being securities. Like we've seen some ideas being floated from SEC side, for example, on that side. More in the long term, it's all about regulation. And what's really interesting about regulation is basically whatever US comes up with, whatever new regulations US come up with, quite likely will be copied, quite likely will be replicated by other countries throughout the world. So if that regulation is going to be conductive and useful for crypto businesses, I think that will be conductive and useful not just in the US, but like in Europe, for example, in Hong Kong, and well, everywhere.
And so how is a business, how is Wintermute preparing then in anticipation of the regulatory changes in the US?
Yeah, generally we're doing quite good. We had a very successful last year, and it's all about basically expanding even more. Like part of it always has been on Asia side, but now we have a new added focus on US. We are looking to expand in the US with our OTC offering. We are looking to expand in the US with derivatives offering as well on the OTC side. And yes, there's definitely a sense of thinking how to expand properly in headcount. So we are looking to open a New York office, for example, as well sometime this year.
So a New York office, you want to expand the product offering, and you're looking to add headcount. What's the size of the headcount that you're expecting exactly?
I think we initially thinking about like 5-10 people. Like we traditionally prided ourselves on being quite nimble. We are currently just 130 people, and which is pretty small given like all the things that we are doing in crypto. And I think it's going to be 5-10 people, primarily on business development sides, a bit on the venture side, a bit of operational side, no trading yet.
And so just to clarify, when exactly are you looking to open that office in New York?
We're currently doing the homework on,
okay. So you are going to the US soon. I mean, are you looking for sites, for instance? Where are you?
We just started, yeah. I was in New York literally a few weeks ago.
Okay, and so against that backdrop, the other thing that we can also sort of talk about is what we're seeing in meme coin activity right now. I mean, we know that Javier Milei from Argentina. Of course, the leader there is really wrapped up in this Libra controversy. But what do you make of all of the meme coin activity generally?
Yeah, I think it's kind of a big drag on crypto at the moment, just because of the sheer amount of new tokens being released into the space, and they basically take up liquidity from, well, existing tokens for sure. Like we've seen this effect probably the most pronounced with Trump launch. When Trump token launched, well, it went up to pretty significant market cap, but it basically saw a massive sell-off and pretty much all meme coins on Solana because of that. And that's kind of the effect that we see with a lot of other meme coins and generally in the space, that it's not a zero-sum game. It's if a new token gets launched, it basically drains liquidity from the existing ones. And that's basically the main challenge. And it makes it really hard to, well, grow the whole space in general, because it's just very much zero-sum negative game for in a lot of places.
So how does it impact a business like Wintermute then, directly or indirectly?
Well, our core strategy is to be where the volume is. So meme coins have been active for like almost a year now. So we have been a very active participant on liquidity provision side, on the prop trading sides, even on OTC sides. So we have not been left behind with this. But that being said, yeah, we have a lot of parallel businesses very successful in crypto as well.
I want to ask about something else that you've responded to of late, and that is these market narratives around market makers and the impact that you can have on trading activity. And you've spoken about maybe some misconceptions, but can you explain that in a little bit more detail?
Yeah, I think it's kind of related to what I said earlier. Basically, there is a pretty big drag on prices from basically on all the existing tokens from all the new tokens being launched. And basically what happens in life cycle of a typical meme coin is it basically gets to a certain valuation. At that point, the team behind it starts talking to market makers, they start talking to exchanges like Binance. And basically once they get listed on Binance, once they onboard Wintermute, for example, as LP, that's typically when a lot of people start selling this token to basically buy into something very new. And so there is a sort of like false correlation, correlation causation problem with people thinking, okay, token is listed on Binance and this goes going down, that must be like Binance doing something to it, or it must be Wintermute doing something to it, without them understanding that's basically almost the conclusion of the life cycle of the meme coin in a lot of ways. So they need to, so it's not about that, it's just about, the meme coin game in general.
All right, Jenny, thanks so much for your time. That was Jenny Gavoy there, the Wintermute CEO. And David, the lion dance has finally moved on just as we end this interview as well.
Yeah, what a good way to bookend that interview. Bell, thank you so much. They mentioned Binance, so why don't we ask them? Ask Binance, of course, joining Bell there later on, as well as Robinhood. So yeah, lots more good conversations coming up out of Consensus throughout the course of this morning. Right, from Binance, we're going into the open today, and we're looking at Baidu. Down in your pre-markets, markets are down this Wednesday. Plenty more ahead. This is Bloomberg. Right, welcome back. You're watching the China Show. I have 45 seconds to do this preview of January home prices. Well, I now have 40 seconds because I wasted time on that. Prices, in terms of the number of cities, we're seeing a price pickup month on month. In December, actually the most in about a year and a half, 23 cities. The other thing we want to point out is in terms of price itself, the next chart's going to show you that as well. The smallest contraction year on year, going back, of course, to early 2023, when we did see, of course, that initial salvo to support the property market. Of course, it's not apples to apples because this is January data that's coming out. The Lunar New Year holiday was in Feb of last year, so just keep that in mind when the numbers break in the next few minutes or so. This is the China Show.
Good morning. Welcome back. You're watching The China Show. We are counting down to the open of markets, about 30 seconds or so away from that. It does look like we are seeing a little bit of weakness coming through. Of course, we've opened the day with, fresh news and a little bit of clarity over these potential sort of extended tariffs coming in from the US when it comes to pharma, when it comes to autos. And we are also watching for home prices, Dave.
Yep, should be out. This is the January set of numbers. Should be out in about 10 seconds or so along the open, so we'll break the numbers to you once they cross the Bloomberg terminal. Broadly speaking, of course, equity markets across the region, with the exception of Korea, downdraft we're seeing across most names right now. As you can see, the mainland's down. We're down here in Hong Kong about 0.1%. There we go. Okay, while we wait for the numbers to come through, just to tell you about the bond rally has really hit somewhat of a speed bump in China, and might that have to do with the fact that some people are reallocating away from a bond market that's really done very, very well to an equity market that has done very, very well only recently. So we'll see whether that dynamic continues, and certainly the backdrop economically, when you look at the home prices, which should be out soon, is really one where there is still a lack of price pressures that might actually provide a floor underneath this pullback in bond prices. Bottom of your screens are some of the big A shares listed there. Nothing much to tell you about as far as that's concerned. We did have earnings, of course, coming out of Baidu yesterday. That's the next board that's coming up, the Hong Kong Open. HSBC, IMAX China, Hang Seng Bank are those set to report later today. Just watch for those very, very closely. Certainly any detail on certainly headcount and restructuring out of HSBC is going to be very much in focus. The buyback's obviously always a feature there of late. Tencent is down about 1%. Baba's down 2.7%. Baidu is now down about 4%. So in case you don't see Baidu, Baidu is bottom row, third from the right. And we now have new home prices coming out soon. I'll get to that very, very briefly. Very briefly before that, though, just some changes to analyst ratings here on the Baidu story. The three latest there we go, on your screens. Buy at Jefferies, outperform at Daiwa, and buy at Citi. Rebecca.
Yes, home prices coming through now. So January home prices, this is new home prices, fell by 0.07% month over month. So that is a 20th straight month of declines. It is marginally better than December, which came in at 0.08. But given that we were hoping to see this boost potentially because of the holidays, the Chunjie holidays, where we typically expect to see a little bit more positive momentum on buying. We see a lot of deals and sales that go through that period. Potentially quite disappointing to see this number.
Yeah, we'll get to more reaction on this a bit later on in the show. But certainly the course of travel seems largely clear. Things are getting less worse, and maybe at some point we'll get a month-on-month positive print there later on. Dollar China on your screens to the weaker side of the equation from the cutoff this morning. Let's pivot back to the equity markets. This world-beating rally in Chinese tech, growth names. Let's bring in John Lin. He's the Chief Investment Officer of China Equities at AllianceBernstein, joining us this morning. John, first, good morning, and hope you're well. And I would imagine your strategies have been doing well of late. How have you been deploying your money recently?
Yeah, first of all, good morning. Good to see you. Yeah, I mean, how much a month has changed in terms of sentiment? So if you invited me a month ago, it would have been doom and gloom, and right now things seem to be picking up. I think what's changing is not so much on the ground fundamentals. I should point it out earlier in the segment, if you look at bottom-up different industries numbers, they are getting marginally less bad, but not seeing a huge recovery. So what we're seeing really, this rally is really a combination of the pivot in stimulus stance that began in the fourth quarter last year. I think plus the announcements of DeepSeek that took place 2-3 weeks ago, that sort of reminded global investors that China remains the interesting place to find good companies, and it's not a story that you can completely write off. Equally, from our point of view, we are not really changing a ton from what we're supposed to do, which is find good companies for the long term that are maybe trading at a valuation that they don't quite deserve. Whether it's some of the beat-em-up consumer companies or parts of, for example, smaller ADR space. That's also forgotten by global investors up until really the last few weeks. And so some of these areas remain really attractively valued from our point of view.
John, how game-changing is the DeepSeek development? I mean, how much upside are you seeing that being added to all the adjacent sectors, the adjacent tech names around AI?
Yeah, it is a pretty significant development from our point of view, not necessarily from sort of let's buy the latest, sexiest, most expensive, high-flying AI name, but I think from a point of view of reminding investors that China remains an interesting place for innovative companies. I think if you rewind the clock back to the middle of last year when the market was most depressed, the discussion was really centered around whether China is investable at all. Our point of view has always been, of course, China is investable. But if you go back to the basics, what we're supposed to do, I'm an equity guy, so what we are supposed to do is to find good companies on behalf of clients and buy those companies at a good valuation. And the first step of that equation is find good companies. So the question becomes, is China a place where you can still find good companies? And I think what DeepSeek reminded global investors is, yes, of course it is. The generative AI development, rightly or wrongly, right now, really two countries in the world have come up with products in U.S. and, of course, China. China is often not the place where some of these new technologies are invented, but like EVs or like solar panels, what China has been pretty good at is to throw engineering hours at a product and then incrementally make them better over time. And that, if you combine with the large end markets like electric vehicles, like solar panels, tended to be a pretty good place for large dominant companies to emerge over time. So, to answer your question is, yes, we think it's a significant development, but more significantly, it's probably not so much just AI, but to remind global investors that this is a place still good to find good companies.
Right. So what are you looking at now? Where is value for a value investor like yourself these days? 35% into the rally, valuations on a benchmark basis back to the 10-year mean.
Yeah, so a couple of places. So even staying with the AI complex theme, for example, and this is a theme that's been well mined in the Western market, if you will, but not so much so yet in the Asian market or in China. And that's, things like the pick and shovel stories related to AI. AI is ultimately not the same business model as a software business, right? I mean, if you write a copy of Microsoft Excel, for example, the next copy you sell for the same software has almost no variable incremental cost. But for AI, the next query you send has the same power consumption as the next 2,000 queries individually you're going to send, right? And so things like being able to find power producers or the electric equipment providers that provide the equipment you need to upgrade the entire grid so that they can support the demand, extra power demand from AI going forward remains an interesting place to find some of the ideas. And I think a couple other places are interesting. One is this smaller cap part of ADR that I was talking about. Some of those companies, whether it's in consumer lending or whether it's in things like social media, had really been quite forgotten by global investors. And even after the rally, we can find companies in that space trading at something like 5, 6, 7 times earnings going forward. And keep in mind that the bottom-up fundamental story, the earnings pictures, are also getting better. And then the last place is probably some of the Asia companies. I think a lot of the global focus has been rightly on sort of large cap Chinese internet companies, but they are a set of hardware companies in the Asia space that also provide, whether it's PCB boards or server assemblies, and these are also really good ways to get exposure into rising Chinese AI demand.
John, just before we let you go, I want to ask about geopolitics and tariffs. In 2024, 1.5 points of the GDP growth, that 5% GDP growth, came from net exports. We're, of course, expecting a hit to that when it comes to President Donald Trump. Is your assumption that the MPC is going to do enough, is going to stimulate enough, put in enough fiscal support to make up for that shortfall?
We tend to think that China needs more stimulus. It needs more forceful stimulus. And then the place where Chinese economy needs most stimulus is in consumer demand. And so you're right. I think additional tariff, if they were to continue to come, will be a drag on Chinese economic growth. And therefore, the demand or the need for a stimulus does pick up. Whether it's the MPC or not, we're not necessarily so concerned about political calendars because, frankly, at this point, we believe that the Chinese government can and will roll out stimulus measures when they see they are necessary. It's not necessarily tied to MPC or a Politburo meeting at month end, etc. And we certainly do not position our portfolio, according to the political calendar. But I do agree that more stimulus is needed.
John Lin, Chief Investment Officer of China Equities at Alliance Bernstein there. There's plenty more ahead. We're back at Consensus Hong Kong next. This is Bloomberg.
Welcome back. You're watching The China Show. Good morning to all of you joining us from across the region. Let's take it straight back now to Consensus Hong Kong, one of the key digital asset, blockchain, and Web3 conferences taking place right now. And Annabelle is, in fact, there at the conference, and she's standing by with her next guest. Belle.
Thanks, Dave. Yeah, I'm joined here this morning by the Robinhood Vice President. This is Johan Kubrat. Thanks very much for being with us today. So you're in Hong Kong really for quite a short time, but talk to us about the message that you're bringing to the conference.
Yeah, no, we are really excited to be here. I think it's important after last year and seeing, that there is a lot of enthusiasm in crypto, and so it's really good to see how much people are here, and we are excited to come after our earnings. We saw that crypto volume have increased 400%, and so for us it's been a good year, and we want to capitalize on it.
Yeah, we can get to the earnings in just a moment, but in terms of capitalizing on crypto flows in particular, this is really a US story, and it's a US regulation story as well. So what are you anticipating in terms of that roadmap for 2025?
I think for us, what we are focusing on is really building for the future. We know that we can work with regulator. Robinhood is already regulated by FINRA, by the SEC on the brokerage. On crypto, we are regulated by the New York DFS. And so we know that we can work with them. So we are excited to see that the new administration want to work with crypto companies. They created this task force as well on the crypto side. And so we think that, with them, we can actually build a bill that will help everyone to offer crypto to, in a safe way to customers.
What does that look like exactly? What is the work that you're doing with the task force, for instance?
I think right now, we're waiting for them to set up the task force and set up draft, and we will comment on the draft. But what we think is exciting is that, there is a clear will for them to work with industry. We saw a lot of funders coming back to the US, for example, and that I think is a good message because, in the past year, we were actually seeing the opposite, where people were leaving the US to build crypto in Asia or in Europe. So right now, we're really excited to be able to build on top of that.
And are you making any sort of business changes in anticipation of that? For instance, new teams maybe, new headcount? We've always been really focusing on building a product that works with the volume in the market. So we actually launched Robinhood Crypto in 2018 when it was really the winter. And we've been able to always kind of develop more features for when it's time for people to actually reuse it. But since the administration changed, we actually added more crypto. We added 7 assets, and we are planning on doing more of this because for us, I think it's very important to offer what people are asking for. When you think about what people are asking for right now, of course, a lot of the action has been driven by meme coins. Yeah. What's your policy on how you add meme coins?
Yeah, so we have a listing framework and a listing committee that meets and kind of review a lot of points for every asset. So, you know, from compliance, operations, security, on the engineering side as well. But at the end of the day, a lot of it is coming from customer demand. And, you know, we've seen a lot of customer demand for some of these coins. And we're trying to make sure that we can offer like what they're asking for. At the same time, we also offer a product called Robinhood Wallet, which is a self-custody wallet where people can have access to a lot more of the assets. And so, you know, for us, the goal is going to be to offer like a fewer list of coins on the platform, and it will be a bit more limited. But if you really want to access anything on Web3, you can use a Robinhood Wallet for that.
It's a fine line, I guess, so sometimes between offering what customers want and also offering tokens that offer some sort of value or utility. So Trump token, for instance, you added in the last couple of weeks, you said, and it's sort of unclear exactly how that would be used or what its purpose is. So how do you weigh that up?
Yeah, I think, you know, it's a combination. I think in some ways the meme coins have been also a very good introduction to crypto for a lot of people. We've seen people, you know, starting with a bit of Doge or a bit of Trump and then getting more interested in learning about Bitcoin or transferring to a wallet and doing more things on Web3. And so I think for us, you know, it's important as a platform that we are agnostic about the asset. Like, we don't want to make decisions for the customer. But if customers are asking us for something and we feel like we have a way to offer it safely, we'll do it.
And I guess as well, you've got, as you mentioned, going back to those earnings, because you did have over $1 billion in revenue for the first time ever, or at least as a public company. So what is the plan to grow the business? Because again, that is quite an aggressive expansion policy or strategy as well.
Yeah, I mean, Q4 was very good for the crypto business, but I think, to your point, it was a combination of all the businesses at Robinhood, and I think that's the strength of the company, that we don't rely on just one business line. But at the end of the day, I think we have a lot of advantages compared to some of our competitors. You know, being able to be one app for all type of asset class. You can have a retirement account, a brokerage account, and also crypto on one platform. It's really important.
And what about in terms of trying to grow the market in different areas as well? What's your plan for different geographies?
Yeah, so we have the international expansion. We launched the brokerage in the UK last year. We also launched a crypto offering in some countries in the EU, and we also announced the acquisition of the company called Bitstamp that has licenses in many countries. So for us, I think it's going to be part of it. We want to grow the business internationally on top of all the new business lines that we are developing.
Tokenization is an area that we obviously have heard a lot about. A lot of people have discussed it. We still haven't seen any projects maybe getting a lot of demand just yet, but what's your outlook for that?
Well, we actually think that Robinhood is at the perfect crosspath between traditional finance and crypto. So I think that's something where we can do a lot to help bring tokenization to life. But I actually think that, you know, there has been use case of tokenization. The stablecoin, for example, is a perfect example of tokenizing the US dollar, and we've seen a lot of adoption, not just in the US, but also in other countries that want to have exposure to the dollar, or also from institutions like us to use stablecoin to actually help move assets on the platform a lot faster. So I think we will see a lot more of that, and, you know, I think Robinhood is very well placed to have a play here.
Predictive markets as well, it's not something exactly in your purview, but still this is an area where Robinhood has faced some issues in the past. I'm thinking here about the rollout with the Super Bowl, for instance. What exactly happened there, and what's the plan moving forward?
Yeah, you know, I think we talked a bit about it multiple times, but I think for us, we were obviously disappointed that we had to roll out the pro football contract. But I think our plan, like we mentioned in the past months, has been to roll out a comprehensive platform, and we want to make sure that we can work with the regulator to offer like products that are exciting for both the customers and for people working on it.
All right, Johan, thanks very much for your time this morning. Enjoy the rest of the conference as well. That was Johan Kobrad there. He is the Robinhood Vice President. Dave, Rebecca.
Annabelle Jewellers there, our Bloomberg tech reporter from Consensus. And in the next hour, we'll also be hearing from Binance CEO Richard Tung on his outlook for Bitcoin and the firm's outlook after the jailing of its founder, Changpeng Zhao. There's plenty more ahead. You're watching The China Show. This is Bloomberg.
Right, welcome back. You're watching The China Show. Speaking of tech, a couple of stocks that we're tracking here as well. So China Best Group, I think the stock is up. Not sure. That's the highest level there in about 2-3 years now. There's this joint venture between a company and Data Robotics going into this framework agreement to form a JV in Hong Kong that looks into humanoid robots. But there we go. That's what it does, of course, when you get that sort of news. Mengniu, dairy producer, and back to the earnings story here, also coming in with rather encouraging numbers. And as you can see, the stock is responding, up about 9%. Now, we talked about the property numbers, which came out earlier on. And just to recap, so things are actually getting less worse or less bad. From December to January, so two charts we're looking at here. So you put those two things together. December and January actually saw home prices, the smallest contractions, plural, in about 2 years or so, going back to the start of 2023.
2022 actually is when we had that first bump up. In fact, the only bump up in positive numbers. But yeah, again, even when we think about new home prices and how they're falling, so falling in 42 cities versus 43. Home prices falling 0.07 versus 0.08. So you're just seeing this tiny, tiny marginal improvement. But the expectation is that towards the second half of this year, we might finally start kind of perhaps entering some of that positive territory. Big question over whether or not we can actually essentially call a bottom to the property crisis.
That's a good point. Yeah, I think when we pose that question to our guests, it's certainly not a single-month data set that is convincing them, right? They need to see a few more of this much. And I think this goes into market psychology as well, right, and market behavior. Once people are convinced that things are actually then picking up, this turns quite quickly. It might be a latter part of this year's story.
There's still this question mark over which developers are going to be able to survive or not, because that's been a big part of this story. People have been concerned. I don't want to buy an apartment from an Evergrande. Or even when we think about strong names, Country Garden, names that we never, ever thought would be in this sort of state of distress.
And the jury's still out, really, on some of those big names as well. The other thing we want to point out, too, I think there's another chart here to Rebecca's point, to lesser cities, or if the opposite is true, right? So more cities right now. So from 23 to 24 cities month on month. From December to January, actually saw a pickup in new home prices, the most going back to early of 2023.
Yes, well, anyway, keep breaking down all of those numbers. Stay with us. You are watching The China Show.
Good morning. Welcome back. You're watching The China Show. Let's just take a look at the HSI about half an hour into the session. We are coming off those lows in very, very early trading, but still down about 0.6%. And in fact, it's a similar pattern that we are also seeing in the HSCEI, coming off some of the lows we saw just really going into the first sort of few minutes of trading of the day, but still down. If we can just flip to the HSCEI, still down, at least I'm seeing on my screen, about 0.7% there, Dave.
Yeah, not as bad as we started out the day. And I think the other point we were pointing to earlier on was really keep an eye on these stock connect flows southbound from the mainland, because that, where that goes tends to really drive the price rally short term. And really yesterday was the biggest amount in some years.
In 4 years, yeah.
In 4 years, yeah.
So, yeah, to your point, we saw quite a big bump up yesterday.
Yeah.
Perhaps a little bit more, laid back on a Wednesday.
Yeah, well, high base to compare that to as well. The other news as well across these markets right now. So before we talk about the RBNZ and the meeting that took place there and the briefing that is about to start, some lines coming through out of the BOJ, and as you can see, the yen is actually moving on that news right now. We're on the weaker side of the cutoff, and certainly we're well off the lows of the session. Initially, though, was the drop lower, and then this reversal to the upside here. A commentary coming through really more on the hawkish side of things, right? There is the need, of course, to check about the economic impact, but that being said, the direction of travel seems to be very clear as far as the Japanese, and a lot of the economic numbers that have come out recently. When I say recently, the last 2 weeks or so, because we are, of course, in the time of the month in Japan where we're getting really a lot of numbers coming through. I just mark your calendars now. In exactly a month's time is the next BOJ meeting. So keep an eye on that. The target rate, March 19. Okay. We don't have to look that forward right now to look at where the RBNZ did. A couple of hours back, they came out with that decision, another drop of 50, so following a 50-50, I think they started with 25, but certainly they've taken rates down a lot, and the signaling from the RBNZs is that there is scope for more. Certainly markets are pricing in, I believe, 3 more rate cuts this year, and my producers will correct me if I'm getting that one wrong. I think it's 3 cuts, but I'm not quite sure, of course, in what size of the cuts are going to come in as well. Yes, thank you so much. There we go. Live TV, fantastic. So 325 basis point rate cuts, rate reductions are further priced into this market. Right, very, very quickly, Asia excluding the Chinese market that's coming off lows. You know what, you can look at this. Just pay attention to euro-dollar, which is indicative of risk appetite turning quite positive. And of course, S&P futures following a decent session overnight is seeing further gains right now, 61.44 on the most active E-mini contract right now here in the Asia Pacific. Okay, we'll table these markets right now, and we'll take you straight back to Consensus. This conference, of course, that's taking place here, all things virtual assets, blockchain, Web3. They're in Hong Kong for the first time, and our reporter Annabelle is there with her next guest. Belle.
So are you based in Hong Kong?
Thanks, Dave. Yeah, I'm joined here this morning by Richard Tang. He is, of course, the Binance CEO joining us this morning. So thanks very much for your time. But I want to start off with your sort of broad view on what's happening in the crypto space right now, because, of course, we saw that rally in anticipation of Trump entering the White House in Bitcoin prices particularly. We've given up of late, and we've sort of been a little bit steady in the weeks since. So what are you making of that?
Well, I think 2024 has been a fantastic year for crypto, right? We started 2024 with the approval of ETFs in the US and subsequently around the world, including in Hong Kong. And that momentum's carried throughout 2024. The institutions are coming through, and in this space in the past has always been dominated by retail. Last year we saw huge institutions starting to embrace this space. We saw mainstreaming starting to take place on that front. And the year ended with the election of a pro-crypto president, President Trump, right? And that gave good optimism into this space. And I predicted it's going to be the start of the golden era of crypto. I think that momentum continues. Last year, we started the year with 170 million users on Binance. We ended the year with 240 million plus users. So we added 70 million users in the course of the entire year. And our institutional users actually more than doubled last year. So it's a fantastic set of results. And this year, by now, we have reached 260 million users globally. So we are the largest global crypto exchange on that front.
What does the golden era of crypto look like to you, though, specifically?
Well, if you look at the past 4 years under the Biden administration, Operation Choke Point was in progress, right? So there's a bit of oppression in the US, and US players, global crypto players are facing great uncertainty. And governments around the world are not really very supportive of crypto. I think we have a fresh reset and restart now. Since President Trump's election, actually we have gotten a lot of approaches by governments all around the world to say, hey, we want to look at this space now. By the virtual fact that US has appointed an AI and crypto czar, represents that these are the 2 most important industries to support all future economies around the world. And we are seeing fresh optimism. Governments around the world are supporting it.
So you're talking directly with the SEC then about what the regulatory roadmap could look like? Or are you talking with the Trump administration directly?
Well, we give inputs to governments around the world. I think they value our inputs because we are the most regulated exchange by now globally. We are regulated in 21 different jurisdictions.
What does your input to the US government look like? What do you want to see there exactly?
Well, so on the US front, you see very thoughtful appointments, right, in terms of the different David Sachs as AI and CryptoZar, the different appointments to the different agencies, regulatory agencies on that front. And they want to come out with a very good framework. So it's still early days, but as and when there are firm proposals, we're very happy to give inputs on that front.
But what exactly do you want to see, though? I want to understand what would bring you back into that market. What is it exactly?
Well, I think for every country, they have their own concerns, their own interests to take care of. But we want to see a framework, regulatory framework, that is, on the one hand, managing the risk aspects of the industry. On the other hand, very supportive of innovation and growth aspects, right? If you just focus on the risk aspect of it, you're missing out on all the new innovation that's coming in through this space, right? And it's a very dynamic space on that front.
Do you think that the US is going to take a more business-friendly approach, or do you think it's going to take an approach that's higher on consumer protection? Because I think you've kind of got to go down either VARA, for instance, in Dubai. That's one that's more business-friendly, for instance. Hong Kong, a bit more on the consumer side.
I think the US is going to come out, and this is only my speculation, is it going to be a bespoke framework that really supports innovation, supports growth, but at the same time protect consumers. And all these different aspects are extremely important.
So if you get that kind of framework that's bespoke, is it enough to bring you into the US market?
Well, we always consider our global deployment, right? So we are holding a watching brief on the US. We need to see greater clarity coming out from the US, and we'll consider our options at that point in time.
And what would that look like to you, for instance?
It's too early to speculate. I don't wish to speculate at this juncture.
In terms of the headquarters as well, this has been another sticking point, I guess, and it's been something that we haven't known. What are your plans around the headquarters for Binance?
So since I took over in November 2023 as CEO of Binance, we have gone about institutionalizing the firm. So it's moved from a CEO-led, a founder-led firm, to a board-led firm now. So we have appointed our board of directors, 7 members, including 3 independent members and an independent chairman. So it is part of that transition, given the direction of travel, is one towards much more compliance. So we have invested heavily into compliance the last couple of years as well on that front. The headquarter question is something that we take time to consider, because you have to understand it's quite delicate on that front. There are many different areas that we need to consider from a tax perspective for the company, right? Whether the countries have enough double taxation agreement, whether we can base local talent there, the headquarter functions that we need to base, what's the regulatory framework that's in place, and whether it can support our global business. So there are different dimensions that we have to consider, and the board is taking a very careful approach in selecting the headquarters.
What's the timeline, though, to announce it?
I think as and when we are ready to announce, we will do so.
How many are on the short list?
I would say a couple at this point in time that are in serious conversation, and hopefully we will land on a headquarters very soon.
So you have a couple of different locations that are on the short list.
Under careful consideration.
2, do you mean specifically?
A number.
Where are they?
Well, I won't speculate, right? So again, our conversation with all these countries are private confidential. So it will be quite remiss of me to highlight any of the jurisdictions.
What are the conversations you're having with Hong Kong in particular?
Well, over the past 2 days I've been here, I had very thoughtful discussions. And I think there's a fresh reset in Hong Kong in terms of the thinking of how best to support the crypto and digital assets framework and agenda. There's a new ambition, which has been articulated very well by the Financial Secretary in his opening in consensus. And in my conversation with policymakers, the regulators here, I do think there's a fresh attitude in terms of trying to support the innovation part, enable much more building development from Hong Kong, much more activity. So Hong Kong has always been a trading hub, a global financial hub. But in terms of crypto assets, right, it is still at a very early stage of development. So I think they are having a fresh relook at this sector and see how to support the growth.
What exactly needs to be reset? What's missing right now?
Well, I think the first set of rules that came out, I think right about 2020, are not quite fit for purpose for the crypto, because you have to understand global crypto players have options, right? We are licensed in 21 different jurisdictions by now, and institutions have options of where to trade from.
What's the biggest
So you have to make it, sorry, let me finish that. So you have to make it very conducive for players like ourselves. Any point in time, we have more than 40% of market share globally, and we bring global liquidity pool on that front. So if you want to bring institutions, the serious money, people that to trade through Hong Kong, it must, match the best standards out there in terms of regulatory framework to accommodate all this innovation.
What's the biggest pain point then? Because you haven't officially applied for the license just yet. What actually holds you back? A custodian, for instance, that those requirements have been a challenge for some here?
Well, when we look at it the last time round, there are a few key challenges, right? So, for example, you only allow for spot trading. You don't allow for futures trading. And futures derivatives trading is a big area. You only allow for up to 20 tokens, even for trading among institutions, and that's far too little to make it commercially viable. So there are quite a number of pain points that we have gone through with the regulators, and they are aware of those pain points, and they have taken that into account. So we hope that the next iteration will be something that's much better than what we saw in the past.
All right, it's always that balance, as I said, between the consumer protections and also making it friendly enough for business as well.
Absolutely.
That was the CEO of Binance there, Richard Tang.
Annabelle Jewellers there, our tech reporter. And if you're a Bloomberg subscriber, you can catch up with all our interviews, Binance and beyond, by using our interactive function TV Go. You can also join the conversation by sending instant messages to our team and our guests during the live show. Please go check it out at TV Go.
Right. As Bell was having that conversation with Binance, the RBNZ has really laid out the path for lower rates, two lower rates ahead. In fact, right now, the governor is answering questions, and I think he was answering the questions from one of our colleagues there who put this, effectively asked what the next moves are going to be, and paraphrasing. So 25, expect the size of the future moves to be smaller than the 50, and assume 25, a reduction of 25 in April and in May. So that totals to about 50 by about mid-July. Yeah, the Kiwi dollar, interesting enough, is coming off lows right now, so 0.1%, well, 0.2%. To the downside, we were down as much as about 0.3, so closer to 0.5% earlier on. Right, plenty more ahead on these evolving market stories. Right, welcome back. Straight back to Wellington right now, and as my colleague Francine just pointing out there in the promo, context is key. More context really on the comment coming through out of Adrian, or he was answering a question and not volunteering specifically the information here on the size, the scope, and even the timing of the future rate cuts coming out of the RBNZ following the move of 50 earlier on. So smaller cuts ahead, expect 50 more. By mid-July. Let's bring in Mark Cranfield for market context. He's with our MLive team joining us out of Singapore. Mark, anything stand out to you? Anything new out of the good governor?
Yeah, I think he is what you might describe as being cautiously optimistic on the outlook for the New Zealand economy. So I think traders will read this as meaning that interest rates are probably not going to go as low as they thought before today's RBNZ meeting. So if you think of what the path, people have been pretty bearish on the New Zealand economy, understandably so, the fate of the New Zealand dollar. and to some extent expecting interest rates to go below 3%, possibly even by the end of this year. That is looking less likely now. If you look at Mr. Orr seems to be giving himself some wiggle room here by reducing the size of rate cuts of just 25 basis points from the 50 basis points they've done at the last couple of meetings, and talking about only July. He's already seeing some signs in the data that New Zealand is starting to come off the worst. Possibly inflation is picking up a little as well. It looks as though the outlook for the second half of the year is not going to be as clear as it was for the first part of the year in terms of lowering interest rates. He's certainly giving himself a chance here to get out of this. And traders are seeing that. That's partly why the New Zealand dollar's come off the lows of the day. And you'll probably start to see it reflected in the yield curve as well in New Zealand. So this could be a bit of a tipping point here where traders cannot be as confident that New Zealand yields are going to come down as quickly as they thought just 24 hours ago.
Mark, we did also wake up this morning to news that President Donald Trump potentially is going to introduce a 25% tariff on autos, drugs, chips. Is the market already over this? I mean, are we seeing much reaction, or are we kind of finally seeing, I guess, investors taking these kinds of announcements a little bit more in their stride?
Well, if you take the closing of the U.S. equity markets as the reaction to Mr. Trump, then they don't seem to be too stressed about it. We're pretty close at record highs for American equity markets. They don't seem to be too bothered. European equity markets are near record highs as well. Certainly from that point of view, even today, if you look at what's happening in Asia here, we had Hong Kong stocks opening lower. They're gradually clawing back. They'll be back into the green pretty soon as well. It sounds as though, in general, equity markets especially seem to see these as potential threats. They may or may not happen. They're being pushed out way. I mean, April, there's so much can happen between now and April anyway. So who knows? From an investor's point of view, if it's not happening in the next 2 hours, they don't really care. And there's been so many of these things thrown up in the air. I don't think anyone's going to take it too seriously until it actually whacks them in the face and they say, yes, these tariffs are going to happen right now, and these are the exact amounts, and these are the people that will be affected. Until then, I think most investors, especially in the equity market, will look past it.
Yeah, if only the U.S. president was as clear as the RBNZ governor, and that's a sentence I never thought I was going to say. Mark, just more on the China story. This reversal in prices right now, so we're about 50 minutes, going 50 minutes onto the cash market session right now. We're going to show this chart coming through as well. Mainland investors have now, in fact, turned net buyers after being net sellers for the first few minutes or so. I'm just going to cue to my producers here. That's chart 1626. Thank you so much. Let's bring that up there. Mark, how much runway does this tech rally have to go in your view, short term?
I think one of the things that we've learned, if you've been following Hong Kong markets especially over the past couple of decades, the ability of Hong Kong and China markets to some extent to extrapolate more than you can think is reasonable is pretty good. So we've, on the high side, on the downside, Hong Kong equities have shown before they can go way, way beyond any reasonable assessment of what is a good rally. Don't forget, H shares had a few years ago we had that 19 consecutive days of higher closes in the H shares on very high trading volumes. You're seeing high trading volumes coming through again. And if you also think of what's happened since China first started putting clampdowns on tech companies and other related things, the markets have come down so far. And you take a company like Alibaba, it's still trading huge amount below where it was just 3 or 4 years ago. So if this is the beginning of some kind of catch-up, if tech companies are now seen as the darlings again in the greater China space, then there could be a very, very long way to go. They still have to deliver, of course. They still have to turn these AI products into real money. They have to show that they can get some revenues out of it. But certainly in terms of where we are now and where we were a few years ago, investors are probably thinking to themselves, well, there could be a lot more upside in this, and they're going to stay in, no matter whether the market looks overbought or not in the short term. They are looking way, way ahead, and they're thinking that this could run for some time yet.
Okay, Mark. Can these potential China darlings deliver? Let's keep watching. That's MLive strategist Mark Cranfield there. And a reminder that tomorrow on Bloomberg Television, join us for a rare live interview with a senior official from Australia's central bank. We'll be asking RBA Deputy Governor Andrew Hauser why policymakers remain cautious about easing after cutting interest rates this week for the first time in 4 years. That's coming up at 10:15 a.m. in Hong Kong and 1:15 p.m. in Sydney. You're watching The China Show. Good morning. This is Bloomberg. Here are some of the geopolitical stories we are following this morning. President Trump says he will probably meet with Russia's Vladimir Putin by the end of the month. That's after the top US and Russian diplomats raised the possibility of broader cooperation following a meeting in Saudi Arabia on steps to ending the war in Ukraine. Marco Rubio and Sergei Lavrov promised to have high-level teams work on a truce that's acceptable to all sides. Rubio has since said that sanctions on Russia will stay in place until a Ukraine peace deal is reached. The Vatican says Pope Francis is being treated for double pneumonia after scans revealed the condition in both his lungs. The 88-year-old has been in hospital in Rome since last Friday, and church officials now describe his medical situation as a complex picture. The Vatican has asked for prayers for the Roman Catholic spiritual leader, who's been head of the church since 2013. President Trump says he expects to impose tariffs on cars, chips and pharmaceutical imports of around 25%, with an announcement coming as soon as April 2nd. Roughly 8 million passenger cars and light trucks were brought into the U.S. last year, accounting for about half of U.S. vehicle sales. Trump has already announced 25% tariffs on steel and aluminium. Those are set to take effect in March.
Yeah, and Rebecca, you were pointing this out earlier to the team, that car makers in Japan really leading to the declines that we had in the markets yesterday, and as you can see today, that's still the case in many of the big name car makers here in Japan going into the lunch break. So in the order of about, let's call it 2%, and certainly when you look at what the benchmark is doing in Japan, this does seem to be indicative of an idiosyncratic factor that markets are continuing to trade on currently. Right, let's flip the page back to the Chinese markets, and Hua Hong Semi continues to give us something to think about. Really, we're trying to figure out why these gains are in the order that you're seeing them right now. Fantastic gains again, by the way. So we've had similar moves in some of these names of late. Will Semi's up 7%. TSMC, of course, down about 0.9 of 1%. This is over in Taiwan. Very, very quickly, NAB. That's the big mover to the downside. In fact, financial, generally speaking, in the Aussie markets are down substantially today. That's the pull coming out of that. And, of course, the other one is Santos there. That's an oil play, 4.5% also in the Sydney session. We'll leave you with a look at Japanese benchmarks going into the lunch break. Plenty more ahead here on The China Show.
So what we're seeing really, this rally is really a combination of the pivot in stimulus stance that began in the fourth quarter last year. I think plus the announcements of DeepSeek that took place 2-3 weeks ago, that sort of reminded global investors that China remains the interesting place to find good companies, and it's not a story that you can completely write off.
Alliance Bernstein's John Lin there on the recent rally in Chinese stocks. But not everyone is getting that excited about this rally. Muddy Waters founder and CEO Carson Block says investors should not be so quick to jump back into China. He spoke exclusively to Insight anchor Haslinda Amin at a Bloomberg special event in Singapore. Just take a listen.
What I've been banging the drum about for 15 years is that the accounting of these companies, especially the ones that are public outside of China, the numbers cannot be trusted. And we are in a world where I think that matters less and less, a world that is dominated by passive flows, where active investing is receding or has been receding for quite some time. So maybe that matters less. But then you layer on top of that the geopolitical risk. It's funny, this morning we had a meeting with a potential investor, and the meeting was going really well, but at one point they told us that they were pretty invested in China, they were excited about it, and they look at things like that based on geopolitical or assessments of governments, et cetera, and government policy. And at the very end, I made such a mistake from a sales perspective because they asked, well, what do you think of China? And, blah, 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 blah. I think Xi has been an absolute disaster for China. And literally the response was, well, okay, on that note, thanks for coming. So I think that, if you're willing to take the risk that you wake up one day and, China has gone to war to try to retake Taiwan or has barricaded the island, and that could lead to a kinetic war. If you're willing to take that risk, great. There's a price for everything. There's a price for that risk. I've been seeing Westerners like that for a couple decades, not really understanding what category of uninvestable China is in. They'll say the right things from time to time, lure the capital in, and I think that is part of the geopolitical strategy here because China has always sought to co-opt opinion leaders and key people who are key economic and business leaders, always sought to co-opt them in the West, basically the Western elite. So the more that they can get everybody, levered to China, I think Xi is viewing this as a negotiating tactic should he ever make that move on Taiwan. So, I don't know. I think it's different.
But Xi has always talked about making that move on Taiwan, and he hasn't. And perhaps there is sense in that. And perhaps for investors, there's comfort to take from that. You talk about how it is uninvestable, but how do you view the rally we've seen so far? As a trader, as an investor, you're losing out on this rally.
Well, I don't know. I sleep a little better at night, I'd say.
You are hearing the right murmurings from Xi Jinping, on the back of the meeting he's had, for instance, with the tech leaders. Perhaps, he's realizing that he needs to do something differently.
Well, and it's not to say that this is unique to China, but, I lived there for a number of years, and I was actually lied to a decent bit. So and just because China hasn't actually made the move, that has more to do with military readiness. Taking an island from a military perspective is incredibly difficult.
There we go. That was Carson Block, Muddy Waters founder and CEO with Haslinda Amin there in a recent event over in Singapore. Right, speaking of Chinese tech, let's have a look at where we are about an hour into the cash market session. There we go. We're looking at, I think to the downside, you have Baidu down about 2.5% out with earnings yesterday. In a couple of moments, you'll see, of course, some of the ratings coming through from the sell side as it pertains to the stock. As we wait for that, and as you look at that, let's bring in Robert Lee, our senior analyst at Bloomberg Intelligence, to take us through first your take on the earnings, but I think more importantly, how soon can this company realize really the AI story, and when does that show up in these numbers?
Sure. Going back to the early days of my career in London, there's something called Jam Tomorrow, a company that always has great potential promise, but it won't deliver this year. It's going to be next year, and then when we get to next year, it gets pushed out. So I think that's the sort of scenario we're with Baidu at the moment, and it has two fundamental problems. As you're aware, it's referred to historically as the Google of China. That's the cash cow business that funds its AI investments. But that's under heavy attack because there are alternative means to search these days, and also all these alternative chatbots are coming up with search functionality built in, including DeepSeek. So their core business is under sustained and heavy attack. And we saw weakness in the ad business, quite substantial weakness in the ad business as a result. And then on the AI side, obviously competition has caught up substantially. Low barriers to entry, DeepSeek being the most recent example, but they're just not monetizing at anywhere fast enough rate. The cloud computing numbers did come through a bit better than expected, but that's, is a dilutive business to the margins, and overall margins actually disappointed. So looking at it in overview, there are a weak set of numbers, no real visibility on when the AI monetization will come through, and at the same time, their core, cash generative, cash cow business is under heavy attack. So I think that's why we saw the stock price reaction last night.
I just want to shift focus a little bit on the Intel story. We did see this sort of pretty hefty rally, biggest since 2020. It's all about speculation on this potential breakup that could involve TSMC, could involve Broadcom as well. Just explain what we know so far, what we don't know.
Okay, in brief, abbreviated history lesson, they are an integrated device manufacturer going back to the origins of the semiconductor industry in the 1960s. They did everything from designing the chips to fabricating to packaging. That is not a sustainable business model in this current environment when your core market is PCs and servers, which is an ex-growth market. They failed to tap into mobile phone growth earlier and smartphones. They failed to tap into AI accelerators. So there's no real growth driver in their business. So I think what these speculation really, these rumoured stories are telling you, if there's any truth in them, that a breakup of the business is probably most likely. What does it mean for TSMC if they did end up buying Intel's fabs in the States? I guess that would cause them some short-term issues, given the productivity issues that Intel currently has. Whether TSMC can make a good job of that in the long run would remain to be seen. But I think the advisors are obviously coming up with a range of options at the moment. A breakup probably looks more likely. I don't think you can say any more than that. And from a shareholder point of view, sum of the parts is greater than the whole. Could that realise a value realisation? Quite possibly, and that's why the share price reacted positively.
Yeah, a breakup is likely. You sound like my ex. Just back to this equity rally that's taking place in Hong Kong, right? So a lot of people are trying to debate, is it cyclical? Is it more structural flows coming into the market? Is it a momentum trade, or is it a fundamental trade, for example? What's your take on this Hang Seng tech rally that's taking place? Are investors buying into hope or more into earnings here, future earnings?
To quote the great Chuck D, don't believe the hype, because I think it's more based on hope at the moment and the chance of, any re-rating, and Chinese tech stocks were cheap on any measure, either historical or relative. So any re-rating driven by inflows into the market, and it was an underperforming market, ultimately has to be followed up by, earnings revisions. So based on our view, I think that is looking highly unlikely. DeepSeek has obviously been highly innovative, shows what an innovative country China is on the AI side, but monetization remains the key challenge, and I think we'll see very limited evidence of that coming through. So I think it's a locally driven rally, driven by rotation, attracted by cheap valuations. I very much doubt that we're going to see the follow-through on the earnings, and Baidu being an example of that. So that, makes things vulnerable to some extent at some point.
Right, Robert, thank you so much. Robert Lee there, out of Bloomberg Intelligence, our senior analyst. Now, while Robert is clearly not convinced and happy with the rally taking place, some people are. In fact, some of the founders and the big executives there, good sport, have really seen their riches inflate. So year to date, this is a look at, and this is based on data out of RichGo. Year to date, your big winners are Lei Jun, you have Colin Huang, you have Pony Ma, and this is a net change in their net worth based, of course, on the data that we have in the rally that's taking place in that stock. Robin Lee, we talked about Baidu, 0.4%. Also, a billionaire right now, it's minted a new billionaire, and that is James Peng, of course, self-driving tech entrepreneur. Rebecca.
Yeah, let's bring in our Bloomberg wealth reporter, Diana Lee, just to break down really where we are seeing all of this wealth being directed or redirected. Just talk us through, first of all, the latest catalyst for the shares that we've seen in Pony AI.
Yeah, of course, the Pony AI rally really came amid this broader Chinese AI tech rally. And even if the company is actually listed in the U.S., we see the stock surged about 23% in the last 2 trading days. And that brings about 41% since its debut in the NASDAQ exchange. And of course, if we know that James Peng actually holds about 17% stake in the company, and that translates to about $1.1 billion in his net worth. growth. And in terms of catalysts, it's really, DeepSeek is an important part of that story. We see its cheap AI model really elevates China's position in the AI supremacy race. And of course, a lot of investors are reevaluating the Chinese AI tech companies as a whole, and some argue that it's a bit undervalued. And of course, we see President Xi Jinping met with a bunch of important business leaders from China, and their industries ranges from AI to tech to chip makers and electric vehicles. And all of that just signals this government support for the private sector, especially the tech and automobile industry.
So let's have a look at the company specifically. What does the challenges look like here for the company as we look ahead and as people try and understand how much this company is really worth?
Yeah, so in terms of robotaxi and self-driving, it's always part of this heated battleground between China-U.S. tech race. And we know that Trump is expected to be tough on Chinese companies, especially when there is cybersecurity and data privacy concerns. And we know that U.S. already unveiled some rules to limit the advanced chips from entering China. And that's an important component of the self-driving technology. And of course, we see previously Biden administration proposed a rule to limit the sales and imports of Chinese smart car components from coming to the U.S. So you see a lot of geopolitical tensions of these supply chain issues and market issues for a company like Pony AI. But the company obviously recognized those challenges because the CEO James Peng told Bloomberg that he will be focusing on the international operation outside of the U.S., including, Singapore, South Korea, and the Middle East. And of course, they will keep trying to diversify their supply chain, especially their chips.
Right, setting your sights, I guess, on that global market there as well. Bloomberg Wealth reporter Diana Lee there with the very latest. There's plenty more ahead. Stay with us. You're watching The China Show. Good morning. You're watching The China Show. Right, in some of the corporate news that we are following this morning, UOB has announced a $2.2 billion package to distribute surplus capital over the next 3 years. Southeast Asia's third largest bank will introduce a new share buyback program and plans a special dividend. UOB's fourth quarter earnings met estimates, helped by growth in lending, even as non-interest related income remained flat. Elon Musk's artificial intelligence startup xAI has debuted its updated Grok 3 model. The company says Grok 3 beat OpenAI, Alphabet, and DeepSeek's models across math, science, and coding benchmarks, in claims that are yet to be independently verified. xAI also introduced a new smart search engine called Deep Search. Ford is eliminating stock award bonuses for many of its middle managers, trying to boost performance amid declining profits and high costs. Ford is forecasting a year when earnings before interest and taxes will fall by $2 billion or more. It's also overhauling its EV unit after projecting losses of up to $5.5 billion this year for that business.
Right, what time is it now? 10:45, so in about an hour and 15 minutes, HSBC will be inundating our headlines here in the terminal. Fourth quarter earnings are due, so we're looking at everything from metrics to perhaps a buyback, more on the buyback, and perhaps some commentary on some of the massive restructurings, of course, that the bank is undertaking right now. For a closer look at some of these areas to watch, senior analyst Francis Chan out of Bloomberg Intelligence is here with us to talk us through his expectations for these earnings coming through in about an hour from now.
Sure. We believe the expectation would be really high. Just to give you a point of reference, the valuation of HSBC as a stock has gone up more than 40 billion since the new CEO, Georges Eldery, came to the office and announced different kinds of restructuring plans, and much of the cost cutting, if it is like a conservative estimate at the low end, would have been priced in. Now I think more delivery will be relying on maybe the top line. And of course, if there will be any more news to the enhanced capital repatriation plans, that will be a big plus to what they already have so far.
A big focus, Francis, is of course going to be this restructuring. There has been sort of comments on how quickly, in fact, the new CEO has moved to enforce that. How urgent is it that kind of HSBC is really getting on with the job here?
You see the pace of changes moving really fast over the past 3 months or so. Like yesterday, there have been another 40 investment bankers as reported being let go in Hong Kong. And there are a few moves which happened a few months, over the past few months, which makes a lot of sense. For instance, they're trying to trim the investment banking business in the States and Europe. From the very beginning, those operations really contribute a very small share of profits to the global banking and markets operations. And 2/3 of that division's earnings could be coming from Asia and Asia only. So they try to pivot back to Asia for those resources. It makes perfect sense. And also, if you look at the operations, the cost-income ratio, for instance, in North America, in Europe, the wholesale banking part of it, the cost-income ratio is as high as 80% versus the whole group's 50%. So obviously, those divisions in terms of ROE, in terms of cost, they're not as efficient, and there could be a lot of fat to cut.
Okay, thank you so much for joining us. We'll keep an eye on that. Bloomberg Intelligence Senior Analyst Francis Chan there. There is plenty more ahead. Stay with us. This is Bloomberg. Temu's use of a near-century-old loophole to ship its items directly to the US duty-free has made it the world's largest online dollar store. Now, President Donald Trump's second-term tariffs are threatening the key to Temu's success. For more, let's bring in Bloomberg Asia Global Business Managing Editor Rachel Chang. Before we get into sort of the existential crisis that Temu may be facing, just lay out why it was that Temu was able to build this pretty extraordinary success and in a relatively short period of time.
So Temu really followed that successful model that Shein, which is that China-founded fashion brand, pioneered, which is that instead of shipping these goods to U.S. warehouses and then delivering it to customers from there, what they did was bring all of these factories together, put their products in warehouses in China, and then ship them straight from China to the American consumer directly to the doors of the consumers who are buying these things online. And why that was so smart was because it really avoided the extra tariffs that Donald Trump in his first term and Joe Biden kept on Chinese goods, but they took advantage of this loophole that neither president previously addressed, which is that any amount less than $800 that any American person buys online would not be subject to any tariffs at all.
So are the factors that contributed to how successful and quickly the companies become successful, do those factors largely go away? Like, how do we look at that, the path ahead?
Right. So what's really interesting now, because Temu and Shein have both become so successful around the world, is that Donald Trump has come in and said he's now finally going to address this $800, what they call the de minimis rule. He's going to remove that. We don't know when it's going to be implemented, but he's already announced the intention of removing that. And so what that means is that the entire model, which allowed all of their products to escape any sort of customs duty, that's now under threat. And in the near term, we've already seen, for example, in the 5 days after Donald Trump said that, the traffic on both Shein and Temu dropped, I think, something like 30%. So consumers are wondering, this sort of dollar store, super cheap prices, is that really going to last for them?
What are the potential options here for Temu? Is there a way to get around this, or is this a question of just opening up and finding other buyers?
Right. So, what we're hearing from factories is, Shein, for example, is asking some of them to move to Vietnam because this de minimis rule is still there for any other country. And then we're also hearing that, Temu is asking merchants to essentially do the shipping themselves. They don't want to pay for that anymore. They want them to shoulder that cost. And then, as you said, of course, what we're seeing for both of these platforms is in the long run, they're going to shift away from that U.S. consumer. They're going to look at the Middle East, Russia, Southeast Asia. People everywhere want cheap stuff. So they do have consumers in other parts of the world.
Rachel, fantastic piece this one, I have to say. Rachel Chang there, Bloomberg Asia Global Business Managing Editor for today's Big Take into the world of Temu. Right, just back to markets. About 90 minutes back here, the January home prices came out. New home prices across 70 cities. So I think the headline coming through here, when you look at either the market reaction or the lack of it, is really things are just getting better. They're getting less bad, I think.
It's
contracting
slightly less worse.
Yes,
but that's kind of what we're looking for, right? This slight stabilization. And I think there are quite modest hopes, honestly, about when we actually finally start to go into the green when it comes to those new home sales. I mean, we're just seeing that very, very slowly improve.
Yeah, and I think it's interesting to, this is a survey of, I believe, 70 cities, major cities, and it's worth pointing out that still more than half of these cities are still seeing month-on-month price declines, right? So at least in terms of the mindset here, we haven't quite turned the corner on the statistics and matches yet. But that being said, 24 cities are now posting slightly better month-on-month gains in home prices, too.
Yeah, I mean, 20 months of declines, that sort of tells you all that you need to know.
Things are getting cheaper on the home price front. From this story, we will just turn the page on the markets and Intel suppliers. And this one's potentially a massive one. I mean, just if it does happen, of course, that Intel then becomes fabless, it certainly adds then to this sort of growing list across the last few decades or so of companies just really not making the mathematics and economics work of really having a fab that is just expensive to maintain over the course of time. Anyway, Intel suppliers on your screens right now.
And tomorrow on Bloomberg Television, join us for a rare live interview with a senior official from Australia's central bank. We'll be talking to RBA Deputy Governor Andrew Hauser. You're watching The China Show. This is Bloomberg.
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, we begin with Donald Trump's push for tariffs. The president says he will likely impose duties of around 25% on imports of cars, semiconductors, and pharmaceuticals. He says he'll announce the new charges in April. As heard here on Bloomberg Radio, Trump spoke to reporters at his Mar-a-Lago club in Florida.
It'll be 25% and higher, and it'll go very substantially higher over a course of a year. But we want to give them time to come in because, as you know, when they come into the United States and they have their plant or factory here, there is no tariff. So we want to give them a little bit of a chance.
Again, that was President Trump at Mar-a-Lago. Now, new tariffs on cars would have sweeping effects on the industry. The roughly 8 million passenger cars and light trucks brought into the U.S. last year accounted for about half of U.S. vehicle sales.
Well, Nathan, President Trump is promising to cut hundreds of billions of dollars in waste out of the federal budget. The president defended the DOGE effort in an interview on Fox News Channel's Hannity program, alongside the man who's spearheading the cost-cutting drive, Elon Musk.
The overall goal is to try to get $1 trillion out of the deficit. And if the deficit is not brought under control, America will go bankrupt. This is a very important thing for people to understand.
Elon Musk had talked about cutting $2 trillion during the campaign. President Trump heaped praise on the world's richest man during the interview.
He's a leader.
Yeah.
He really is. He gets it done. You get a lot of tech people, and you have people that are good with tech, but he gets it done.
And the president tells Fox's Sean Hannity if Musk has any business conflicts with his work on spending cuts, he won't be involved.
Well, Karen, Treasury Secretary Scott Bessent says Elon Musk's Department of Government Efficiency is saving the country tens of billions of dollars. Bessent also spoke on Fox News.
I think I saw an estimate today of about $50 billion. So that's a very good start. And I don't think it's unreasonable to think that we could have several percent of GDP that we are saving.
Treasury Secretary Scott Bessent also says taxpayers don't need to worry about the security of their private data while Elon Musk's team seeks to make the federal government more efficient.
Well, to foreign policy, Nathan, Secretary of State Marco Rubio said the U.S. will keep sanctions on Russia at least until a deal is reached to end the conflict in Ukraine. Rubio spoke to European allies after joining other U.S. officials in Saudi Arabia for the highest-level face-to-face meeting with Russian counterparts since Moscow's invasion in 2022.
I came away today convinced that they are willing to begin to engage in a serious process to determine how and how quickly and through what mechanism can an end be brought to this war. Whether we can ultimately reach that outcome will obviously depend on every side in this conflict's willingness to agree to certain things.
Secretary of State Rubio says an end to the war would open, quote, incredible opportunities to partner with the Russians. President Trump's special Ukraine envoy, Keith Kellogg, has now arrived in Kyiv a day after the Russia talks.
Back in Washington, Karen, Howard Lutnick has been confirmed and sworn in as Commerce Secretary. As a result, he's named his 2 eldest sons and 3 company deputies to run the core of his business group following his resignation from Cantor Fitzgerald. Lutnick also says he will divest his business interests within a few months of his appointment.
Well, back in New York, Nathan, Mayor Eric Adams will face a federal judge in Manhattan later today who will decide whether to grant the Justice Department's request to dismiss corruption charges just weeks before an April trial. We get more with Bloomberg's Ed Kalegi in New York.
Judge Dale E. Ho said the parties in the case must be prepared to address the reasons for the government's dismissal request. On Sunday, Adams told reporters his ability to lead through turmoil should be noted.
Go back and do an analysis from the day that I was indicted to what we have accomplished. That is my ability to lead through turmoil, and I'm going to continue to do that.
Adams has pleaded not guilty to charges that while in his prior role as Brooklyn Borough president, he accepted over $100,000 in illegal campaign contributions and lavish travel perks from a Turkish official and business leaders seeking to buy his influence. Ed Kalegi, Bloomberg Radio.
All right, Ed, thank you. Well, X is marking the spot for Elon Musk lately. Bloomberg News has learned Musk's social media company X is in talks to raise money at a $44 billion valuation. That's the same price the billionaire paid 3 years ago when the company was known as Twitter. The funding round would be a remarkable turn of fortunes for X after Musk's takeover and overhaul caused many users and advertisers to flee.
Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. The deadline passed, and Vladimir Guerrero Jr. did not sign a new deal with the Toronto Blue Jays. He says they had their numbers, I had mine. He's betting on himself. It appears that Guerrero will be a free agent after this upcoming season. College hoops, second-ranked Florida, easy win to go to 23-3. Fifth-ranked Houston won at Arizona State. The Cougars 14-1 atop the Big 12, where BYU beat Kansas by 34. That ties for Bill Self's worst loss ever. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm Nathan Hager, and this is Bloomberg.
tariffs are probably the single biggest thing that is distracting everybody.
Markets don't see too much permanence in the tariff impact yet, and that's where we fear it might be a bit of a miscalculation.
There is money that is going to flow out the door while these tariffs go on.
I think the bond market is probably more vulnerable at this point.
I don't think tariffs announcements are the reason to sell stocks.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get your week started live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Tuesday with equity futures elevated and up by 1/3% after snapping a 2-week losing streak on the S&P 500. On the Nasdaq 100, we're higher by 0.4%. Our top story worldwide, top US and Russian officials meeting in Riyadh without anybody from Kyiv and Brussels left out in the cold.
And a real sense of resentment by Brussels more broadly and by Europe about not being included in these talks. And yet some officials are saying, hold your horses, don't protest too much, don't give these meetings the credence that they have some import that they could otherwise have if we were at the table.
This is a very significant moment, though. It has been years since we had such high-level meetings between U.S. officials and their Russian counterparts. The question I have going into this, is this just to improve a relationship between Washington and Moscow, or can they really come out of this meeting paving a way for a summit that we reported over the weekend that Trump wants by the end of the month?
Spent the whole weekend reading article after article about how upset the Europeans were. A tough Friday for the EU. Scathing words. A wake-up call for the continent. Those words didn't come from J.D. Vance. They came from Mario Draghi in the Financial Times. Those words were really powerful. Forget the US. Europe has successfully put tariffs on itself. The challenge is coming from within, not just from outside.
Which was just highlighted by the fact that nothing like anger can galvanize an entire country, an entire region, which is the reason why there were a couple of summits over the weekend held by Emmanuel Macron, among others, of European leaders. The problem was they couldn't get everyone in the same room because the schedules were misaligned, and they couldn't agree on some sort of plan, which just highlighted the challenges, the obstacles that J.D. Vance was referring to. Look, put aside the subtext, the context of what he's talking about in terms of what social media does to free speech, etc. There was a real challenge of what are we fighting for, what's going to unite you guys, and hey, when are you guys going to get your act together and decide what it is that you want?
We've said this a few times on this program, that maybe the Trump administration would push the Europeans to do things that might be good for them. Bonds are down, yields are up, defense spending expected. Defense stocks are rallying. European equities are outperforming so far on the year. We talked about the tariffs a few times. The auto stocks over in Europe have been rallying, not declining to start the year, and they picked up again through last week.
Which raises the question, how much can some of these politicians stand in their own way, especially as we wait for pivotal elections in Germany on Sunday? Is this really a moment where we've hit the trough of European pessimism, really? And can we see some sort of plan on the other side? Right now, there is a question of, has U.S. exceptionalism peaked because Europe suddenly has hope? Or have people underestimated the barriers, just how entrenched they are for a sustained European outperformance?
Trump is forcing their hand into where a lot of European leaders said they have been wanting to go but haven't been able to get there. It's not just Mario Draghi. You look at the Irish premier talking about how they need to innovate more, regulate less. That is what America has been telling Europe for decades, and maybe they're going to finally do it.
I talked a lot about the risk, the bullishness off the charts. In the Bank of America Fund Manager Survey, long stocks and short everything else. Cash levels at 15-year lows. Fear of a global recession at a 3-year low. We'll get into that a little bit later this morning. Equity futures right now positive by 1/3%. Coming up this hour, we'll catch up with Brian Levitt of Invesco on why investors may need to brace for more volatility. Bloomberg's Tyler Kendall as US and Russian officials meet in Saudi Arabia. And we'll speak to the IHG CEO on the state of travel. We begin this hour with stocks rising to kick off the shortened trading week. Brian Levitt of Invesco writing, market drawdowns and volatility are almost always the result of policy uncertainty. Investors may need to brace themselves for additional volatility, but I suspect we know this drill. Brian joins us now for more. Brian, good morning. Good to see you.
Good to see you.
Is the peak uncertainty behind us yet?
No, I don't think the peak uncertainty is behind us, although I don't want to be overly negative. I'm just reflecting on coming off of a period where volatility had been quite low. So I think ultimately it'll be a good environment for stocks, but it's going to be a little bit more difficult. We have inflation at the upper end of the comfort zone, which isn't terrible unless the Federal Reserve thinks they may have to take a different approach. And we still have to deal with the uncertainty around trade and industrial policy. So there's more to come on this. Investors probably looked at what happened with Canada and Mexico with regards to the tariffs and said, okay, all good. I suspect that's probably not the case. We'll have some volatility in here, but that doesn't change the fact that it's still a good backdrop for risk assets.
In the meantime, we're just eating into consensus trades to start 2025. In the FX market, the dollar is weaker, not stronger. In the bond market, yields are lower, not higher. And if you're looking at equities on a geographic basis, Europe is outperforming the United States. Do you want to fade that or pile in?
I would pile in. I think the reality is we've had such a prolonged period of U.S. outperformance driven by a handful of names. What we've all been wanting is some broadening out in these markets. Now, just because things like small caps or European stocks were cheap didn't mean that they were going to outperform. You needed some catalysts. And what you have right now is, of course, easing in different parts of the world. You have valuations a little bit more extended in the United States. You have higher nominal growth, improving expectations in Europe. So, yeah, it's a better backdrop. You remember that period, we all remember it, 2009 through 2019, where nothing could perform but U.S. growth stocks. We were in a very low nominal growth world. So now we're in a better improving nominal growth environment.
So the story you just told about Europe is not as exciting as the story that other people say, which is this is the beginning of actual spending, of actual stimulus, in addition to a disinflationary trend that can eventually allow ECB rate cuts. Are you basically saying you don't buy some of the optimism that this is really the moment that Europe could join together, issue euro bonds to support defense stocks, and inject some stimulus in the overall economy?
Well, we've seen this before. So, fool me once, shame on you. Fool me twice, shame on me. Is that how it goes? Right. So I'm not ready to say that this is the moment. The way I look at Europe right now is not good or bad. It's better or worse. And things are getting better than where they were. We had this long environment where things were generally getting worse. The fact that floating rate mortgages exist in a lot of parts of Europe wasn't necessarily helpful. But now we've got this easing environment. Sentiment's picking up. I would look at it more as a cyclical recovery in sentiment and a better policy environment rather than necessarily viewing it right now as a bigger structural story. We need some proof on that.
There are some contradictions in this story. On one hand, if you have growth improving, doesn't that tie the hands of central banks in terms of how much they can cut rates, leaving benchmark borrowing costs at a higher pace, which typically pressures stocks?
Well, different parts of the world have different answers. I mean, I think in Europe, in the UK, we're going to need to see interest rates continue to move lower. In the United States, the point I was getting at is I like inflation at the upper end of the comfort zone. People have been wanting weaker, rates to come down. In September, the Fed fund implied future said rates would be below 3% at the end of this year. Well, what would have happened between then and end of 2025? That rates had to be below 3%. That's a bad economic outcome. So the fact that we've reassessed that now, we're not pricing in tightening. We've just backed out the rate cuts, which suggests that this is going to be a pretty good growth environment. Inflation at the upper end of the comfort zone, to me, is a better environment than where we were for a decade, where we couldn't get it into the comfort zone because higher nominal growth accrues to corporate profitability. Now, the risk to all of this is, obviously, if inflation jumps and the Fed has to tighten, we are clearly not priced for that. That's where equity valuations get hit. That's end-of-cycle stuff. But I still think inflation's going to moderate. We saw it a bit with the producer price index. Seems like wages are moderating, shelter's moderating. So I don't think it's as big of a concern. CPI, what was that, last Monday? I think that was a bit of an overreaction. The market's recovered from it.
But what about tariffs? Could they be a hit to inflation to go above that range you seem to be very comfortable with?
Yeah, I suppose they could be, except it's a little bit of a different environment than 2018. But if you use 2018 as an example, you saw one-off price shocks in products rather than broad-based inflation. And actually, you started to get a hit to sentiment. And that hit to sentiment actually caused markets to start to think about a recession by the fourth quarter. And, most people don't remember is the Fed actually was easing in 2019, not raising rates. Now, it's a different environment because inflation's at the upper end of the comfort zone rather than, in a deflationary environment. But historically, tariffs don't lead to broad-based inflation.
What do you think causes more angst in the market? Is it the actual tariffs, or is it the continued policy uncertainty about tariffs might be coming every single week?
Uncertainty. And that was the story of 2018, was that it was sort of a tariff trade policy by tweet at that time. And each week we got something new, and it was very difficult how to respond to it. And business sentiment really got hit. If you look at capital expenditures back then, in the beginning of the trade war, they were positive year over year. By mid to late 2019, they were negative year over year. So that's the challenge. The risk to this is just a prolonged period of policy uncertainty. Tariffs, I think we could all agree, lead to a less optimal economic outcome, right, almost by definition. But we can deal with that. Businesses just need to know the rules of the game in order to proceed with confidence.
Fed Governor Chris Waller doesn't seem too worried at all. Listening to him speaking over the long weekend, my baseline view is that any imposition of tariffs will only modestly increase prices and in a non-persistent manner. Lisa going on to say, I favour looking through these effects. He's alluded to this before, reiterated it again.
Some people have agreed with him. However, he has been an outlier, as he did seem more hawkish last September and now seems to have shifted his tune. And some people are talking about maybe he's in contention for Fed chair. That said, other Fed officials have echoed this, both on the record and off the record, saying essentially in the past they have been more of a suppressor of growth than they have been an ignition of inflation.
He's running. I think we've said that before. A lot of people believe that's the case. Brian Levitt of Invesco is going to be sticking with us. Equity futures on the S&P right now just about positive by 1/3%. With an update on stories elsewhere this morning, with your Bloomberg brief, here's Danny Berger. Hey, Danny.
Hey, John. The U.S. and Russia are holding talks to end the war in Ukraine, but Ukraine is not represented. The meeting instead headed by Secretary of State Marco Rubio and Russian Foreign Minister Sergei Lavrov in Riyadh. Yesterday, Ukraine's President Volodymyr Zelensky reiterated that he won't recognize any agreement reached without his country. Elsewhere, the Financial Times reporting that Honda is willing to resume takeover talks with Nissan if the company's CEO steps down. A person familiar said Honda would be prepared to revive negotiations under a new boss who can better manage internal opposition. A Delta Airlines plane flipped upside down while landing in windy conditions in Toronto yesterday. The plane, which was flying from Minneapolis to St. Paul, had 80 people on board. 15 people were injured, 3 critically in the incident. It's the latest in a series of plane crashes so far this year, including the deadly crash in the Potomac River late last month. And that's your brief. John.
Hey, Danny, thank you. Appreciate it. That's some scary stuff. More from Danny in about 30 minutes' time. Up next on the programme, negotiating an end to the war.
Based on your conversations with President Putin, what do you think he wants?
I think he wants to end it, and they want to end it fast. Both of them. And Zelensky wants to end it too.
That conversation's up next. We'll catch up with the Bloomberg team, Tyler Kendall and Ollie Krug from New York City this morning. Good morning. From New York City, welcome to the program. Equity futures positive here by 1/3% on the S&P, and the Nasdaq 100 up by 0.4. One of the big movers so far this year, it's gold. Gold is up another 0.5%, back through 2,900 all over again. Goldman Sachs now looking for 3,100, up from 3K, and saying should economic policy uncertainty persist, we're looking for 3,300 on gold,
which represents a 26% upside through the end of the year. And this really echoes what we heard from Dan Stuyven last week when he came on the show and said essentially there is a fundamental buying base in central banks as well as that hedge. They love gold.
Gold this morning up another 0.5%. Out of surveillance this morning, negotiating an end to the war.
We're moving along. We're trying to get a peace with Russia, Ukraine, and we're working very hard on it. It's a war that should have never started.
Do you expect Zelensky to be involved in these conversations? What will his...
Yeah, I do. He will be involved, yes.
Based on your conversations with President Putin, what do you think he wants?
I think he wants to end it, and they want to end it fast. Both of them. And Zelensky wants to end it too.
So here's the latest this morning. US and Russian officials meeting in Saudi Arabia to discuss bringing an end to the war in Ukraine. Ukraine's President Volodymyr Zelensky is not a part of the discussions and said he won't recognise any agreements without his country's involvement. Our team coverage starts right now with Bloomberg's Tyler Kendall in Washington, Ollie Crook over in Berlin. Tyler, first of all to you, what is the objective for these initial talks?
Well, John, the State Department says that these preliminary talks are to make sure that Russia is serious about ending the war and that everybody is on the same page. Yesterday marked exactly.
टाइम का ध्यान रखना गाइस, नेचुरल गैस में ना ये ऊपर रेजिस्टेंस के ब्रेक होने के चांसेस हैं। सपोर्ट अच्छा है ये, जब तक 338 के ऊपर है सपोर्ट ही है पूरा। एक्सपेक्ट करेंगे थोड़ा मोमेंटम आ जाए, काफ़ी देर से साइडवेज ही पड़ा हुआ है प्राइस भी। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम। बाकी क्रूड ऑयल रेजिस्टेंस पे था, ये भी काफ़ी देर से साइडवेज पड़ा हुआ है। रेजिस्टेंस पे आया था अराउंड 145 पे, अभी देखोगे 445 हो गया। 3 घंटे से वहीं का वहीं रुका हुआ है, ना ऊपर जा रहा है ना नीचे आ रहा है। जिन लोगों ने सेल किया थोड़ा ट्रेल कर लेना, रुक इसलिए रहा है क्योंकि ये ऐसा नहीं है कि सपोर्ट सिर्फ यहाँ पर है। क्रूड ऑयल में भी आप देखोगे तो क्रूड ऑयल में पूरा जो एरिया है यहाँ से लेकर ओवर हेयर, दैट इज़ होल एरिया इज अ सपोर्ट जोन, इसलिए वो रुक रहा है। हम एक्सपेक्टिंग कि थोड़ा नीचे आ जाए, लोअर एंड से बाई करें तो थोड़ा मज़ा आएगा और फिर टारगेट थोड़ा ऊपर का रख लेंगे इस तरह से। तो ट्रेल कर लेना अब क्रूड ऑयल में, कोई बहुत बड़ा टारगेट नहीं है बट मोमेंटम भी नहीं हो रहा। बाकी नेचुरल गैस का टारगेट रखेंगे थोड़ा ऊपर तक निकलता है तो, बाकी ये है तो साइडवेज ये भी ऑलरेडी। कल मोमेंटम काफ़ी अच्छा आया था, अभी रेंज बन चुकी है। दिस आर रेंज कम्प्लीटली राइट नाउ। किसी एक साइड के ऐसा लगा निकल जाते तो बेटर रहता। बाकी डेटा की बात करें, डेटा 7 PM पे बिल्डिंग परमिट का डेटा है और हाउसिंग स्टार्ट का डेटा। गोल्ड और सिल्वर को इम्पैक्ट करेंगे थोड़ा बहुत। फिर FOMC के मिनट्स रिलीज होंगे रात को 12:30 बजे, तो वो उसका इम्पैक्ट भी पड़ेगा गोल्ड और सिल्वर पे। आज क्रूड ऑयल की इन्वेंट्री नहीं है, नॉर्मली वेडनेसडे के दिन होती है बट आज नहीं है। देयर इज नो इन्वेंट्री शेड्यूल फॉर टुडे इन क्रूड ऑयल और इन नेचुरल गैस।
Looks like from the United States. There's also the question of buying more arms from the European side. We are now opening the conversation once more in Europe about joint debt. That is something that basically there's been a lot of resistance to. We've asked about it for many, many months. Now that is something that is coming to the fore. We're going to have an EU leaders meeting in March where that is going to begin to be on the table to try to get that defense spending up. For the Europeans, they are now grappling with this question of their lifestyle, of the lifestyle that they've built since the end of the Cold War. What is that built on and how is that defended? They need to answer that question in the wake of this new reality.
Ollie, help us answer this question. You were in the room in Munich on Friday. How did the Europeans respond? What did they say to you after that address from the Vice President, J.D. Vance?
Listen, John, I mean, I think the thing that we kept hearing was, shock, shock, shock. But some of the people that were sort of more clear-eyed were saying, this is not really a shock. This is what we've been anticipating from the Trump administration for a very long time. I think that there is, on the one side, this idea that the U.S. would step back was not something that anyone really totally believed. They sort of thought of the first Trump administration as a bit of an anomaly. We had heard Trump talk about many of these issues, about Russian gas dependence, about underspend. This is now reality. This is reality for these European leaders, and that is a reality they need to come to grips with. I mean, I spoke to the highest-ranking general of the German military just before the Munich Security Conference. We talk about spending the money. This is a military in Germany, third biggest economy in the world, probably 30th biggest military. They have 180,000 troops. They want more than about 460,000. That is a huge shift in what needs to happen, not just on spending money, but actually recreating these economies to dealing with this new sort of military reality. And And that is what the Europeans need to grapple with. And that money needs to come from somewhere. And that is going to be the very difficult political discussion for the Europeans over the coming years.
Ollie, appreciate it. Thanks for the update. They've got a lot of work to do. Ollie Crook alongside Bloomberg's Tyler Kendall. And the market's starting to pick up on some of this. We talked about it briefly. Starting the week over in Europe with bonds lower, yields up, defence stocks rallying.
Which raises this question, and I know that this is getting a little bit too derivative, but can you get the expansion in Europe if you truly do get the borrowing that a lot of people are expecting? Because does it tie the hand of the ECB at a time where they have to re-leverage in a way in order to finance the growth? Something that the U.S. did a couple of years ago, but then deal with the volatility that comes along with that.
At this point, I don't think it's anyone's baseline that things are going to be fantastic in Europe, but things are improving and they're moving in the right direction. And I think you pick that up in the fund manager survey out of Bank of America today. Not just the global fund manager survey, they also put out a European piece. And this is where for markets, change is far more important than levels. A net 45% of respondents expect stronger European growth over the coming 12 months. Doesn't sound like a lot. But again, change, not levels. That's up from only 9% last month. Brian Levitt of Invesco is with us now for more. Brian, that's a big change. What's behind that swing in sentiment on the continent in the last couple of months?
Yeah, if you look at the leading indicators, you do see them bouncing into more of a recovery phase, and that is more of a risk-on environment. I think it's a handful of things. To your point, things were very depressed. Sentiment was very low. So incrementally, things are getting better, particularly as we've seen stimulus come forward and we've seen interest rates come down. And the United States, a better nominal growth backdrop, which is better for things globally. So, yeah, it's more of a synchronized recovery. Now, some might say recovery. What do you mean recovery? We've been in this sort of nice environment in the U.S. Well, the rest of the world has been struggling a bit, and we're seeing support from China. We're seeing support in Europe, the U.K. So we're getting this synchronized bounce into more of a recovery phase of the cycle.
Not to be negative on this, because a lot of this is positive and people are piling, except for bonds. There is a feeling that a fiscal injection is going to come at the expense of bond markets, which is something that is openly being discussed with joint issuance. At what point is this a different point in the cycle where re-leveraging will get growth, but it will also get inflation in a way that won't allow central banks to cut rates in a way that you said earlier was necessary to have confidence in Europe?
I don't think we're there yet. I mean, remember, we're coming off of a very low growth environment in Europe. We're coming off of low interest rate environments in a lot of the parts of the continent. So this has been more of the we hope so moment rather than as soon as rates move up, that's the end of it. You know, so there's room to go here. I mean, we prefer this to the environment which we saw, which was a perennially low interest rate environment, low inflation environment, no ability to really stimulate activity.
Meanwhile, China's getting in on the action, and Xi Jinping over the weekend was celebrating some of the tech champions once again, previously thrown out of the arena. A question about whether that means now China's pro-business, and that's a good place to invest. Are you getting on that? On board that train?
Yeah, so China was deemed uninvestable, I think, for a while for investors, which made valuations quite attractive. The market was waiting for some stimulus from China. We saw it, probably not to the level that we would have liked to have seen. The DeepSeek news comes and people start to reassess where they are within their technological wave. So, yeah, there's opportunities. There's a lot of great tech businesses in China that were trading historically very cheap to the United States. And what you needed was a little bit of a catalyst. It looks like we have that catalyst. Investors had forgotten that there's really good companies there that are well positioned because you went through a period where, you know, Chinese governments seem to be more involved in these businesses. Yeah, I think there's opportunity there.
Echoes of President Trump's inauguration, maybe, over in China.
The idea of bringing Jack Ma into the fold after previously ejecting him and talking about the importance of Chinese technology and technological innovators, you're right. It resembles some of the people in the front row.
Greed has got a short memory, hasn't it? From uninvestable to investable, they're back again. It's all good for tech. Jack Ma and Xi are in the same room.
Well, I mean, honestly, at this point, people will take what they can get, and people are concerned about overvaluation in the U.S., so it sounds like a good story.
That can change just like that.
Yes, it
Brian
can.
Levitt of Invesco. Brian, thank you. Appreciate it, sir. Coming up, ISG CEO Ali Malouf in just a moment on their latest results from New York City. This is Bloomberg.
Behind Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
Equity futures on the S&P positive here by 0.33%. Up nicely on the Nasdaq 100 through the last week or so. On the Nasdaq right now up by 0.4%. The Nasdaq last week, the best week of the year so far. Big tech bouncing back in a big way. Let's turn to the bond market. Focus on a 10-year maturity just to begin with. Yields lower on a 10-year yield for the last 5
Tariffs are probably the single biggest thing that is distracting everybody.
Markets don't see too much permanence in the tariff impact yet, and that's where we fear it might be a bit of a miscalculation.
There is money that is going to flow out the door while these tariffs go on.
I think the bond market is probably more vulnerable at this point.
I don't think tariffs announcements are the reason to sell stocks.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get your week started live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Tuesday with equity futures elevated and up by 1/3% after snapping a 2-week losing streak on the S&P 500. On the Nasdaq 100, we're higher by 0.4%. Our top story worldwide, top US and Russian officials meeting in Riyadh without anybody from Kyiv and Brussels left out in the cold.
And a real sense of resentment by Brussels more broadly and by Europe about not being included in these talks. And yet some officials are saying, hold your horses, don't protest too much, don't give these meetings the credence that they have some import that they could otherwise have if we were at the table.
This is a very significant moment, though. It has been years since we had such high-level meetings between U.S. officials and their Russian counterparts. The question I have going into this, is this just to improve a relationship between Washington and Moscow, or can they really come out of this meeting paving a way for a summit that we reported over the weekend that Trump wants by the end of the month?
Spent the whole weekend reading article after article about how upset the Europeans were. A tough Friday for the EU. Scathing words. A wake-up call for the continent. Those words didn't come from J.D. Vance. They came from Mario Draghi in the Financial Times. Those words were really powerful. Forget the US. Europe has successfully put tariffs on itself. The challenge is coming from within, not just from outside.
Which was just highlighted by the fact that nothing like anger can galvanize an entire country, an entire region, which is the reason why there were a couple of summits over the weekend held by Emmanuel Macron, among others, of European leaders. The problem was they couldn't get everyone in the same room because the schedules were misaligned, and they couldn't agree on some sort of plan, which just highlighted the challenges, the obstacles that J.D. Vance was referring to. Look, put aside the subtext, the context of what he's talking about in terms of what social media does to free speech, etc. There was a real challenge of what are we fighting for? What's going to unite you guys? And hey, when are you guys going to get your act together and decide what it is that you want?
We've said this a few times on this program that maybe the Trump administration would push the Europeans to do things that might be good for them. Bonds are down. Yields are up. Defense spending expected. Defense stocks are rallying. European equities are outperforming so far on the year. We talked about the tariffs a few times. The auto stocks over in Europe have been rallying, not declining to start the year, and they picked up again through last week.
Which raises the question, how much can some of these politicians stand in their own way, especially as we wait for pivotal elections in Germany on Sunday? Is this really a moment where we've hit the trough of European pessimism, really? And can we see some sort of plan on the other side? Right now, there is a question of, has U.S. exceptionalism peaked because Europe suddenly has hope? Or have people underestimated the barriers, just how entrenched they are for a sustained European outperformance?
Trump is forcing their hand into where a lot of European leaders said they have been wanting to go but haven't been able to get there. It's not just Mario Draghi. You look at the Irish premier talking about how they need to innovate more, regulate less. That is what America has been telling Europe for decades, and maybe they're going to finally do it.
I talked a lot about the risk, the bullishness off the charts. in the Bank of America Fund Manager Survey. Long stocks and short everything else. Cash levels at 15-year lows. Fear of a global recession at a 3-year low. We'll get into that a little bit later this morning. Equity futures right now positive by a third of 1%. Coming up this hour, we'll catch up with Brian Levitt of Invesco on why investors may need to brace for more volatility. Bloomberg's Tyler Kendall as US and Russian officials meet in Saudi Arabia. And we'll speak to the IHG CEO on the state of travel. We begin this hour with stocks rising to kick off the shortened trading week. Brian Levitt of Invesco writing, market drawdowns and volatility are almost always the result of policy uncertainty. Investors may need to brace themselves for additional volatility, but I suspect we know this drill. Brian joins us now for more. Brian, good morning. Good to see you.
Good to see you.
Is the peak uncertainty behind us yet?
No, I don't think the peak uncertainty is behind us, although I don't want to be overly negative. I'm just reflecting on coming off of a period where volatility had been quite low. So I think ultimately it'll be a good environment for stocks, but it's going to be a little bit more difficult. We have inflation at the upper end of the comfort zone, which isn't terrible unless the Federal Reserve thinks they may have to take a different approach. And we still have to deal with the uncertainty around trade and industrial policy. So there's more to come on this. Investors probably looked at what happened with Canada and Mexico with regards to the tariffs and said, okay, all good. I suspect that's probably not the case. We'll have some volatility in here, but that doesn't change the fact that it's still a good backdrop for risk assets.
In the meantime, we're just eating into consensus trades to start 2025. In the FX market, the dollar is weaker, not stronger. In the bond market, yields are lower, not higher. And if you're looking at equities on a geographic basis, Europe is outperforming the United States. Do you want to fade that or pile in?
I would pile in. I think the reality is we've had such a prolonged period of U.S. outperformance driven by a handful of names. What we've all been wanting is some broadening out in these markets. Now, just because things like small caps or European stocks were cheap didn't mean that they were going to outperform. You needed some catalysts. And what you have right now is, of course, easing in different parts of the world. You have valuations a little bit more extended in the United States. You have higher nominal growth, improving expectations in Europe. So, yeah, it's a better backdrop. You remember that period, we all remember it, 2009 through 2019, where nothing could perform but U.S. growth stocks. We were in a very low nominal growth world. So now we're in a better improving nominal growth environment.
So the story you just told about Europe is not as exciting as the story that other people say, which is this is the beginning of actual spending, of actual stimulus, in addition to a disinflationary trend that can eventually allow ECB rate cuts. Are you basically saying you don't buy some of the optimism that this is really the moment that Europe could join together, issue euro bonds to support defense stocks, and inject some stimulus in the overall economy?
Well, we've seen this before. So, fool me once, shame on you. Fool me twice, shame on me. Is that how it goes? Right. So I'm not ready to say that this is the moment. The way I look at Europe right now is not good or bad. It's better or worse. And things are getting better than where they were. We had this long environment where things were generally getting worse. The fact that floating rate mortgages exist in a lot of parts of Europe wasn't necessarily helpful. But now we've got this easing environment. Sentiment's picking up. I would look at it more as a cyclical recovery in sentiment and a better policy environment rather than necessarily viewing it right now as a bigger structural story. We need some proof on that.
There are some contradictions in the story. On one hand, if you have growth improving, doesn't that tie the hands of central banks in terms of how much they can cut rates, leaving benchmark borrowing costs at a higher pace, which typically pressures stocks?
Well, different parts of the world have different answers. I mean, I think in Europe, in the UK, we're going to need to see interest rates continue to move lower. In the United States, the point I was getting at is I like inflation at the upper end of the comfort zone. People have been wanting weaker, rates to come down. In September, the Fed fund implied future said rates would be below 3% at the end of this year. Well, what would have happened between then and end of 2025? That rates had to be below 3%. That's a bad economic outcome. So the fact that we've reassessed that now, we're not pricing in tightening. We've just backed out the rate cuts, which suggests that this is going to be a pretty good growth environment. Inflation at the upper end of the comfort zone, to me, is a better environment than where we were for a decade, where we couldn't get it into the comfort zone because higher nominal growth accrues to corporate profitability. Now, the risk to all of this is obviously if inflation jumps and the Fed has to tighten, we are clearly not priced for that. That's where equity valuations get hit. That's end of cycle stuff. But I still think inflation's going to moderate. We saw it a bit with the producer price index. Seems like wages are moderating, shelter's moderating. So I don't think it's as big of a concern. CPI, what was that last Monday? I think that was a bit of an overreaction. The market's recovered from.
But what about tariffs? Could they be a hit to inflation to go above that range you seem to be very comfortable with?
Yeah, I suppose they could be, except it's a little bit of a different environment than 2018. But if you use 2018 as an example, you saw one-off price shocks in products rather than broad-based inflation. And actually, you started to get a hit to sentiment. And that hit to sentiment actually caused markets to start to think about a recession by the fourth quarter. And, most people don't remember is the Fed actually was easing in 2019, not raising rates. Now, it's a different environment because inflation's at the upper end of the comfort zone rather than, in a deflationary environment. But historically, tariffs don't lead to broad-based inflation.
What do you think causes more angst in the market? Is it the actual tariffs, or is it the continued policy uncertainty about tariffs might be coming every single week?
Uncertainty. And that was the story of 2018, was that it was sort of a tariff trade policy by tweet at that time. And each week we got something new, and it was very difficult how to respond to it. And business sentiment really got hit. If you look at capital expenditures back then, in the beginning of the trade war, they were positive year over year. By mid to late 2019, they were negative year over year. So that's the challenge. The risk to this is just a prolonged period of policy uncertainty. Tariffs, I think we could all agree, lead to a less optimal economic outcome, right, almost by definition. But we can deal with that. Businesses just need to know the rules of the game in order to proceed with confidence.
Fed Governor Chris Waller doesn't seem too worried at all. Listening to him speaking over the long weekend, my baseline view is that any imposition of tariffs will only modestly increase prices and in a non-persistent manner. Lisa going on to say, I favour looking through these effects. He's alluded to this before, reiterated it again.
Some people have agreed with him. However, he has been an outlier, as he did seem more hawkish last September and now seems to have shifted his tune. And some people are talking about maybe he's in contention for Fed chair. That said, other Fed officials have echoed this, both on the record and off the record, saying essentially in the past they have been more of a suppressor of growth than they have been an ignition of inflation.
He's running. I think we've said that before. A lot of people believe that's the case. Brian Levitt of Invesco is going to be sticking with us. Equity futures on the S&P right now just about positive by 1/3%. With an update on stories elsewhere this morning. With your Bloomberg brief is Danny Berger. Hey, Danny.
Hey, John. The U.S. and Russia are holding talks to end the war in Ukraine, but Ukraine is not represented. The meeting instead headed by Secretary of State Marco Rubio and Russian Foreign Minister Sergei Lavrov in Riyadh. Yesterday, Ukraine's President Volodymyr Zelensky reiterated that he won't recognize any agreement reached without his country. Elsewhere, the Financial Times reporting that Honda is willing to resume takeover talks with Nissan if the company's CEO steps down. A person familiar said Honda would be prepared to revive negotiations under a new boss who can better manage internal opposition. A Delta Airlines plane flipped upside down while landing in windy conditions in Toronto yesterday. The plane, which was flying from Minneapolis to St. Paul, had 80 people on board. 15 people were injured, 3 critically in the incident. It's the latest in a series of plane crashes so far this year, including the deadly crash in the Potomac River late last month. And that's your brief. John.
Hey, Danny, thank you. Appreciate it. That's some scary stuff. More from Danny in about 30 minutes' time. Up next on the programme, negotiating an end to the war.
Based on your conversations with President Putin, what do you think he wants?
I think he wants to end it, and they want to end it fast. Both of them. And Zelensky wants to end it too.
The conversation's up next. We'll catch up with the Bloomberg team, Tyler Kendall and Ollie Crook from New York City this morning. Good morning. Live from New York City. Welcome to the program. Equity futures positive here by 1/3% on the S&P, and the Nasdaq 100 up by 0.4. One of the big movers so far this year, it's gold. Gold is up another 0.5%, back through 2,900 all over again. Goldman Sachs now looking for 3,100, up from 3K, and saying should economic policy uncertainty persist, we're looking for 3,300 on gold.
Which represents a 26% upside through the end of the year. And this really echoes what we heard from Dan Stuyven last week when he came on the show and said essentially there is a fundamental buying base in central banks as well as that hedge. They love gold.
Gold this morning up another 0.5.
Tariffs are probably the single biggest thing that is distracting everybody.
Markets don't see too much permanence in the tariff impact yet, and that's where we fear it might be a bit of a miscalculation.
There is money that is going to flow out the door while these tariffs go on.
I think the bond market is probably more vulnerable at this point.
I don't think tariffs announcements are the reason to sell stocks.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get your week started live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Tuesday with equity futures elevated and up by 1/3% after snapping a 2-week losing streak on the S&P 500. On the Nasdaq 100, we're higher by 0.4%. Our top story worldwide, top US and Russian officials meeting in Riyadh without anybody from Kyiv, and Brussels left out in the cold.
And a real sense of resentment by Brussels more broadly and by Europe about not being included in these talks. And yet some officials are saying, hold your horses, don't protest too much, don't give these meetings the credence that they have some import that they could otherwise have if we were at the table.
This is a very significant moment, though. It has been years since we had such high-level meetings between U.S. officials and their Russian counterparts. The question I have going into this, is this just to improve a relationship between Washington and Moscow, or can they really come out of this meeting paving a way for a summit that we reported over the weekend that Trump wants by the end of the month?
Spent the whole weekend reading article after article about how upset the Europeans were. A tough Friday for the EU. Scathing words. A wake-up call for the continent. Those words didn't come from J.D. Vance. They came from Mario Draghi in the Financial Times. Those words were really powerful. Forget the US. Europe has successfully put tariffs on itself. The challenge is coming from within, not just from outside.
Which was just highlighted by the fact that nothing like anger can galvanize an entire country, an entire region, which is the reason why there were a couple of summits over the weekend held by Emmanuel Macron, among others, of European leaders. The problem was they couldn't get everyone in the same room because the schedules were misaligned and they couldn't agree on some sort of plan, which just highlighted the challenges, the obstacles that J.D. Vance was referring to. Look, put aside the subtext, the context of what he's talking about in terms of what social media does to free speech, etc. There was a real challenge of what are we fighting for? What's going to unite you guys? And hey, when are you guys going to get your act together and decide what it is that you want?
We've said this a few times on this program that maybe the Trump administration would push the Europeans to do things that might be good for them. Bonds are down, yields are up, defense spending expected. Defense stocks are rallying. European equities are outperforming so far on the year. We talked about the tariffs a few times. The auto stocks over in Europe have been rallying, not declining to start the year, and they picked up again through last week.
Which raises the question, how much can some of these politicians stand in their own way, especially as we wait for pivotal elections in Germany on Sunday? Is this really a moment where we've hit the trough of European pessimism, really? And can we see some sort of plan on the other side? Right now, there is a question of, has U.S. exceptionalism...
और guys, ध्यान रखना है नेचुरल गैस में मार्केट रेंज के अंदर है बट ऊपर वाला रेजिस्टेंस ब्रेक हो सकता है इजीली, तो थोड़ा सा क्वांटिटी कम रखना, ऊपर से सेलिंग अगर फिर से करेंगे तो ठीक है, बाकी बायर्स निकल जाना। बाकी क्रूड ऑयल तो लग नहीं रहा है, बार बार ओपन इक्वल टू लो बना के ऊपर निकलना शुरू कर दिया है। लुक एट दिस कैंडल, अगेन ओपन इक्वल टू लो, पिछले 4 घंटे से रुका हुआ है रेजिस्टेंस पे, क्या फाइट चल रही है सोचो। अगर एक चीज़ देखो, दो चीज़ हो सकती है, या तो सीधा नीचे आ जाए, वो एक नॉर्मल सिचुएशन है, अगर थोड़ा बहुत फेक ब्रेकआउट करके नीचे आया तो फिर बड़ा गिर सकता है। लेट्स सी, ऊपर एक और रेजिस्टेंस है, वो रेजिस्टेंस वैसे 2 बार टेस्ट हो चुका है ये वाला, यहाँ पर तीसरी बार आएगा प्राइस अब। वन 145 से 445, 3 से 4 घंटे हो चुके हैं। ठीक है, नेचुरल गैस में भी यहाँ पर थोड़ा सा बायर अगर निकलना चाहे निकल जाना, सेलर्स अगर सेलिंग का ट्राई करेंगे थोड़ी क्वांटिटी कम रखना। इवन दो ये है रेजिस्टेंस जरूर, बट अब काफ़ी देर हो चुकी है प्राइस को रेंज के अंदर, मुझे लगता है एक साइड के अगर ऊपर निकल जाए प्राइस और फिर सेलिंग है, क्योंकि इसके ऊपर कोई रेजिस्टेंस है नहीं, 15 मिनट में दिख नहीं रहा एक्चुअली। सीधा 2 आवर का एक रेजिस्टेंस है 387 के अराउंड। बाकी अगर ये ऊपर ही तक चला जाए मेरे अकॉर्डिंग, यहाँ तक ना, यहाँ से सेलिंग आए तो बेटर है, इस लेवल से अब ना ही आए तो बेटर रहेगा। फिर भी देखते हैं, है तो सही रेजिस्टेंस छोटा सा। सिक्सटी एट तक अगर चला जाता है ना, बेस्ट रहेगा मेरे अकॉर्डिंग। ओके, नेचुरल गैस, चॉइस इज योर, बुक करना है तो करना, नहीं तो अगर थोड़ा ट्रेल करोगे तो एसएल कॉस्ट पर रख लेना। अगर ऊपर वाला रेजिस्टेंस ब्रेक करता है तो फिर 363 तक का एक टारगेट और रहेगा। वहाँ पर एफईजी है। ये बाहर निकलना चाहो तो निकल सकते हो नेचुरल गैस में गाइस, ध्यान रखना बाहर अगर निकलना चाहें तो एग्जिट कर सकते हैं। थोड़ा बहुत रुकना चाहिए बट अगर ऊपर निकल जाता है तो मेरे अकॉर्डिंग बेस्ट रहेगा। ऊपर फिर एक एफईजी है यहाँ पर, वो सही सेलिंग का जोन है। ठीक है, क्रूड ऑयल में सेलिंग में क्या करें, 6315 से सेल किया, वो काफ़ी देर से रुका हुआ है, ऐसा छोटा सा ही है, रख लो, नहीं तो कॉस्ट टू कॉस्ट निकलना है तो कॉस्ट टू कॉस्ट निकल जाओ। 3 घंटे से वहीं का वहीं रुका हुआ है, ब्रेकआउट हुआ तो फिर थोड़ा सा और ऊपर चला जाएगा नेक्स्ट रेजिस्टेंस एरिया तक। हाँ बाहर निकलना चाहो निकल जाओ नेचुरल गैस में, अभी भी है ये रेंज के अंदर ही, इसलिए मैं बोल रहा हूँ क्योंकि किसी ना किसी एक साइड के अब एसएल जाने जरूरी है तभी बड़ा मूव आएगा, नहीं तो फिर मूव ही नहीं करेगा ये। अब या तो ऊपर का सेलर्स का एसएल निकल जाए या फिर नीचे बायर्स का एसएल निकल जाए। बाकी जो सेल करेंगे वो थोड़ी कम ही क्वांटिटी से करना वापस ऊपर लेवल से, ठीक है। रुक इसलिए रहा है क्रूड ऑयल बिकॉज जैसा मैंने थोड़ी देर पहले बताया, ये यहाँ से लेकर यहाँ तक ही पूरा सपोर्ट जोन है एक, तो करने को हम बाइंग यहाँ से भी कर सकते हैं बट वही प्रॉब्लम फिर उसमें एसएल बड़ा लेना पड़ जाएगा, तो इसलिए मैंने थोड़ा टारगेट बड़ा रखा हुआ है सो दैट अगर थोड़ा और नीचे आ जाता तो फिर हम यहाँ से बाई करते हैं, एसएल छोटा होता। अब यहीं से बाई करने में वही प्रॉब्लम है जैसा नेचुरल गैस का चल रहा है, नीचे वाला सपोर्ट बहुत बड़ा है, ऊपर रेजिस्टेंस छोटा है, तो ये रेंज है छोटी सी, किसी ना किसी एक साइड पे तो निकलना ही पड़ेगा रेंज को अगर थोड़ा सा बड़ा करना है। डेटा दो ही है, नॉर्मल डेटा है बस, 7 PM पे, ज़्यादा इंपॉर्टेंट डेटा नहीं है, शाम को रहेगा 12:30 पे एफओएमसी मिनट्स जो रिलीज़ हो रहे हैं ना, दैट इज़ इम्पॉर्टेंट।
We're moving along. We're trying to get a peace with Russia, Ukraine, and we're working very hard on it. It's a war that should have never started.
Do you expect Zelensky to be involved in these conversations? What will his...
Yeah, I do. He will be involved, yes.
Based on your conversations with President Putin, what do you think he wants?
I think he wants to end it, and they want to end it fast. Both of them. And Zelensky wants to end it too.
So here's the latest this morning. US and Russian officials meeting in Saudi Arabia to discuss bringing an end to the war in Ukraine. Ukraine's President Volodymyr Zelensky is not a part of the discussions and said he won't recognize any agreements without his country's involvement. Our team coverage starts right now with Bloomberg's Tyler Kendall in Washington, Ollie Crook over in Berlin. Tyler, first of all to you, what is the objective for these initial talks?
Well, John, the State Department says that these preliminary talks are to make sure that Russia is serious about ending the war and that everybody is on the same page. Yesterday marked exactly 4 weeks since President Trump took office, and things have moved rather quickly, including with Anne-Marie's reporting so quickly that officials are looking to get a date locked down on the books by the end of this month, potentially, for a leaders' summit between President Trump and Vladimir Putin. Now, as Ukraine has raised these concerns about direct talks between the U.S. and Russia reversing a U.S. policy, you heard President Trump there reaffirm that Zelensky will have a seat at the table once those formal negotiations begin. And as they start to get underway, another leader that is not at the table is that we're looking for participation potentially from Europe after Ukraine called for leader-level envoys to be involved in these talks as well just yesterday. So big questions here still remaining, particularly also about what the future of U.S. aid to Ukraine will look like. President Trump confirming that he would be interested in Europe potentially buying U.S. weapons to supply them to Ukraine because as security assistance to the country has often divided Washington, this has been one point of bipartisanship, the wide belief that additional aid to Ukraine, particularly when it comes to military and shipping weapons abroad, has actually helped to boost the U.S. domestic industrial base. So all of these talks happening sort of in parallel to these conversations in Saudi Arabia. John, the State Department confirms that at 6 a.m. Eastern, those talks did break for a working lunch after meeting for 2.5 hours earlier this morning.
Oliver, let's bring you into the conversation. Tyler's right. The Europeans want a seat at the table. They had a big meeting yesterday. Macron spoke to President Trump yesterday as well. Will they get a seat at the table?
Listen, I don't know that they're going to get a seat at the table immediately, certainly not. It may be a little bit further down the line. I mean, I think the Trump approach here, when we think about what they're trying to get out of every participant here in these discussions, is sort of the real question, right? Because I think that for the Trump administration, the United States know that they hold basically most of the cards in this conflict. Obviously, Russia holds some, but the United States holds most of them. And as far as the Europeans are concerned, what do they want from Europe? What do they want from Ukraine? What do they want from Russia? What they want from Europe, we start to get a sort of an outline of. They want Europe to take more responsibility for security guarantees. And we started, frankly, the first steps of that happening that probably would not have happened had we not heard from President Trump last week and J.D. Vance over the weekend, the UK saying basically that they are willing to commit troops to peacekeeping operations in Ukraine after a negotiation, after a ceasefire. The French have talked about things like that. I've spoken to the Germans. They're very resistant to that sort of thing and those kinds of conversations. But does that now evolve in the new reality of basically what this conflict and what this sort of the security umbrella looks like from the United States? There's also the question of buying more arms from the European side. We are now opening the conversation once more in Europe about joint debt. That is something that basically there's been a lot of resistance to. We've asked about it for many, many months. Now that is something that is coming to the fore. We're going to have an EU leaders meeting in March where that is going to begin to be on the table to try to get that defense spending up. For the Europeans, they are now grappling with this question of their lifestyle, of the lifestyle that they've built since the end of the Cold War. What is that built on and how is that defended? They need to answer that question in the wake of this new reality.
Ollie, help us answer this question. You were in the room in Munich on Friday. How did the Europeans respond? What did they say to you after that address from the Vice President, J.D. Vance?
Listen, John, I mean, I think the thing that we kept hearing was, shock, shock, shock. But some of the people that were sort of more clear-eyed were saying, this is not really a shock. This is what we've been anticipating from the Trump administration for a very long time. I think that there is, on the one side, this idea that the U.S. would step back was not something that anyone really totally believed. They sort of thought of the first Trump administration as a bit of an anomaly. We had heard Trump talk about many of these issues, about Russian gas dependence, about underspend. This is now reality. This is reality for these European leaders, and that is a reality they need to come to grips with. I mean, I spoke to the highest-ranking general of the German military just before the Munich Security Conference. We talk about spending the money. This is a military in Germany, third biggest economy in the world, probably 30th biggest military. They have 180,000 troops. They want more than about 460,000. That is a huge shift in what needs to happen, not just on spending money, but actually recreating these economies to dealing with this new sort of military reality. And that is what the Europeans need to grapple with. And that money needs to come from somewhere. And that is going to be the very difficult political discussion for the Europeans over the coming years.
Ollie, appreciate it. Thanks for the update. They've got a lot of work to do. Ollie Crook alongside Bloomberg's Tyler Kendall. And the market's starting to pick up on some of this. We talked about it briefly. Starting the week over in Europe with bonds lower, yields up, defence stocks rallying.
Which raises this question, and I know that this is getting a little bit too derivative, but can you get the expansion in Europe if you truly do get the borrowing that a lot of people are expecting? Because does it tie the hand of the ECB at a time where they have to re-leverage in a way in order to finance the growth? Something that the U.S. did a couple of years ago, but then deal with the volatility that comes along with that.
At this point, I don't think it's anyone's baseline that things are going to be fantastic in Europe, but things are improving and they're moving in the right direction. And I think you pick that up in the fund manager survey out of Bank of America today. Not just the global fund manager survey, they also put out a European piece. And this is where for markets, change is far more important than levels. A net 45% of respondents expect stronger European growth over the coming 12 months. Doesn't sound like a lot. But again, change, not levels. That's up from only 9% last month. Brian Levitt of Invesco is with us now for more. Brian, that's a big change. What's behind that swing in sentiment on the continent in the last couple of months?
Yeah, if you look at the leading indicators, you do see them bouncing into more of a recovery phase, and that is more of a risk-on environment. I think it's a handful of things. To your point, things were very depressed. Sentiment was very low. So incrementally, things are getting better, particularly as we've seen stimulus come forward and we've seen interest rates come down. And the United States, a better nominal growth backdrop, which is better for things globally. So, yeah, it's more of a synchronized recovery. Now, some might say recovery. What do you mean recovery? We've been in this sort of nice environment in the U.S. Well, the rest of the world has been struggling a bit, and we're seeing support from China. We're seeing support in Europe, the U.K. So we're getting this synchronized bounce into more of a recovery phase of the cycle.
Not to be negative on this, because a lot of this is positive and people are piling, except for bonds. There is a feeling that fiscal injection is going to come at the expense of bond markets, which is something that is openly being discussed with joint issuance. At what point is this a different point in the cycle where re-leveraging will get growth, but it will also get inflation in a way that won't allow central banks to cut rates in a way that you said earlier was necessary to have confidence in Europe?
I don't think we're there yet. I mean, remember, we're coming off of a very low growth environment in Europe. We're coming off of low interest rate environments in a lot of the parts of the continent. So this has been more of the we hope so moment rather than as soon as rates move up, that's the end of it. You know, so there's room to go here. I mean, we prefer this to the environment which we saw, which was a perennially low interest rate environment, low inflation environment, no ability to really stimulate activity.
Meanwhile, China's getting in on the action, and Xi Jinping over the weekend was celebrating some of the tech champions once again, previously thrown out of the arena. A question about whether that means now China's pro-business, and that's a good place to invest. Are you getting on that? On board that train?
Yeah, so China was deemed uninvestable, I think, for a while for investors, which made valuations quite attractive. The market was waiting for some stimulus from China. We saw it, probably not to the level that we would have liked to have seen. The DeepSeek news comes and people start to reassess where they are within their technological wave. So, yeah, there's opportunities. There's a lot of great tech businesses in China that were trading historically very cheap to the United States. And what you needed was a little bit of a catalyst. It looks like we have that catalyst. Investors had forgotten that there's really good companies there that are well positioned because you went through a period where, you know, Chinese governments seem to be more involved in these businesses. Yeah, I think there's opportunity there.
Echoes of President Trump's inauguration, maybe, over in China.
The idea of bringing Jack Ma into the fold after previously ejecting him and talking about the importance of Chinese technology and technological innovators, you're right. It resembles some of the people in the front row.
Greed has got a short memory, hasn't it? From uninvestable to investable, they're back again. It's all good for tech. Jack Ma and Shia in the same room.
Well, I mean, honestly, at this point, people will take what they can get, and people are concerned about overvaluation in the U.S., so it sounds like a good story.
That can change just like that.
Yes, it
Brian
can.
Levitt of Invesco. Brian, thank you. Appreciate it, sir. Coming up, ISG CEO Ali Malouf in just a moment on their latest results from New York City. This is Bloomberg. Equity futures on the S&P positive here by 0.33%. Up nicely on the Nasdaq 100 through the last week or so. And the Nasdaq right now up by 0.4%. The Nasdaq last week, the best week of the year so far. Big tech bouncing back in a big way. Let's turn to the bond market. Focus on a 10-year maturity just to begin with. Yields lower on a 10-year yield for the last 5
Tariffs are probably the single biggest thing that is distracting everybody.
Markets don't see too much permanence in the tariff impact yet, and that's where we fear it might be a bit of a miscalculation.
There is money that is going to flow out the door while these tariffs go on.
I think the bond market is probably more vulnerable at this point.
I don't think tariffs announcements are the reason to sell stocks.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get your week started live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Tuesday with equity futures elevated and up by 1/3% after snapping a 2-week losing streak on the S&P 500. On the Nasdaq 100, we're higher by 0.4%. Our top story worldwide, top US and Russian officials meeting in Riyadh without anybody from Kyiv and Brussels left out in the cold.
And a real sense of resentment by Brussels more broadly and by Europe about not being included in these talks. And yet some officials are saying, hold your horses, don't protest too much, don't give these meetings the credence that they have some import that they could otherwise have if we were at the table.
This is a very significant moment, though. It has been years since we had such high-level meetings between U.S. officials and their Russian counterparts. The question I have going into this, is this just to improve a relationship between Washington and Moscow, or can they really come out of this meeting paving a way for a summit that we reported over the weekend that Trump wants by the end of the month?
Spent the whole weekend reading article after article about how upset the Europeans were. A tough Friday for the EU. Scathing words. A wake-up call for the continent. Those words didn't come from J.D. Vance. They came from Mario Draghi in the Financial Times. Those words were really powerful. Forget the US. Europe has successfully put tariffs on itself. The challenge is coming from within, not just from outside.
Which was just highlighted by the fact that nothing like anger can galvanize an entire country, an entire region, which is the reason why there were a couple of summits over the weekend held by Emmanuel Macron, among others, of European leaders. The problem was they couldn't get everyone in the same room because the schedules were misaligned.
गैस मैं फिर रिपीट कर दूं, नेचुरल गैस में बायर अगर निकलना चाहें तो निकल सकते हैं. बाकी ये रेंज है मार्केट में. देखो किसी एक साइड के ऐसा उड़ाने पड़ेंगे मार्केट को, या तो नीचे यहाँ या फिर ऊपर, तभी ये रेंज थोड़ा सा कहीं प्रॉपरली बड़ा मूव कर पाएगी. जो लोग बाइंग में अगर वो निकलना चाहें निकल जाओ. बाकी यहाँ से अगर सेलिंग थोड़ा सा प्लान कर रहे हो तो क्वांटिटी थोड़ी कम रखना. ठीक है, अगर यहाँ से सेलिंग प्लान कर रहे हो थोड़ी क्वांटिटी कम रखना, क्योंकि ऐसा मैंने बताया किसी ना किसी साइड के एसएल तो जाने ही पड़ेंगे मार्केट को, तभी मूव होगा, अदरवाइज मूव नहीं होने वाला. बाकी मेरे अकॉर्डिंग अगर ये ऊपर निकल जाता है तो बेटर ही रहेगा इस एफईजी तक, और यहाँ से सेलिंग आ जाए इसमें अगर, दैट विल बी ग्रेट. बाकी यस अभी भी ये रेजिस्टेंस इंटैक्ट है, तो लेट्स सी क्या ये निकलता है या फिर नहीं. तो रिस्क साइड पे है, ध्यान रखना इस चीज़ का. इसको चाहो तो आप वैसे आप छोटा भी कर सकते हो, अब इसकी ज़रूरत नहीं है इतने बड़े लेवल की. $342. Okay. ठीक है, यहाँ रुकेगा थोड़ा बहुत, लेट्स सी क्या इतना रुकता है कि वापस नीचे आ जाता है, क्योंकि है तो रेंज ही है अभी भी। बाकी जिस साइड भी ब्रेकआउट ब्रेकडाउन हो जाए फिर मोमेंटम बड़ा कर सकता है, अगर नीचे ब्रेक होता है तो फिर अच्छा फॉल डाउन साइड पे भी करेगा। बाकी अगर अप साइड गया तो फिर एफईजी तक तो चला ही जाएगा, विच इज अराउंड 365 का लेवल। में है, अगर निकलना चाहे निकल सकते हैं। ट्रेल कर रहे हो तो फिर हाफ क्वांटिटी बुक करके ही ट्रेल करना, क्योंकि और ऊपर जाने के लिए ब्रेकआउट करना ही पड़ेगा, नहीं तो नहीं आता है तो फिर ये वापस रेंज है। फिर आप एक्सपेक्ट करना किसी ना किसी एक साइड पे तो जरूर ब्रेकआउट या ब्रेकडाउन करेगा प्राइस। क्रूड ऑयल का भी समझो ऊपर या एसएल छोटा सा अगर एक गया तो फिर थोड़ा और ऊपर जाना चाहिए इसको, अपने ऊपर वाले लेवल तक। पर भी 2 बार रेजिस्टेंस वैसे प्राइस ले चुका है ऑलरेडी। बाकी यहाँ पर भी क्रूड ऑयल रुक रहा है, बिकॉज नीचे सपोर्ट, ऊपर रेजिस्टेंस है, रेजिस्टेंस लगा रखा है। सपोर्ट जैसा मैंने बताया, ये पूरा यहाँ से यहाँ तक एक सपोर्ट जोन है, तो इसमें भी किसी ना किसी एक साइड की और मार्केट को निकलना पड़ेगा, या तो ब्रेकडाउन या ब्रेकआउट करना पड़ेगा, तभी आप कह सकते हो कि थोड़ा सा रेंज सही से निकल जाएगी। ठीक है, अगर मान लो ये 6286 के नीचे क्लोज कर देता है, ठीक है, 6286 के नीचे क्लोज कर देता है, या फिर 6322 के ऊपर क्लोज कर देता है, तो फिर रेंज ब्रेक हो जाएगी उस केस में एक साइड की, एंड देन एक मोमेंटम वहां पर फिर से एक्सपेक्ट हो पाएगा। तब तक ये भी छोटी सी है, एक स्मॉल सी रेंज के अंदर है। कि नीचे आएगा तो फिर एक डाउन साइड का लेवल ओपन है काफी अच्छा। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम एंड सब्सक्राइब द चैनल। से क्रूड में और भी सपोर्ट है नीचे, बट मेरे अकॉर्डिंग वो होल्ड शायद ही करेंगे, क्योंकि मल्टीपल टाइम लास्ट ट्रेडिंग सेशन में टेस्ट हो चुके हैं। नीचे सारे के सारे सपोर्ट ही हैं, बड़े टेस्ट कर चुके हैं कल, देखते हैं अगर रुकता है इनमें से किसी एक पे, ऊपर वाले पे रुक जाए तो बेटर ही रहेगा। सर्टी न्यूयॉर्क सेशन की ओपनिंग रहेगी, ध्यान रखना वहां पर थोड़ा और वॉलेटाइल होगा मार्केट।
This is the Asia Train. I'm Sherrian in Bloomberg's Asia headquarters in Hong Kong.
I'm Heidi Stroud-Watts in Sydney, where the market has just opened. The top stories this hour. A positive lead-in for Asian stocks, with chipmakers driving the S&P 500 to an all-time high. But President Trump weighing in after the US closed, threatening tariffs of around 25% on cars, chips and pharmaceuticals as soon as April. Trump also says he may meet Vladimir Putin this month after the top US and Russian diplomats signal warming relations and steps towards ending the war in Ukraine. And Muddy Waters founder Carson Block tells us exclusively why he's staying on the sidelines of China's stock rally.
Take a look at how we're setting up U.S. futures right now, unchanged after reaching that record high on the overnight session. It's risk on. Investors most willing to take risk in 15 years, according to a Bank of America survey showing the cash levels have dropped to the lowest levels since 2010. The caveat, of course, these threats around tariffs on cars, semis, pharmas, reciprocal tariffs, still aluminum so much, and perhaps no relief coming from the Fed either. I mean, we have heard these signals coming about being in no rush to cut rates. The latest coming from San Francisco's Mary Daly. Take a listen.
At this point, policy needs to remain restrictive until, from my own vantage point, until I see that we are really continuing to make progress on inflation. At this point, policy's in a good place. We took 100 basis points off the rate last year. That recalibrated policy put it in line with the economy we have. And now we want to be, in my judgment, careful to before we make the next adjustment.
We'll take a look at how we're setting up when it comes to this part of the world in the Asian Open. Quite a bit of trepidation, of course, with, again, these revived tariff risks. Here in Australia, we're just getting kind of the dust settling after the first rate cut from the RBA since 2020. We did see Australian stocks dropping in light of that as well, given that what was delivered was ultimately a pretty hawkish cut and signalling. The ASX 200 at the moment trading pretty flat at the moment. We did see financials and consumer stocks kind of weighing most when it comes to that downside and the cautious approach to future decisions about further easing for the RBA. Chicago Nikkei futures also looking pretty muted at this point. Dollar yen unchanged at 152 level. We are just seeing that sort of caution as the broader global trade war, the uncertainties geopolitically are continuing to play out there with those threatened tariffs across cars, semis, as well as pharmaceutical imports as well. We are expecting that announcement in early April, April 2nd. So these tariffs of around 25%, President Trump says we will probably see across those categories of goods, cars, chips, as well as pharma. And we're also expecting that announcement to be imminent in April. Our White House reporter, Skylar Woodhouse, joins us now for more in Washington. So what did we learn, sort of, I guess, with this announcement or this sort of set of comments that was different to previously? Skylar, I just wonder if you can hear us and can tell us a little bit about what we heard on these imminent tariff announcements.
Oh, hi, I got you. Sorry about that. So what we know from President Trump today, he said he was likely to impose 25% tariffs on the auto sector. Now, one thing to take into consideration with President Trump is, he hinted at coming as soon as April 2nd. But what we've seen so far with some of the other tariffs that he has announced, we've seen some delays, like with Mexico and Canada. So it's kind of sort of got to take these tariffs with a grain of salt on what President Trump is announcing today.
What's been the reaction so far? I mean, we've been hearing about these threats of more tariffs to come, especially for the auto sector.
Oh, yeah. I mean, I think across all sectors, whether you're, looking at autos, agriculture, health, pretty much every industry across the world right now is taking a look and figuring out, okay, how might my industry potentially be impacted by tariffs should they come from President Trump? So it's something, that we're seeing across the board here, different companies, industries, just sort of trying to get their affairs in order should they be hit with any sort of tariffs and what that could mean for their company's operations.
What are we hearing in the latest in terms of the possibility of granting Elon Musk access to U.S. agencies?
Yeah, so what we're seeing right now, there's a lot of legal action flowing right now. Judges saying, that you can't receive access to things. But, so a lot of what is going on right now as it relates to Elon Musk and Doge, some of these things are being tied up in lawsuits. And it'll only be a matter of time before we start to really see what the courts, decide or what the trend across different courts start to look like. But it's just nonstop different lawsuits and legal action that's happening right now in Washington and across the country.
Bloomberg White House reporter Skylar Woodhouse there. And President Trump also says he will probably meet with Russia's Vladimir Putin by the end of the month. That's after the top US and Russian diplomats raised the possibility of broader cooperation following that meeting in Saudi Arabia with steps to ending the war in Ukraine. Marco Rubio and Sergei Lavrov promised to have high-level teams work on a truce that's acceptable to all sides. They also suggested bilateral sanctions could be eased and diplomatic channels be strengthened.
We're going to appoint our teams respectively to work very quickly to reestablish the functionality of our respective missions in Washington and in Moscow. For us to be able to continue to move down this road, we need to have diplomatic facilities that are operating and functioning normally.
Let's bring up Bloomberg News editor Michael Heath for more. So really levelling up the cooperative kind of rhetoric here.
Yeah, I mean, it's almost like the past 3 years, the past decade almost hasn't happened here. It's got to be very, very concerning for Ukraine and for Europe in general. It looks like the US is more than happy to go over their heads and to sort of forge an agreement with Russia, and whether that means lifting sanctions, it certainly, as you heard there, means restaffing embassies. The US is, what it seems to be doing is it's giving away a lot of leverage even before they sort of get to the nuts and bolts of negotiations. So that it doesn't look good for Ukraine or Europe. Some of Bloomberg Intelligence has sort of done some work on this, and their assessment is that if, based on what we're seeing now, what we're likely to see is that those Russian-occupied territories sort of remain in limbo, that Ukraine will struggle to get the support it needs in terms of reconstruction, and just it'll be iffy about how strong its security agreements are. So, yeah, it's not a great sign. And the other thing, just to give a sense of the tenor of those talks, Sergei Lavrov, the foreign minister of Russia, there was a US proposal that Russia stop striking energy infrastructure, and he denied that Russia targets civilian infrastructure, which is an incredible claim, given that when the Treasury Secretary came last week to Kiev, Russia had just done exactly that. It's hit apartment blocks, all sorts. So the US seems to be taking very much an appeasing line here. The Russians were obviously extremely happy about it. They're looking to get the sanctions lifted. But of course, then you've got the other side is Europe. And so what the US is important for Russia in terms of the international financial infrastructure, but Europe is where Russia does its trade and where its elite has their homes and that sort of thing. And Europe, I think, is likely to take a harder line here.
We are also just getting comments from Scott Bessent at the moment, the US Treasury Secretary, speaking on Fox News. He calls President Trump's plan to end the war in Ukraine elegant. So, when you, obviously the removal sanctions is being dangled as a carrot at the moment. How likely is it that Europe is going to come to this party?
Well, you'd think unlikely because, I mean, Europe has to live with Russia next door to it and it needs, Ukraine is sort of the frontline state here. So it really, really needs Ukraine to be settled, to be sure of its security. And part of this whole reason that Ukraine needs security is if you're going to rebuild it, anyone who invests in it or any country putting money into it needs to know it's not pouring down the drain, that Russia won't be back there in a couple of years. So it's really, really important there. And the notion that the plan so far is elegant, it's an unusual description because one of the points mentioned is that Ukraine is that there will be a ceasefire and that Ukraine will have to hold elections. And President Trump mentioned that as well. Ukraine's under martial law and its presidential term has expired, but this is a real Russian talking point because they're hoping that they can that Zelensky will lose and they can find a more pliable leader. Russia talking about the need for elections and democracy is sort of ironic in its way as well. But look, it's all very fluid, but it looks like this is really falling Russia's way so far.
It must be really alarming for President Zelensky and also European allies. And it could even get worse if we actually do see President Trump meeting President Putin in person.
Yes, well, that's exactly right, Sherry, because we can, you listen to Marco Rubio. He's a fairly standard Republican. He's pretty reasonable in his assessment of the global state of affairs. He's fairly mainstream. But President Trump with President Putin, there's obviously a lot of interest President Trump has in President Putin. That's been around for a long, long time. The relationship, as I've mentioned before, is extremely opaque. No one particularly understands what the appeal there is of Putin, who's been around for 25 years. Everyone's fairly clear on what he does and where he stands. But the President Trump, when they met in Helsinki during his first term, President Trump took the word of Vladimir Putin and the Russian FSB over his own security services in terms of Russian election interference in the US and these sorts of things. So really anything could happen in terms of giving away leverage or anything like that. Or it could be that President Trump's quite sensible and it's just, it's more of a meet and greet and pick fact. But you'd suspect that quite a lot will be done there, and Ukraine will be very, very nervous watching that. I mean, President Zelensky even cancelled his trip to Saudi Arabia, despite having good relations there, because it was just too uncomfortable, it seems, having the US and Russia meeting with Ukraine excluded like that.
Bloomberg News editor Michael Heath. Let's bring in Garth Reynolds, who leads our Markets Live Asia coverage. And, Garth, we've seen the previous, hints of when more tariffs might come. The markets are quite good at shrugging that off because it's not immediate, right? So kick that can down the road. Is this starting to build a bit more pressure?
I don't really think so because it's more of the same. It's another 25% tariffs are coming at some stage on items that President Trump had already flagged. He said we'll look at autos, we'll look at chips, we'll look at pharmaceuticals. The one thing that's perhaps concerning, perhaps it's not, is he specifically said we'll have discussions about these over the coming weeks, but we're looking to impose tariffs. I don't think there's been any reporting that there have been any actual discussions about this, apart from President Trump claiming airily that there are companies, unspecified, who are looking to move factories to the US and who allegedly one of them is cancelling plans for a factory in Mexico or something like that. That's all very opaque. When, where, how exactly these tariffs come in, the answer, I suppose, is going to be April 2nd again, along with the reciprocal tariffs, all of which requires the Commerce Secretary to do a lot of fairly intensive reporting and recommendations and so on, at least if you're going to follow the letter of the law. So as markets are probably free to go, we've heard this before. Until we see the whites of the tariff size, we don't need to worry about it.
And analysts were saying also that given President Trump's transactional nature, that he might be more inclined to just struck a deal somewhere, anywhere, with anything at this point. But I wonder if markets are still being too complacent, because even if you take Trump out of the equation, you do have corporate America's profit outlook, for example, continuing to sour.
Yes, there is that, Sherry, but there were some concerning signs in the latest Empire survey, which showed that small businesses in particular were pulling back on CapEx plans. The uncertainty gauge in there had jumped. It's not a great time if you're a business in America or a business who does business with America to be making decisions, because you don't know what's going to happen. To some extent, if you had actual concrete tariffs imposed right at this moment, okay, that would be bad, but you can adjust. Having them, or it's like, yes, they're definitely coming in on this date. Again, you can adjust. But now you're sort of wondering, well, do we try and get ahead of the game by importing a bunch of stuff before tariffs come in? But that might face logistical problems. There's a whole range of questions that really can't be answered, along with a range of other matters where Trump is busy dismantling parts of the government and facing all those legal challenges which were mentioned earlier. So there's a lot of uncertainty out there, which is impacting companies at the moment. Investors are they're almost taking a leaf out of the Fed's book, as it were. They're saying, well, we're not sure what the impacts of these policy decisions are going to be, political policy rather than monetary policy. So for now, we have to kind of take things as they are, and as they are, we don't see why equities shouldn't continue to climb. So let's buy equities.
Just keep going. We are seeing that caution play out for the Fed, again, when it comes to the inflation risk, and from the RBA as well with the hawkish cut. Not so for the RBNZ. They're going to go big again. It's sort of, and they're expected to signal even more dovishness.
Yeah, well, the RBNZ is in a very different situation, because and this is very much the RBNZ's own tradition, they weren't fussed about the idea of, we want to try and engineer a soft landing. They looked at what was going on with New Zealand and said, everything's overheated, we need to slam on the brakes, we're perfectly willing to engineer a hard landing, and a hard landing is what they got. When you get a hard landing, then yeah, you cut rapidly, and you keep cutting until you're sure you're starting to get actual traction in turning the economy around. There's nothing that signals that's the case for New Zealand, so they're going to keep going. Contrast that with the RBA, who copped plenty of criticism for not raising interest rates high enough, fast enough relative to a lot of others, and they specifically said, we are pursuing a sort of soft landing trajectory. We want to bring inflation down without driving unemployment up. They've succeeded in doing that, hence the hawkish cut. The RBNZ is on a very different path.
Garfield Reynolds, who leads our Markets Live Asia coverage. And tomorrow on Bloomberg Television, do join us for a rare live interview with a senior official from Australia's central bank. We'll be asking the RBA Deputy Governor, Andrew Hauser, why policymakers remain cautious about easing after cutting rates this week for the first time in 4 years. That's coming up at 10:15 a.m. Hong Kong time. That's 1:15 in the afternoon if you're watching in Sydney.
And still ahead, Heidi, on today's Asia Trade. China's January home prices are due in the coming hours. We'll look ahead with Jeff Rees. Capital.com telling us why they expect the U.S. dollar to keep declining. Plus, we'll be live at Consensus Hong Kong to talk crypto with the CEOs of Flow Traders and Bullish. Much more ahead. This is Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
The AI-fueled rally in Chinese equity markets this year has seen the likes of Goldman Sachs turning more positive on the mainland. But Muddy Waters founder and CEO Carson Block says investors should not be so quick to jump back in. He spoke exclusively at a special Bloomberg event in Singapore.
What I've been banging the drum about for 15 years is that the accounting of these companies, especially the ones that are public outside of China, the numbers cannot be trusted. And we are in a world where I think that matters less and less, a world that is dominated by passive flows, where active investing is receding or has been receding for quite some time. So maybe that matters less. But then you layer on top of that the geopolitical risk. It's funny, this morning we had a meeting with a potential investor, and the meeting was going really well, but at one point they told us that they were pretty invested in China, they were excited about it, and they look at things like that based on geopolitical or assessments of governments, et cetera, and government policy. And at the very end, I made such a mistake from a sales perspective because they asked, well, what do you think of China? And, blah, 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 blah. I think Xi has been an absolute disaster for China. And literally the response was, well, okay, on that note, thanks for coming. So I think that, if you're willing to take the risk that you wake up one day and, China has gone to war to try to retake Taiwan or has barricaded the island, and that could lead to a kinetic war. If you're willing to take that risk, great. There's a price for everything. There's a price for that risk. I've been seeing Westerners like that for a couple decades, not really understanding what category of uninvestable China is in. They'll say the right things from time to time, lure the capital in, and I think that is part of the geopolitical strategy here, because China has always sought to co-opt opinion leaders and key financial people who are key economic and business leaders, always sought to co-opt them in the West, basically the Western elite. So the more that they can get everybody, levered to China, I think Xi is viewing this as a negotiating tactic should he ever make that move on Taiwan. So, I don't know. I think it's different.
But Xi has always talked about making that move on Taiwan, and he hasn't. And perhaps there is sense in that. And perhaps for investors, there is comfort to take from that. You talk about how it is uninvestable, but how do you view the rally we've seen so far? As a trader, as an investor, you're losing out on this rally.
Well, I don't know. I sleep a little better at night, I'd say.
You are hearing the right murmurings from Xi Jinping, on the back of the meeting he's had, for instance, with the tech leaders. Perhaps, he's realizing that he needs to do something differently.
Well, and it's not to say that this is unique to China, but, I lived there for a number of years, and I was actually lied to a decent bit. So and just because China hasn't actually made the move, that has more to do with military readiness. Taking an island from a military perspective is incredibly difficult.
Muddy Waters founder Carson Block there speaking exclusively with Insight anchor Haslinda Amin in Singapore. More ahead on the Asia trade. This is Bloomberg. Still in the thick of earnings season, we had Santos full-year net income missing estimates. Paul Allen joins us now for more. So we were anticipating a softer result. Was there disappointment, or is it pretty much in line with expectations?
No, missed expectations, down 16% on the year. So we got a underlying profit there of $1.2 billion, and that was short of estimates, down 16%, as I say. Dividend was lower as well as a result, 10.3 cents. It gives us a total dividend for the full year of 23.3 cents. And Santos has been trying and succeeding in returning money to shareholders, $737 million returned over the past year, but still it's a disappointing result that's being reflected in the share price at the moment. But the outlook unchanged, 90 to 97 million barrels of oil equivalent for the 2025. Cost unchanged as well to produce that, $7 to $7.50 per unit. Santos obviously at the mercy to a degree of the rather volatile oil prices that we've seen, but things that it can control are the cost overruns at some of its major projects. They're expected to improve as well. So we've got the Pikka project in Alaska, 16 of 26 wells now drilled. We're likely to see a startup of that next year. The Barossa project in the Timor Sea, that's now 91% complete, so a startup likely in July and September. And that's possibly why analysts still like this stock. We've got 12 buys, 2 holds, just 1 sell.
Thanks, Paul Allen there. We will be speaking a little bit later with the Santos CEO, Kevin Gallagher, for more on those earnings results. Their plans to target up to $150 million in annual structural savings. That's coming up on Bloomberg. Take a look at how we're tracking when it comes to the early part of the Asia trading session. Of course, Australia online for just about half an hour, just extending those losses that we saw across yesterday's post-RBA trading session. Consumer discretionary was sort of one of the biggest losers as we got that hawkish cut as anticipated from the Australian Central Bank. At the moment, we are seeing the ASX off by now over 1%, just really pairing some of those gains that we saw last week that drove it to fresh record highs. At the moment, we are seeing a bit of upside when it comes to utilities and materials, but financials off by 2.5%. We're seeing property and tech stocks also seeing some steep declines there as well. Singapore Nikkei futures also looking pretty muted. We do have, of course, a revived tariff threat being floated by President Trump, with an announcement now expected on April 2nd when it comes to 25% tariffs on cars, on semiconductors and on pharmaceuticals as well. In New Zealand, though, we are seeing sort of modest upside, expecting a big move today again from the RBNZ, and that's the picture when it comes to bonds as well as we head into that decision. At the moment, we are seeing Aussie bonds kind of looking like they could potentially be vulnerable to that short squeeze higher, but not a lot of movement at the moment. And New Zealand Central Bank is set to deliver its third big rate cut in a row, and signalling further reductions to come as well to try and rekindle economic growth during a time of recession. Our Bloomberg economy reporter Swati Pandey joins us now. So we were talking with Garth, they're not doing anything by halves, both in terms of how they got into this situation and how they're going to get out of it. So another 50 basis points expected and more dovish signalling to come as well.
That's right. It's the third 50 basis point cut. They were really aggressive on the way up as well. The forecast actually from here is of 25 basis points cut. So after today, the forecast is just 3 more cuts of 25 basis points. And this is from our Bloomberg survey of economists. We will get more insight from Governor Orr, and there will be a lot of document to digest today as well. There will be updated forecasts from them. So we will get a clearer idea of their thinking of where the economy is tracking and has tracked through this Southern Hemisphere summer period as well.
Swati, we do have risks on the horizon, right? Including, of course, as we continue to speak about tariff threats coming from the Trump administration. And, of course, it's pressuring the Kiwi dollar as well. How is the central bank going to factor all of those in?
I'm pretty sure that trade and this whole global uncertainty is going to play heavily in their discussion. This was something that Reserve Bank of Australia's Governor Michelle Bullock yesterday mentioned as well during her press conference, that this uncertainty has played on their mind. And we are seeing that, like you said, in the currency reaction too. And that is one of the reasons that inflation progress could actually be stalled, and that could be one of the reasons the RBA may signal the slower interest rate, the speed at which they are cutting, basically. So not going at 50 basis points again and signaling 25 bips, or maybe even a higher terminal rate than what markets are predicting right now.
Bloomberg economy reporter Swati Pandey there as we await that RBNZ rate decision today. And of course, we're watching China as well. The property crisis there worsening with a record $160 billion pile of distressed debt and a brief revival in home sales fizzling out despite government stimulus. Home prices seeing the worst slump on record. The latest data due in about 2 hours. Let's discuss with Xujin Chen, head of China Financial and Property Research and China economist at Jefferies. Xujin, really good to see you here in the Hong Kong studio. So first of all, what are we expecting today, I guess?
Sure, yeah. So first, regarding to the property price, we still expect a kind of like a decline, but moderately decline month on month. So in the past few months, we've already seen that home price, for the secondary market home price, the decline every month seems to be quite small. And this month probably could be continue the trend in January, yeah.
What happened to that brief revival that I mentioned when it came to home sales? I mean, we saw this effort from the government to support the property sector with more stimulus measures. Why has that fizzled out?
So on one hand is that we do see some impact on the property price already. For example, in some tier 1 cities, their property price largely stabilized in the past 3 months, thanks for the further loosening on the home purchase. So that actually helped quite a lot. And for example, like some tier 1 and major tier 1 cities and a few tier 2 cities, we also expected that they will see kind of like a price stabilization this year, thanks to this kind of like supportive policy. But on the other hand is that, especially in the second half last year, people realized that the problem is not only on the property market, but it's for the whole economy. Like the lower expectation from the higher income class people, that's the key issue now.
What does that mean for all of these companies that are already suffering, whether it's Vanke, for example, that was supposed to be a little bit too big to fail and the support coming there, but even other defaulters who seem to be showing a little bit signs of recovery, like Sunak, for example, now saying that they can't necessarily rule out a second restructuring?
So on one hand is that I think it's very hard to say like a developer is too big to fail. If we look at like more the statement published by the China financial regulator, normally they will see some like, for example, systemic important companies, but mainly financial industries, right, like large banks. But for property developer, we have already seen like a few ones defaulted in the past 3 years, and it seems has not too much. There's not too much impact to the systemic to the financial system in the past 3 years. So I think it's still hard to define Vanke as like too big to fail. And the second is that we have seen that there's quite a lot of supportive policies to support like Vanke from the Guangdong province and Shenzhen city government. But on the other hand is that because they are hard to be defined as too big to fail, but we haven't seen too much support from the central government level. And at this stage, we see that there's quite a lot of like management change in Vanke, and therefore it will take like months for them to assess like how much money they need to needed for potential payout. And I think at this moment it's still too early to say a payout. Yeah.
Xujin, how closely correlated remains the relationship between household sentiment, consumer sentiment, and the property sector? Can that side improve without meaningful structural support for property prices?
So on one hand is that we do see that consumer sentiment and property purchase are now more related to the expectation of income, especially for higher income population. When we define a higher income class, we would say that if your monthly salary is if the monthly disposable income is more than 6,000 RMB, then you would be among the top 20% in China. So these people are the major buyers for the properties, and also they have a key contribution to the consumer. And in the past 2 years, we have seen quite a lot of supportive policy, but more focus on the mass market. And these higher income population still see a relatively, their income expectation can hardly change in the short future. So without the change in the income expectation, we actually see that, there's still something that government can do, as we have already seen that, like the whitelist and ensure the delivery of the house, and also more supportive policies for the financing for the developers. So this can help a bit on the market, but overall we still need to look for a turnaround for both the income expectation and also the consumer sentiment when we are talking about property price bottoming.
How are banks' balance sheets doing in light of all this? Because we know that there's, some pretty opaque calculations in the way that Chinese financials handle non-performing loans. Is that sort of a systemic risk that's continuing to build?
Very good question. Yes, there are quite a lot of investors doubt about China's NPL ratio, especially regarding to the property development sector. But on the other hand, is that if we look at the past round, during the 2012 to 2015, China went through a down cycle, economic down cycle, due to the overcapacity issue and SME default. But we see that banks actually dispose and recognize more NPL during 2016 to 2019 when the economy recovers and after the down cycle. So on one hand is that the recognition of NPL, because it will follow the overdue ratio, and these seems to be largely lagged the cycle. On the other hand is that I think the China banks trying to deal more with the NPL recognition disposal during the economy recovers. So this time I also expected the same action. So when we see a turnaround, and we may see there are more NPL recognition at that time, probably.
You mentioned earlier, for example, how the central government was not that active in getting involved, for example, with Vanke. Do you expect more support to come from Beijing, given the threats coming from the Trump administration and how big the property sector is for the Chinese economy overall?
Gotcha. So on one hand is that we have seen the property sector contribution to the overall economy largely declined in the past 3 years, right? It peaked in 2021, and both the property developer loans, the overall scale shrink quite a lot, and also for the contribution for the GDP. Now the estimate is from previously around 30% related to the GDP, now only around 10% or 10 to 15%. So the contribution has declined quite a. The overall impact from the property sector decline has largely reduced. But on the other hand, we do see that there's a potential for China government to conduct more stimulus, focus on the domestic demand. If the Trump's Trump's administration's tariff rate, became more than market expected. For example, currently we see that global investors' expectation for the potential tariff next year, in the next 1 year, is to increase to 40% to 60% for China. So in April, we'll see the potential. We'll see more details from the Trump administration. So it can be higher than that number. There's a possibility for China to further conduct trading policies for the consumption upgrade, and also more supportive policies for the salaries or pensions for people.
Xu Chen, really good to have you with us here in the Hong Kong studio, head of China Financial and Property Research at Jefferies, of course, as we look ahead to that property sector data coming from Beijing later today. But if you missed any part of this conversation, TV Go is your function. You can also dive into any of the securities or Bloomberg functions that we talk about and become part of the conversation by sending us instant messages during our shows. This is for Bloomberg subscribers only. Check it out at TV Go. This is Bloomberg. Breaking news out of the U.S. Senate right now. We are hearing that Howard Lutnick has been confirmed by the Senate as Commerce Secretary in the Trump administration. Of course, he's the billionaire CEO of Cantor Fitzgerald. We're expecting this confirmation to take place. He's expected to oversee a large department with responsibilities ranging from fisheries management to export controls. But of course, most importantly, he has been tasked by the president with leading the administration's tariff and trade agenda. Again, Howard Lutnick now confirmed by the Senate as U.S. Commerce Secretary. Right, Japan will aim to cut greenhouse gas emissions 60% by 2035 under a revised climate target. The new goal is seen as falling short of action required to meet Paris Agreement goals. Let's get more from BNEF head of APAC research, Ali Izadi. Ali, what do you make of these targets?
So at face value, as you mentioned, the targets would be insufficient for well below 2 degrees Celsius target of the Paris Agreement, particularly the 1.5 degrees Celsius target. At the same time, it's still relatively good for Japan to at least be ahead of some of its G20 members and submit its updated NDC, laying out its target for 2035 and 2040. Japan is only the 5th member of the G20 to submit its updated NDC, even though the original deadline for all UNFCCC members was to submit their updated NDCs by February 10th. It is short. A bigger issue, of course, is that even if you look at Japan's existing 2030 target, which was 46% emission reduction by 2030 relative to 2013 levels, the country is not on track to meeting the current target. So it only had achieved emission reductions of about 19% for the latest year that the government had provided data at the end of 2022. It's only 19% for the period of 2013 to 2022, whereas the target for 2030 is 46%. So they're currently not on track to meet even their 2030 target. They would have to scale up the pace of emission reduction by about twice the current rate to hit that. If they hit that, then maybe they can have an opportunity to hit their own modest target. And then whether their target will contribute to the overall global target of meeting the Paris Agreement goal will then heavily depend on whether their peers also show similar ambition.
What are the critical steps, Ali, that Japan needs to take to actually realize that target?
So for all countries, the most important lever is increasing clean electricity supply and accelerating electrification in final energy. If you look at Japan's 7th Strategic Energy Plan, which has been being drafted in parallel to coming up with the updated NDC, the government is still foreseeing that by 2040, the country would continue to heavily rely on fossil fuel thermal power generation. That makes it really difficult if Japan proceeds with such an approach to actually achieve its own relatively modest emission reduction target. The government is also still relying heavily on bringing back nuclear power. We've seen nuclear power plant restarts fall far short of government's existing plans. For renewables, it has upped the target, but in the case of renewables, it's prioritizing sort of unproven costly technologies such as perovskite solar, rather than really looking at scaling up mature, proven renewable technologies.
Bloomberg NEF head of APAC Research, Ali Azadi there. Well, the remote Pacific Ocean nation of Nauru aims to sell citizenships for the climate-threatened island to help meet the cost of moving 10,000 residents from low-lying homes. It highlights the immense challenges that small nations are facing in financing ways to adapt to climate change. Our climate and ESG managing editor David Stringer has more on this story. And David, we've sort of long documented the struggle of these small island nations. Are passport sales enough in terms of being able to finance their needs?
Morning. Well, you know, I guess this whole issue, and really it ties back to the points Ali has just been making. As we see less ambition, as we see developed nations, not achieve as much as they need to in terms of reducing emissions, it's putting more emphasis on climate adaptation. What can those countries, often low-lying island nations, those are in the front line of climate change, what can they do to boost their resilience? For Nauru, we know they have this ambition, a decades-long project to move the majority, about 90% of the population, from low-lying coastal areas that face really severe issues with flooding and move them to higher ground. And the fact is there simply isn't enough financing to do that available right now. So what we're seeing is these kind of innovative, novel solutions. In the case of Nauru, also in the case of Dominica as well, that involves selling citizenships. It's one tool they've found to raise some revenue, but is it enough? Absolutely not. Nowhere near enough. The strategy that Nauru has is likely to take many, many hundreds of billions of dollars, and look, what they're expecting to achieve initially is to raise about $65 million from initial passport sales.
Yeah, so tell us a little bit about that funding gap between rich nations and poorer nations and the challenges that these smaller countries face.
It's really something that's coming to a head. And as I said, you're sort of really going to come into more sharper relief as we see countries row back from some of the more ambition in their targets. If we think back to Azerbaijan, we had the COP29 climate talks at the end of last year. The whole thing was a huge row about climate financing. Smaller nations, developing nations were looking for about $1 trillion a year or more from rich countries. What we got in the end was a deal in which wealthy economies pledged about $300 billion a year, way less than what's needed. And in fact, the UN estimates that the gap between available financing and what's required could be as much as about $359 billion a year right now.
Bloomberg ESG and climate managing editor David Stringer. You can get more on this story on the terminal and later on Bloomberg.com. But we do want to take you to breaking news out of Japan right now. We are getting the latest trade numbers, and exports rising 7.2% year-on-year for the month of January, beating expectations. We're also seeing imports gaining more than 16% year-on-year, and this leaves a trade deficit that's coming in at 2.8 trillion yen. Of course, we have been watching perhaps businesses loading up on orders ahead of these tariff threats coming from the Trump administration, and also the reaction when it comes to a weaker yen. Core machine orders also a contraction of 1.2% month-on-month, which is a contraction instead of a growth that was expected for the month of December. We have more ahead on the Asia trade. This is Bloomberg. And these are some of the stocks that we'll be watching when trade opens in Korea and Japan. Nissan's in focus after its credit default swaps widened to the most among Japanese companies that have overtaken both Rakuten and SoftBank after its consolidation talks with Honda were terminated. Also watch LG Energy Solutions shares after Toyota agreed to shift a $1.5 billion battery order to one of LG's Michigan plants after GM pulled out of an earlier deal. The market opens in Seoul and Tokyo are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens after another record high on Wall Street. But of course, the caveat for investors across Asia, Heidi, is that 25%, around 25% tariff that could come on cars, semiconductors, pharmaceuticals as well. President Trump saying that announcement to come as soon as April 2nd.
Yeah, again, the revival of these tariff threats or the imminence of these tariffs, but also the geopolitical developments, right, when it comes to really a revised strategy between the US and Russia, and even potentially talking about dropping these sanctions as well. So pretty massive shifts that we're expecting on the geostrategic front as well.
Yeah, and we have seen that risk-on mood, given the geopolitical tensions easing perhaps in Ukraine, starting to really be felt throughout the markets. Global stocks rallying. You can see the Nikkei right now coming online with the Japanese yen holding steady at that 151 level against the U.S. dollar. A little bit of downside early in the session, but of course we had a 10-year yield already topping those highs that we saw in 2010. Of course, expectations of that BOJ rate hike to come at a time when we've already seen exports continuing to gain ground. We are talking about gains of 7.2% year on year for the latest data. A little bit to the downside miss on the estimates, but still China's exports to China contracting, but that also to do with the impact from the Lunar New Year holidays. Take a look at how the Korean market is coming online, because we've been watching, of course, LG Energy Solutions. We're hearing that Toyota is veering $1 billion of orders to one of its Michigan plants, but at the same time, autos are so important for this market. We know that Hyundai Kia's sales in the U.S., more than 60% of that coming from imports. So we'll be watching the reaction as the Kospi gains 0.3%. And we're seeing a little bit of weakness for the Korean won, Heidi.
Jerry, take a look at what we're watching in Australia. Of course, we are looking at the day after kind of impact when it comes to the RBA's first rate cut since 2020. And we did see stocks falling and just extending that fall again into the midweek session as well. We're seeing a little bit of upside when it comes to materials and utilities, but real estate in particular, one of the biggest laggards in the session, as well as tech stocks as well. The Aussie dollar is trading kind of sideways, 63.50. The underperformance that we're noting is really in the Kiwi dollar. They're really the worst performer among G10 peers, as we expect another big cut to the official cash rate from the RBNZ today. But after today's 50 basis point move, the projections are looking to show smaller steps of 25 points to fall towards 3%. But still, another big move expected for the RBNZ there. And we're also seeing Kiwi stocks seeing some modest gains. Also watching oil, which is steadying after advancing on the possible postponement of OPEC Plus supply increases. A lot of uncertainty around flows from Russia, particularly with this talk of these warming sort of dynamics between the US and Russia as well, and whether those sanctions on Russia could be dropped as a carrot for ending the war in Ukraine. Let's bring in for some analysis Carl Brunner, who's a senior market analyst at Capital.com. And Carl, as Sherry mentioned, we get that sort of revival of the tariff talk, and we could know more by the start of April, certainly. But at the moment, it feels like markets, at least in the US, are willing to just keep kicking that can down the road and keep on buying.
Yeah, it certainly does seem to be that way. And I mean, the tariffs are certainly the most pressing source of uncertainty at the moment for the markets, and probably, you know, potentially the biggest downside risk in the short term, really on the basis that we don't have a great deal of clarity as to how these tariffs will take place. And of course, they're, you know, very much tied to sort of the temperament of President Trump and how he wishes to sort of potentially go at his adversaries. I mean, I think one thing that the markets have been, I suppose, boosted by is that there has been this more measured approach, that there seems to be this kind of
गाइस नेचुरल गैस में जो लोग ट्रेल कर रहे थे निकल जाना लग ही रहा था थोड़ा सा ऊपर तक जाएगा बीच का रेजिस्टेंस ब्रेक कर चुका है तो रेंज अब ठीक है एक्सपेक्ट करेंगे थोड़ा मोमेंटम हो क्रूड ऑयल तो बिल्कुल ही क्या कहें सुपर साइडवेज मोमेंटम है देखो ये बहुत ही स्मॉल रेंज में है किसी एक साइड के असर जाने जरूरी है 6322 के ऊपर निकल जाए क्लोज कर दे या 6287 86 के नीचे क्लोज कर दे नीचे क्लोज करता है तो फिर 6260 एंड देन 6220 तक जा सकता है ऊपर ब्रेकआउट अगर करता है तो फिर 6350 तक जा सकता है कंप्लीटली साइडवेज है 630 की कैंडल नेक्स्ट कैंडल रहेगी कोई अगर सेलिंग में अभी भी रुका हुआ है तो ट्रेल कर लेना 5 घंटे हो गए 145 से लगा लो अभी 645 होने वाला है 5 आवर्स से उसी रेजिस्टेंस एरिया पे साइडवे चला गया. लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम. बाकी देखो अब यहाँ पे कोई रेजिस्टेंस है नहीं क्योंकि उतने ऊपर 15 मिनट में लेवल दिख नहीं रहे पीछे नेचुरल गैस में. ये ऊपर एक लेवल लगा रखा है, ये 2 आवर्स में है ना कि 15 मिनट में. एक एफईजी है तो मैंने बना दिया है. थोड़ा बहुत यहाँ से एक सेलिंग का प्लान कर रहे हो तो कर लो. बाकी अब सीधा न्यूयॉर्क सेशन के बाद यूएस मार्केट ही ओपन होगा. न्यूयॉर्क सेशन ओपन 7 PM पे एक डेटा है, वो थोड़ा इम्पैक्ट करेगा गोल्ड और सिल्वर को, ध्यान रखना. कोई न्यूज आती है तो देखेंगे उसका कुछ अगर इम्पैक्ट पड़ेगा तो. ठीक है. साइडवेज ही है क्रूड. आना चाहिए मेरे अकॉर्डिंग. मोमेंटम अब इतना साइडवे चला गया तो वी कैन एक्सपेक्ट सम मोमेंटम फ्रॉम दिस लेवल एट लीस्ट राइट नाउ.
the equivalent of around 8 million tons of TNT, or about 500 times the power of the atomic bomb dropped on Hiroshima. 3.1%, Toby. It keeps climbing.
Geez, Neil, get the heart rates going early in the morning just to put that 3% in perspective. If we were playing poker, Earth currently has aces, the asteroid has the 4-5 of spades, and the flop is ace, 8, 9, no spades. So yes, technically a 6 and a 7 could come out next to give the asteroid a backdoor straight, but more than likely the set of aces is going to win. That being said, Tom Brady and the Patriots did come back from 28-3 down when the Falcons had a 99.8% chance of winning based on ESPN's win probability chart. Leicester City did win the Premier League at 5,000 to 1 odds, which is a 0.02% chance. So stranger things have happened. Now a word from our sponsor, LinkedIn Ads. I was cooking dinner last night, Neil, and I got a little high on my own supply. Thought I could make a coconut rice curry soup without really looking at the recipe.
Let me guess, your broth to rice ratio was way off.
Yes, I put way too much rice in. It sucked everything up, and I was left with more of a pilaf dish than an actual brothy soup. Almost made me want to throw it away and start again.
Wasteful, wasteful, wasteful. You sound like B2B marketers who don't use LinkedIn ads. Diving headfirst into a campaign without being thoughtful about where you're allocating resources is like lighting your marketing budget on fire.
Hey, I didn't burn anything, but you're right. I need to be more thoughtful.
LinkedIn ads is like having a recipe for better B2B sales. It lets you filter your audience by industry, company, and role so you don't have to ad-lib like Toby.
Even better, LinkedIn will give you a $100 credit on your next campaign so you can try it yourself. Just go to linkedin.com/MBD. That's linkedin.com/MBD. Terms and conditions apply only on LinkedIn ads.
45 years to the month after the first Miracle on Ice, they just released the sequel. On Monday afternoon, a Delta Airlines regional jet crash landed on the frozen tundra of Toronto's Pearson Airport, clipping a wing, flipping upside down, and skidding down the runway to a full stop. It was a shocking image, seeing this plane flipped on its head, but even more shocking was that there were no fatalities among the 80 people on board, and 19 of the 21 people sent to the hospital with injuries have been released. Canada's aviation Aviation Safety Agency has begun an investigation into how this plane ended up belly up. The conditions were not good at the airport. Toronto got dumped with a ton of snow over the weekend and wind gusts topped 30 miles per hour. However, no other pilots reported problems braking on the runway. Aviation experts credited the aircraft's design and the training of the crew for getting all the passengers out safely. The plane, an Embraer CRJ 900 regional jet, was designed with features to be, quote, survivable in case of an accident, such as having seats that lock into tracks that can withstand 16 Gs of force. The flight attendants were also hailed by local officials as heroes for their composure under duress. Toby, it's been an ominous start to the year for the U.S. aviation industry. As people pointed out on social media, it's no longer cringe to clap when your plane lands.
Yeah, it has been ominous, but also let's just zoom out here in that it is pretty amazing how everyone fared in this accident. The survivability was extremely amazing when you think about the actual accident that occurred. It looks like the plane touched down maybe with one wheel first, which may have caused the landing gear to collapse, which, caused that right wing to hit the runway and then eventually for it to flip over. But let's dive into some of these safety features. You mentioned the seats. The seats not only have that high impact 16 Gs of force that it can withstand, but they also have legs that are allowed to pitch to either side 10 degrees so they don't snap off. That's when things can get really bad. If these seats do snap off, then you end up, falling onto the roof of the plane. So the seats were a big aspect of it. Also, the way that the plane did eventually break was how it was supposed to break. I know it sounds ridiculous to say this is how planes should break, but wings are designed to snap off so the fuselage, so the body of the airplane doesn't come apart. So everything did kind of go to plan, even though obviously the landing did not go as planned.
And the crew, the flight attendants, we think about them as people who serve us peanuts and pretzels and take our drink orders, but their number one mandate is safety, and they are trained to get people off the plane in an event like this in 90 seconds or less. They're also trained when panic happens like this, people are in a state of shock, and you're supposed to tell them simple instructions like unfasten your seatbelt. And so videos show them shouting simple instructions, which is what people need to hear to get out of the plane safely. They can't handle anything more in a state of shock. So it was an absolute textbook response from this crew as well.
And then also the background kind of underlying tension to all this is that a lot of cuts have been affecting the FAA. Transportation Secretary Sean Duffy said that 400 FAA employees were fired recently. Of those 400, those 0 air traffic controllers or critical safety personnel were let go. So it's unlikely that those two instances are related in any way. That being said, though, while all this is happening, while we're seeing just an increased amount of air incidences, you do see the FAA under scrutiny right now for, trimming its workforce. And then the other aspect, too, is that SpaceX, Elon Musk's startup, is also coming in trying to look at how to overhaul the FAA's air traffic control systems. People are seeing that as a conflict of interest, but SpaceX is saying we're trying to modernize these programs. They've been far too, heavily leaned on. They haven't been staffed up properly. They're working with outdated technology. So that is just kind of the background context to these accidents that we have been seeing pop up.
And those accidents, there's been 4 this year already in United States, and Toronto's just across the border. January 29th, that American Airlines regional jet collided with a U.S. Army helicopter, killing 67 people on both aircraft. And then a few days later, there's a medevac plane that crashed in Northeast Philadelphia, killing 7 people. And then on February 6th, there was a plane crash in Alaska, killing 10 people. So this is the 4th, major incident. So, obviously amazing, remarkable, very thankful that no one ended up dead on this particular crash, but it's certainly been a spooky few months for air travel.
Kim Kardashian is here to save Nike. No, she can't suddenly win a dunk contest or have a VO2 max in the mid-60s, but she does have stretchy, affordable, and fashionable leggings that Nike wants a piece of. Yesterday, this sportswear giant that has been going through a bit of a rough patch recently announced a rare fashion collab with Kim's brand, Skims, called Nike Skims. The combo marks the first time that Nike has ever joined with an outside existing company to introduce a new brand. The team up will be geared less towards the everyday wear that Skims currently offers and more towards those sweaty HIIT sessions or Pilates classes that you drag yourself out of bed for in the morning. The goal is to position Nike to be more competitive in the active wear category that has been taken over by the likes of Lululemon and Alo. Nike's struggles are well documented at this point. It reported an 8% drop in sales in its most recent quarter and recently bought its first Super Bowl commercial in 27 years as it tries to regain its mojo. This collab seems like a step in the right direction, Neil.
I think you missed one word in your intro, Toby. Women. This is absolutely key for Nike to get more customers as women. Right now, 40% of its client base is women. Most apparel brands want that to be way over 50% because women shop more, they spend more money. So if you're an apparel brand and you're seeing 40-60 breakdown and 40 is women, that's not in a position where you want to be. So linking up with Kim Kardashian and Skims is a way to get that over the 50% mark. And that Super Bowl commercial, their first in decades, was also geared towards women's sports, which are having an absolute moment right now. Nike said they're seeing double-digit growth in that particular area. So this is a bold move into that space by inking a brand partnership that has never done before.
And it's also arriving at a moment where women's sports are absolutely popping off right now. And Nike and Skims both recognize this. Skims is actually already the official underwear partner of the WNBA. They're also the official partner of the NBA as well and U.S. basketball. But you are right. It's not just that. It's not just women in general, but it's specifically the apparel business as well, because Nike had $8.5 billion in revenue from female apparel last year, $21 billion in male apparel, but still their apparel business as a whole is not as big as its shoe business. And if you look at someone like a Lululemon, like an Alo, they are currently the apparel of choice for a lot of men and women. And so therefore you say, where's our growth opportunity? It is in apparel. And then you look deeper and it is specifically in women's apparel.
And we should talk about Skims. This company is absolutely blowing up. Kim Kardashian, I don't know.
Don't bet against her.
Don't bet against her. She is an incredible entrepreneur. They did $880 million in just direct-to-consumer sales alone last year. That was up from $725 million a year earlier. They're valued at $4 billion. So what does this Nike partnership mean for them? Looks like maybe they could exit at some point. Kim Kardashian wants to get paid out. She owns 5% of the company. Maybe it's leading to an acquisition by Nike or another company by getting the strategic partner on board, or it's an IPO. We could see a Skims IPO. The leadership team has hinted at it a little bit. So there's perhaps an end game in sight by getting Nike on board and doing this particular brand partnership with them and saying, look, we've made it. We are a mature company. Now it's time to take that next step.
Yeah, Skims was valued at $4 billion in 2023. I would imagine after inking this partnership, it's going to be worth a little bit more.
SpongeBob and Squidward are about to get a new neighbor, Mark Zuckerberg. On Friday, Meta announced plans to build the world's longest underwater cable, a 31,000-mile project that aims to connect the U.S., India, South Africa, and other regions across 5 continents. For context, 31,000 miles of cable is long, longer than the Earth's circumference. An estimated 95% of the world's internet traffic flows through these undersea data superhighways. And this initiative, called Project Waterworth, is the first subsea cable project Meta is developing on its own without any outside help. Toby, the only thing getting in Zuck's way now is bikini bottom zoning laws.
Meta wants more control over how it kind of manages its own services, because TechCrunch found that Meta accounted for 10% of all fixed and 22% of all mobile web traffic across the world.
You guys are scrolling on Instagram way too much.
I know, it truly is. I mean, there are billions and billions of users, so that figure does make sense, especially the mobile figure. So of course it wants more control over how that traffic is being ferried undersea across these cables. But there's a lot of issues with undersea cables. Let's be honest. One, there's a lot of damage that can happen. It's the bottom of the ocean. It's a very unforgiving place. But also, geopolitics comes into play a lot more than you'd expect. We already saw Red Sea cables cut last year by Houthi rebels. And then also, European officials have said Russia's been sabotaging our cables. Taiwan has said similar things about China damaging its undersea cables. So Meta has thought about this. They're trying to get around those issues by, one, maximizing the amount amount of cables that they lay into deep waters, and we're talking really deep waters, 7,000 meters deep. And they also think that they've cooked up some new burial techniques that they hope will reduce the faults in high-risk areas, whether it's high risk just from ocean geography or high risk from geopolitics. So they think they've thought of everything, but still a lot of cable stretching a lot of miles.
Yeah, undersea cables have become a vulnerability for tech companies, for countries, and they become flashpoints in geopolitical arenas. I mean, if you look at Tonga, this was not a geopolitical sabotage per se, but Tonga is this island in the Pacific that was hit with this massive underwater volcanic eruption and an ensuing tsunami in 2022. It was basically blacked out for 5 weeks because that eruption underneath the water disrupted a cable that was bringing them internet and cell service. And they were, 5 weeks they were in the dark from the rest of the world. So, it really makes you think when you hear news like this about how much our connectivity and cyberspace and things like that is actually tied together by these undersea cables that Meta's building right now.
And then one final X factor in this announcement is India, actually, because if we go back to last week, Trump had to sit down with India's Prime Minister Narendra Modi. They listed this big list of different areas that the U.S. would collaborate with the United States. And in that announcement, they actually had just kind of a throwaway line about this, Waterworth project. And I think a big kind of factor that you have to include in this is that AI data centers and cloud services in India is a massively growing industry. Meta is looking at that industry and saying, what if we are the ones that connected India to, the rest of the world, connected all these data centers coming online? So I do think that is kind of something that Mark Zuckerberg is looking ahead in the future and saying, where is the growth capability? It looks like it is positioned in India, which is why you heard this project actually teased last week in a sit-down between Trump and Modi. Up next, we have a surprise edition of Toby's Trends coming your way.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Welcome to the Opening Bid Podcast. I'm Yahoo Finance Executive Editor Brian Sozzi. Like I always say, this podcast will make you a smarter investor and a better leader. Before we get to our really cool featured interview guests for this episode, have to do our stock of the day. Stock of the day is Apple. The iPhone SE is rumored to be dropping today. First blush, you think, this is an iPhone priced under $500. Apple will sell some phones, and it's all good. But this could be a real money-making opportunity for Apple. Don't get misguided by that sub-$500 price point on this phone, potentially. New note from Evercore ISI tech analyst Amit Dariani estimates that Apple could sell 20 million of these phones within the first year, could bring $12 billion in annual revenue just from this cheap iPhone, and that could lead to 20 cents to 25 cents a share just from this iPhone alone. And that is not including, does Apple charge anything on this phone for Apple Intelligence? So again, you may see a cheap iPhone from Apple, but it can bring in big money, and it might send street estimates higher. All right, let's get to our featured interview for this episode. I'm really excited because I've followed this guy's entire career. Bausch & Lomb Chair and CEO Brent Saunders. Brent, good to see you, man.
Great to see you, Brian. Thanks for having me on.
Of course, it feels like we joked off camera. You've had like 9 lives in the healthcare industry. And before we get to Bausch & Lomb's earnings, I mean, they dropped today as well. Good quarter for you guys. But is this number right that you've done over $160 billion in deals in healthcare over your career?
That's actually wrong.
Wrong.
I think the number is over $300 billion.
$300 billion.
Yeah. Yes. I had JP Morgan do an analysis of it about a year or so ago, and I forget the exact number, but it was somewhere close to $300 billion.
Yeah, so let's go through a little bit. I mean, this is your second stint in Bausch & Lomb, but for those not familiar with your career, I mean, you started essentially at Bausch & Lomb 2010 to 2013, sold the company, ended up at Forest Labs, bought Allergan for billions, then Allergan went to AbbVie for, what, $63 billion? I mean, what has made you, or what has driven you to drive all these big deals?
Yeah, it's interesting. It's funny because I think, and appropriately so, I get it. A lot of people think of me as a deal person, and it's so counter to what I think about myself, and so there's always that juxtaposition of the outside view versus the inside view. Look, my whole drive as a company CEO is to create value for shareholders, and I hope to do that through operating well. But sometimes you create such a valuable company, somebody else is willing to pay more for it and give that return to your shareholders. And so I'm always open-minded about that. I always say as a public company CEO, your stock's for sale every day on the stock exchange. And so if you can get a great return for your shareholders, you have to be open-minded to that.
And you have really your childhood was rooted in healthcare, no?
My father was a doctor, and my first job, I was a lawyer early in my career, was at Thomas Jefferson University and Health System in Philadelphia, and so I worked in a hospital for a couple of years. Then I went into managed care for about a year, and then into consulting, and then the pharmaceutical industry. So my whole career has been in all the different aspects of healthcare.
I read some story, it was a profile of you, I think over a decade ago. You were selling shampoo at the age of 6. I mean, you were somewhere, you always seem to be involved with healthcare. I mean, what fascinates you about it?
Yeah, I always, and it's funny because I once got offered a job at a well-known office supply retailer to be CEO. And I thought about it for a night. And I remember saying to myself when I woke up in the morning, will I be obsessive? I always want to be obsessive about the job I have. Can I really motivate myself to sell paper clips and staplers and notepads? Or do I really love selling things that change people's lives, hopefully for the positive, right? And the quest to solve unmet needs in healthcare, the science, and really, like at Bausch & Lomb, helping people see better, to live better, really is extra motivation that allows you to get to that obsessive kind of level in your mind.
That wasn't a recent offer, because who the hell wants to run Staples or Office Max or Office Depot?
This was back in 2013.
Okay.
Yeah, this was 2013.
Oh, God, you walk into a Staples, Brent. I mean, I can't think of a more depressing experience. Holy cow.
Oh, it wasn't Staples, to be fair, but a competitor to Staples. Yeah.
Okay, all right. Fair enough. So let's talk some Bausch & Lomb. Like what, you didn't have to take this job when you came back a couple years ago. Like, what is so attractive in your mind about the eye care market?
Yeah, it's interesting. I almost didn't take the job. I actually went back and forth with the board for about a year before I ultimately did it. And I was drawn to it because of my passion for eye care. I started in this industry, as you mentioned, in 2010 as CEO of Bausch & Lomb. And then ultimately when I acquired Allergan was a big eye care company. It actually started as an eye care company. And so I have been more or less in this industry for 14, 15 years. And the one thing that's really cool about ophthalmology is if you really, I'll pose the question to you, Brian, what's the most important sense you have, right? And if you lost it, the profound negative impact on your life, it's your eyesight. And we've surveyed humans, for decades, how important eyesight is to the quality of life. And the community of ophthalmology and even optometry is a great community of eye care professionals. They really appreciate innovation. They like to try new things. Many of them are inventors and contribute to the innovation ecosystem. And it's a really close-knit community, even though there are hundreds of thousands of them around the world. It's a really close-knit community of people who are really trying to help people have a higher quality of life through better vision. And it's a really cool field.
And looking at the results for the most recent quarter, I mean, the contact lens business up double digits, U.S. up double digits, international constant currency up double digits. The margins look to be pretty good on the business overall. Is there a breakthrough? I mean, I looked at the slide deck, but like for the lay person out there, is there a breakthrough product in the business of contact lenses that you're working on?
We are actually. It's interesting. In when was it? 1999. We introduced the current materials that are the vast majority of contact lenses, silicone hydrogels. And the whole industry now is driven by silicone hydrogel growth. Those are the daily disposables, and even the FRP, the monthly replacement lenses, are predominantly in that technology. And no one has innovated a new technology since 99. So if you're an optometrist in your mid-40s and you're fitting contact lenses, you've never really experienced a new material. You've seen new deviations of silicone hydrogels, perhaps with new optic designs on it or new modalities, daily, monthly, weekly, but you've never had a true innovation. Our scientists in-house created a new material that we're going to drive into clinical trials this year and potentially launch in 27. Could be a breakthrough, a biomimetic lens that really mimics the biology of your eye in a contact lens. And we're hoping the clinical trials will prove it out, that it's healthier for your eye, but it's also much more comfortable for your eye, and really potentially upgrade the standard of care of contact lenses in just a couple of years.
Brent, I've been wearing contact lenses since I was 16, and some 25 plus years later, to me, they feel comfortable. How might they feel different on my eye?
Well, I think, some of the new technologies are certainly very comfortable. We have one in Infuse that has been growing well over 70% this year. So fantastic daily contact lens. But, we're always looking to even improve comfort and improve the health of the lens on your eye. And it's quite difficult to do, that's why no one's done it in a long time. But you can always get better, right? And our job is to always, look at the standard of care today, which is probably what you're wearing, and say, how do you even make that better? And it's not just comfort. Comfort's a very important dynamic, but it's health of your eye, and then frankly, improving the vision quality, right? You want to be able to see the computer, right? A lot of people are locked in now doing what we're doing, right? Talking on the computer.
Somehow this is destroying my eyes.
Right.
The past couple of years, it had to have taken a toll.
It has actually, and it is an epidemic. It's called myopia, and that's a totally different issue. And children today, particularly, are really suffering from this interaction with their phones and computer screens so close to their face. Not to change topics, but if you really think about it, your eye needs to be exercised like your muscles. You look like you go to the gym, right? You exercise your muscles.
So many times. Thank you for noticing. I appreciate you.
Yeah. Well, I'm just pointing out, right? And if you think about your eyes, particularly for kids, if you don't exercise your eyes, and what I mean by that is get outside, look far away. Your eye is a muscle. It contracts and moves. And if you're always stuck in this close vision kind of situation, you're not exercising your eye like a muscle, and then you destroy your vision, and it can be permanent. And so we really do have this epidemic. China's already declared it an epidemic. It is happening in Europe, in the U.S. as well. And we are working on technologies, particularly for children and adolescents, to try to correct the myopia epidemic. It's a big problem.
What the hell, Brett, is going to happen to our eyes as Facebook rolls out more of these interactive glasses? I mean, this is where it seems like big tech is going. I mean, you not only have the 3D goggles, but you have sunglasses that are portraying images. I mean, these have to be massively destructive on our eyes.
It is. It leads to not only myopia, which is the destruction of your far vision, right? But it also leads to dry eye and lots of other conditions that which is contributing to the growth of the eye care market is all this screen time. It really is a problem. And I always say to my kids, get outside, look around, get off your screens. Even if you're during the day in your job, that I have that 10-10 rule, like look away for 10 seconds and try to look far away, every 10 minutes. Now it's hard to do, and it's hard to train people to do that. But it's a real issue, and it's only getting worse.
Oh, I can't even imagine doing that. All right, Brent, hang with us for a second. We're going to go off for a quick break. We'll be right back on Opening Bid.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
All right, welcome back to Opening Bid. Having a great chat here with Bausch & Lomb Chair and CEO Brent Saunders, healthcare veteran, told me at the top of the show my number's wrong and the amount of deals he's done. Had a study. Well, over $300 billion in deals. This guy's just a legendary deal maker in the healthcare space and still a pretty young dude. So recently, Brent, there's been a lot of deal chatter on your company. Earlier this month, you said no deal, no dice. But you didn't rule it out from happening, right?
No, well, look, as a public company, you can never say never, right? As I said earlier, our stocks are for sale every day on the exchange. That being said, I think I also told you the only time I'll contemplate a deal is if I believe we can create more value for our shareholders with a deal. And in this case, as we are looking to potentially go private in the transaction I think you're referring to, we just couldn't find the valuation based on our expectations of the business. And so, I think the hardest thing sometimes to do is say no, but I think here it was the right thing to do, given the promise of our business. The future is very strong. You see the operating results this quarter. We've had 2 years since I've arrived. Our growth CAGR is 10% in an industry that grows mid-single digits. So we're taking market share. We're growing faster than our competitors, and we believe we have a very valuable business. And so we're not going to sell it cheaply.
Were the suitors interested in your business? Were they undervaluing your product pipeline?
They always do. And R&D is a risky business, as you may know. And so, we tend to have the most insight into the programs because we live them, and our team stays with them day by day. And acquirers, even in this situation or any situation, always tend to discount it. I think I was explaining to you off camera, I was developing migraine drugs at Allergan, and there were so many skeptics. And now those drugs are both approved, and they're doing great. AbbVie's doing an amazing job with them. But they're, when before they were approved, they were massively discounted in our valuation. And now they're big drivers of value for AbbVie because they're approved and they're doing well. So there's always skepticism in R&D. I expect that, but there was definitely a deeper discount ascribed to our R&D pipeline, whether it be in pharma or contact lenses or surgical or even consumer, than I think the value we see in those programs.
I mean, your company it's a legendary name, legendary business. It's a big business. I mean, how much do you think it's worth?
More than our stock trades, unfortunately. But, look, it's not about what it's necessarily worth at this moment today. I think it's what do we believe we can do with it over the next couple of years. And given our remake of this company since I joined 2 years ago, I think our future has never been more exciting. Our pipeline we're a 170-year-old company, and I'm a student of history. Our pipeline has never been stronger. Our operational capabilities have never been stronger. And our, this is a great industry. And so we're in a great industry and well positioned in it with a great team. We have more work to do to continue to improve and get better, but we're on a great path, and I'm super excited about the future. So I think our valuation is much higher than what the market ascribes to it.
So you think, so there's just no more talks. Like you're going to drive value from the business. Do you think this is a process you restart this year?
No, I doubt it. You can never say never, but look, we have a big ambitious plan for 25, and frankly, as I look at 26, 27, it's even a bolder plan. And so, we're heads down and focused on operating the business and driving the best results we can.
So there's lots of, suffice to say, there's a lot of healthcare focus right now with the new administration. Now you have 2 plants in China. Does your business get impacted by tariffs?
On a de minimis level, we have a very broad manufacturing footprint, and it's both a strength and a weakness. And it's both a strength and a weakness, right? Because it's so broad, it's a little less efficient than perhaps our competitors. But as you mentioned, we have 2 plants in China, but they make for China. Our plants in Europe make for Europe. Our plants in the U.S. make for the U.S. So we don't move a whole lot of product around the world that would be impacted by tariffs. We make most of our products in the market for the market that it's in. So we're a big U.S. manufacturer, which is very rare in our industry. We make all of our contact lenses in the U.S. for the U.S., all of our surgical products in the U.S. for the U.S., all of our pharmaceuticals in the U.S. for the U.S. So we're not moving products. Now, we do move some raw materials, API or componentry, and so there could be some impact there, but it would be de minimis.
A lot of leaders I've talked to, Brent, that do business in China, a lot of restaurant CEOs, to be honest with you, they voice concern that it might be harder to do business in China with their Chinese operations because of everything that's going on with trade concerns. Do you share their concerns?
You know, I don't necessarily for us. I understand why they may say that. Look, I think I'll be in China next week. Actually, I'm going over there to Shanghai next week. We're pretty big in China. We've been there for a long time. We entered China in the 80s, and we're still in a joint venture structure, which is the old way you had to go into China. And so we're kind of a quasi-global local brand in China. Our team has done an amazing job really creating direct-to-consumer capabilities in China. And our growth there has been quite strong, particularly in our contact lens business, has been and surgical as well. But both of those businesses have had double-digit growth this year, and I'll be there next week. But the team is doing an amazing job in China. Really proud of that team.
I'll put this question to you, Brent. What is, just given all of your experience over many decades in healthcare, what is the problem with our healthcare system? Why is everything so expensive? Like, where is there someone to blame, a product, a service, a company? Like, and what's the solution here to fixing things?
Yeah, look, I think there's a lot of blame to go around. It's a very complex system with lots of different moving parts. And I think the fix is quite complicated, but if I had to pick one area to really focus on to fix it, I really think it's quite simple: transparency. I think that, you know, if we look at what Doge is doing, right, and you know, whether you like it or dislike it, the one thing that's hard to criticize Doge on is they're bringing massive transparency, right? They're putting out on the web or on X every day, you know, what they're doing, what programs are being canceled. You know, we should have real pricing transparency on healthcare services in the United States. We should understand why we pay what we pay, where you can get it perhaps at a lower cost, who's getting paid, where is the money going. And I think if you do that, you're going to find a lot of inefficiency in the system. That being said, we have the best healthcare system in the world for most, not for all, and we need to solve that too. But there's no better place to be if you're truly sick than the United States, because our innovation, our access to the best doctors and care is better than any other country. We just need to make it more accessible and affordable for everybody. And there are a lot of fixes, but transparency, I think, would start that all really rolling. And I think the president can do that. I know President Trump talked about that as an executive order in his first term, and I hope he really reconsiders it in the second term.
Does the problem with transparency lie more with drug makers or the drug middlemen?
Well, I think it will probably point out some inefficiencies with the middlemen for sure. But I also think it will, in healthcare services, why when you go to one hospital and you want to get an MRI and it's, let's say, $700, but you can go to a freestanding MRI center and get it for $200. Why shouldn't you as a consumer know that, right? And it could just be a block away. And so I think we need transparency, not just in the pharmaceutical sector, but we need it across the board in all services. You've probably gone to the doctor and you get your bill. Let's say it's $1,000, and your insurance pays the doctor $200, right? Mm. And the problem with that is because you have insurance, you get that $200 negotiated discount or $800 discount, right? You only pay $200. But if you didn't have insurance and no one was there to advocate for that discount, you pay the highest price possible. And that doesn't seem equitable either, right? And transparency goes a long way to start solving why are you paying $200 but the next person's paying $1,000? Why is that differential?
In the last couple minutes, Brent, we always love to get our hot takes, a hot take from a guest. Let me put this one to you. And this one's going to be a little out there because I thought you're a cool guy, and I think you've been around the industry a lot. So I continue to see these posts from Brian Johnson. You ought to be following what this guy's doing, trying to reverse engineer his age. I don't even know if this is called, I'm saying it right, is reverse aging the future of healthcare? Am I someday going to be taking 70 vitamins and measuring things like he's doing?
Well, I think I do follow Brian. I think he's out there on the extreme of this, right? And this is what I say to all my friends, because I invest a lot and I'm involved in the anti-aging movement, and the science is tremendous. And what's going to come over the next several years is going to be terrific. That being said, before you take your 70 vitamins, my advice to everybody, the triangle of longevity or extending health span, healthy living, right, is eating well, sleeping well, and some exercise. And before you take your 70 vitamins, if you're not doing those 3 things well, you're really, fighting an uphill battle. And so it starts with behavior modification, right? And really focusing on your sleep, your eating, and exercise. And then if you're really the best at that, okay, start thinking about what else can you do to supplement. Otherwise, you're chasing that much gain and you're leaving that much on the table because you're not following the triangle of healthy lifespan. And so a lot of it is within our control. It requires discipline. It's hard, and people don't like that. They love a pill versus the hard work. But really, I wouldn't take any pills till I mastered the triangle of sleep, eating, and exercise.
Brendan, you left out, of course, wearing amazingly comfortable Bausch & Lomb contact lenses if you need to.
Absolutely.
Brent Saunders, good to see you. We'll talk to you soon.
Great. Thank you.
All right, and be sure to hit us with all those likes all over the podcast platforms, YouTube. Appreciate all the comments. I try to answer all your questions. Keep them coming. Bring it on. I appreciate the intense activity. We'll talk to you soon.
Are you ready to master the markets and, dare I say, become a better leader in the process? Well, Yahoo Finance has you covered with our new full suite of original podcast content. Whether you're a seasoned investor or you're just starting your financial journey, we offer invaluable market insights and strategies to help boost your portfolio, build your wealth, and make you a successful investor.
Podcast that will make you a smarter investor.
Welcome to Stocks in Translation. I'm your host, Jared Blickery. Welcome to Financial Freestyle.
Hi, I'm Bob Powell, and welcome to Decoding Retirement.
Welcome to Living Not So Fabulously.
Welcome to Trader Talk, the podcast that dishes out the market straight up.
Welcome to Capital Gains. I'm your host, Madison Mills.
Welcome to Word Money. I'm Patrick Murphy.
And I'm Dan Coons.
From Wall Street to Main Street to the C-Suite, we are your daily lifeline, because behind every great investor is Yahoo Finance. Join us on yahoofinance.com, the Yahoo Finance app, or wherever you get your podcasts.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Brad Smith alongside Madison Mills this morning. Let's get to the three things that you need to know today.
First up, U.S. stocks stalling in today's trade after the S&P 500 reached an all-time high in Tuesday's session. That was driven by a rally in the chip makers. Meantime, Meta's record 20-day run finally coming to an end after the social platform added more than $320 billion to the company's market value.
Plus, investors are grappling with Trump's latest plans to impose tariffs on about 25% on cars, semiconductors, and medicine imports, with an announcement coming as soon as April 2nd in a move that would represent a widening of his trade war. Now, Trump has previously announced 25% tariffs on steel and aluminum that are set to take effect in March. His latest comments are his most detailed yet in specifying other sectors to be hit with levies.
And traders' attention also focused on Federal Reserve meeting minutes, which could offer clues on the monetary policy outlook. Several officials, including Governor Christopher Waller and San Francisco Fed Chief Mary Daly, have signaled rates will stay on hold until inflation slows significantly.
The U.S. stock rally fading today as President Donald Trump threatens 25% tariffs on foreign cars, semiconductors, and pharmaceuticals. This as the 10% additional tariff on China is in effect, and tariffs on steel and aluminum are expected to take effect mid-March. We're taking a look at futures here this morning. They are down across the board for the Dow, the S&P 500, and the NASDAQ. Fractionally as they may be, there's a few things, of course, to take away with some of the latest announcement and the details that are starting to be clarified around what would be additive here and the industries specifically that would be impacted here. And you think back to what Jim Farley had said, who was the Ford CEO, just a few days ago, talking at an investor conference about a week ago, saying a 25% on Mexico, Canada would, quote, blow a hole in the U.S. industry we have never seen here. Worth noting as well that Ford was one of the companies that actually donated to the inauguration fund for President Trump as well. They had anticipated that there would be tough tariff talk, but the extent of which unknown at that time, now being a little bit more clarified.
Yeah, it's interesting, particularly that we are seeing this kind of ratcheting up of tariffs. If we pull up that calendar again, you can see, as a reminder, we already have that 10% tariff on China, proposed tariffs on Mexico and Canada set to go into effect early March. As a reminder, that was delayed by a month after negotiations between the U.S. and Canada and Mexico. They got a little bit of a reprieve with a month there. We also have steel and aluminum coming up. If we can pull up that full screen there, you'll be able to see that. Having said that, it is interesting that the market continues to kind of slough off any potential tariffs here. And again, you can see that 25% tariff on steel and aluminum, cars, drugs, and chips. That sector in particular in focus because that is the news from this week. Trump talking specifically about tariffs to come on those sectors. But again, the market's sloughing that off. We're not seeing a huge sell-off in those car names, in pharmaceuticals, and certainly not in chips, which drove the S&P to another all-time high yesterday. So is the market saying that Trump is just using tariffs as a negotiating tactic, or is the market missing something that could be more sinister? And that is the key question for investors moving forward.
Yeah, I was looking at a note from Macquarie yesterday, and they said despite uncertainties surrounding some of the new immigration tariff policies, they actually believe that there's a more favorable environment for other areas of the market that they're looking at here. So it does speak to your point of how much some of the biggest asset managers and money managers out there are saying until there is a more widespread or even long-standing impact, and that would take us into the conversation around how long are the tariffs actually staying on the table until a negotiation is actually coming to fruition. That is something that could have a larger GDP impact, and until they see that GDP impact, it's unlikely that we would see a major revision from some of the largest money managers out there, as we were mentioning a moment ago. But in terms of some of the GDP impact, I was looking at the Tax Foundation and some of the analysis that they were running. Even prior to the latest tariffs that were announced, they were already anticipating that there would be a potential net negative headwind to GDP of about 0.3% here with the tariffs that were already talked about and those that are still on the table from the first Trump administration flowed through the Biden administration and are still something that industries are having to navigate through.
And that's significant given that one of the three tenets of Treasury Secretary Scott Bessent's approach to tariffs is driving growth stateside. Is this idea that tariffs will lead to more U.S. production, but estimates from the Tax Foundation indicating that GDP will be put under pressure due to these tariffs. So a question remaining about which of those two is going to come to fruition and where the priorities will lie after negotiations, where things will kind of net out. But let's turn now to the impact of potential tariffs on the chip sector. President Donald Trump threatening those levies of 25% or more on semiconductor imports. So joining us now with more on this, we've got Maribel Lopez, the founder of Lopez Research. Maribel, it's great to have you on here. I want to talk specifically about the impact of these tariffs on some of these chips names in particular that drove the market to all-time highs early this week. Is the market missing something sinister when it comes to tariffs, or is the market right to kind of be sloughing off any potential negative impact?
This is really an opening volley by Trump to say he's really serious about tariffs. Tariffs will happen. The amount of the tariff and what the negotiation standpoint is still unknown. So this is like, hey, I'm throwing it out there. You're going to come to me. We're going to have a negotiation. And we're going to try to figure out how you are going to invest more in America. And that's really what I see as the statement that Trump is making here. This is why we're looking at April and not tomorrow. If we're looking at April, there's plenty of time for someone like TSMC to call and say, hey, here's how we're feeling about investing more in foundries in the U.S. as an example. Same for Samsung and other companies that already build chips here, but not at a very significant standpoint.
Are there industries that you think are more likely to be successful making sure that they're included in an exemptions or an exclusions list as they try to vie for the ear and the mind of the president?
So some companies actually already have a strong foothold. You mentioned the automotive industry. If you look at somebody like BMW, they already manufacture a significant portion of what they sell in the U.S., upwards of about 50% in the U.S. So they actually have a better negotiating ability than, say, Samsung, who does manufacture some goods here, such as some of their home products, but not necessarily enough. So we're seeing that it is wildly unevenly distributed across the various companies and across the various sectors. But I think the call to action for everybody right now is to try to figure out what they can do to make a play to say that they're going to invest in America to either create manufacturing jobs, to create investment in some other type of category that we would consider as beneficial to the economy. And this is why the fund managers are not overreacting to the statement at this point, because they understand at this moment it's still a negotiation.
So it sounds like you think the market is right to view this as that negotiation, not as something more serious. But do you think that the Trump administration is kind of angling towards universal tariffs by throwing out these larger numbers like a 25% to kick off those negotiations? And could there be risk associated with that?
I think they're incredibly serious about tariffs across the board. I think this is definitely a statement that says no industry, no country will remain unscathed by tariffs, and that you have to have a plan on how to work with us. We are serious about rebalancing, whatever they think rebalancing means, but they have definitely indicated that they are serious about it. So the real thing to watch here, to your earlier point, is when do they come in effect? How long do we expect them to be in effect? And what would be considered a sufficient and necessary investment in the U.S.? But clearly, there are many companies that are looking at this saying, if you're a auto manufacturer, say in Japan, if you are a semiconductor manufacturer in Taiwan, you're looking at what could this do to my profitability? How do I find a way to make sure that there's a sufficient investment that we don't end up with a 25% tariff, which is a significant number for any company's.
Maribel, almost a two-part question here. Number one, as you think about the companies that are kind of bracing for this and trying to figure out how to navigate around it, what does that mean in the near term for their innovation pipeline? Do they become a little bit more wary about how they can generate some of these cross-border business opportunities at the same time as they're making sure that they're investing further in an R&D pipeline? And then I guess on the other side of this, you know, as they're thinking about their relations in other countries, how do they also need to strike a balance of saying, okay, yes, we agree with you, President Trump, but also going to other administrations elsewhere around the world where they're trying to operate and say, hey, we're hoping that you net out a good deal here too as we're trying to operate in your region?
So I don't think this was unexpected. I think the issue, if you look in the semiconductor space, there's a tremendous amount of innovation that is not related to the actual manufacturing, which is really what, say companies like AMD and Qualcomm sell. And they're looking at companies like TSMC for manufacturing. Now the question is, how do we think about redistributing that? And is there a path where we can say we're not going to disrupt how we actually manufacture, and we can still manage to migrate this forward into keeping the innovations that we're really good at, but leveraging the global economy? This, I think, is actually a very tricky balance. So we're looking closely at how fast, for example, you can build a foundry. Even if you wanted to move all your manufacturing to the US today, it is physically impossible. So there has to be some kind of negotiation on a global scale of where and how and what the timeline looks like. And so we've had the opening volley to say negotiations start now. We need to get a plan between now and April to make that happen.
Which specific chips names are insulated from the risks of those potential export controls and the tit for tat over tariffs in your view?
Honestly, I don't see any chip company or any type of company at this point being fully insulated from a risk at this moment. This is one of these moments in history where you look back and you say, I need to make a plan.
Yeah, so that in mind, how are we thinking about the potential impacts to gross production as well here in the U.S.? If we're talking about where some of these chip companies would anticipate they'll be able to generate purchase orders elsewhere around the world and then ship those chips, does that also institute some type of, or at least elicit some type of GDP impact from your evaluation?
So one of the things that we are concerned with is on a global scale, if we enforce tariffs, what kind of tariffs do we see on the other side? So there actually is global risk for how much product gets sold outside of the U.S., not just the consequences of inside the U.S. So we do foresee that there could be some slight stall. Now, I don't think that this is a long-standing thing. I'm firmly of the belief that this is still in negotiation play standard, but you have to be running scenarios that say, on the global standpoint, do I expect, for example, there to be a 10 or 20% decrease in China? Do I expect there to be a decrease in the European landscape? So that is actually on the table. So right now, everybody's sitting with their Excel spreadsheets, running numbers, trying to figure out how they make this happen, trying to actually figure out what should be their ask. I imagine it's going to be very busy at the White House between the whole global landscape and all of the US-based companies going to the White House trying to make a play for what they think is the right move. So these are the times when strategy is going to be created. There will be winners, there will be losers, but we absolutely think that there's going to be a shift in the dynamic of both how we see manufacturing happening, how we see the job landscape.
Let's talk about NVIDIA, because we're gearing up for NVIDIA earnings here. And it's going to be interesting to look at the market reaction, because there's this question of risk and whether the bigger risk is in AI earnings disappointing or in DeepSeek proving out their efficiency further. Which of those two do you think has the bigger potential risk for a company like NVIDIA?
If you look at a company like NVIDIA, they can actually sell every chip that they produce right now. The real risk upside for them is, can they produce enough to overperform what the market's expecting of them? The market has had incredibly high expectations for NVIDIA every single quarter. They have blown it out of the park. At some point, we just see a stall, not even because of what NVIDIA builds or because what's built in the landscape, but because of just the ability to assume these chips, build the data centers, have the AI services up and running. So I think we're headed for a disappointment on the AI landscape on multiple fronts. One of them just being sheer data center capacity, energy utilization, buyers buying actual AI services. There's a lag between building and buying, and we have not crossed that chasm at this point.
Maribel Lopez. Maribel, thanks so much for taking the time here this morning. Appreciate it.
Thank you.
Coming up on Morning Brief, everyone, we count you down to the opening bell on Wall Street in a little bit. Plus, we've got a look at Nikola as the embattled EV maker files for bankruptcy. And we check in on Occidental as the company falls after earnings. How does Warren Buffett feel about them? We'll discuss that, much more on Morning Brief.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Stock futures taking a breather after the S&P 500 hit a fresh record high on Tuesday. Our next guest believes the AI story is still intact in tech, making it his most preferred sector within equities. Joining us now, we've got Jason Draco, who is the UBS Global Wealth Management Head of Asset Allocation. Jason, great to have you here in studio with us.
Great to be here.
So talk us through that positioning that you're identifying right now within tech.
So obviously DeepSeek was sort of disrupted some of the thesis overall for the tech story. But as we kind of step back and look at, I think, the big picture of like what that model entailed, one, it seems like it's really consistent with the developments in these large language models. It looked like it was a game changer, but when you look at kind of the arc of the development of these models, it's still kind of consistent with improvement, lower costs. That wasn't ultimately maybe the bigger game changer. And what we also saw coming out of the earnings season is that the big mega cap companies actually ramped up their CapEx spend. They know what's going on. It wasn't like this kind of caught them necessarily off guard. Yet despite that, they kind of ramped up their CapEx spending. So we're seeing a big increase this year in CapEx spending. The thesis is still very much in play. Maybe the winners and losers shake out a little bit, but the overall thesis, I think, is still on track.
So the AI-driven momentum rally, still on track in your view, but it seems like there's been this kind of rotation under the hood of the S&P. Yes, we're still getting all-time highs, but you're seeing financials contributing more frequently to that. Does that mean that there is a risk to some of those big tech names that's maybe not being fully appreciated by the market, because why not keep riding the momentum?
So I think like we've seen in the past year and a half, periods of time, a couple of weeks, a couple of months, where the markets rotated, you saw small caps do well. You're seeing European equities do well. Those have been under when sort of sometimes the momentum goes that way, you got investors kind of chase it, but it's never really been sustained. And so I think one, you need the macro conditions to be very favorable for the sustained rotation towards value stocks, cyclicals, financials like that. So I think that could happen, but every time there's a bit of a hiccup, the tech stocks, these kind of mega cap names, are the ones that sort of investors kind of go back to. I think that will continue to play out, and unless there's a real disruption in the earnings story. And thus far, we expect some moderation of earnings growth from incredibly high levels to still really good levels. So I think the thesis hasn't changed. So right now it's a little bit of kind of positioning the markets, a little bit of rotation, more so than a fundamental change in the overall story for either AI or the macro story in general.
It seemed like at the beginning of the year, S&P 500 earnings growth forecasts were largely in consensus at about 15%. Do you expect us to come down dramatically from that level, and if so, where?
Well, if you're talking about 2025, it depends also whether it's bottoms up or top down. I think the bottoms up analysts tend to be a little bit more optimistic, and those get kind of revised lower. Top down, we were at 9%. Based off of the earnings we can see for 4Q, when we're about 80% way done the season, might be a little bit higher than our expectation. So it just sort of shifts the level higher, but our expectation for the S&P this year is 270 per share for the overall index. That implies about an 8 or 9% earnings. Now, the guidance we've gotten from companies for this year has actually been sort of coming down a little bit faster than typical. I mean, typically, companies kind of guide lower than they beat. We know how the game works. It's been a little bit more
sandbagging out there.
A little bit, setting the bar at a level they can kind of clear, right, comfortably. So that bar has been a little bit lowered a little bit more, but overall the story still looks kind of relatively positive for the earnings. So it just depends on kind of where your starting point is. We're still seeing close to double-digit type of earnings growth this year. Nothing in the guidance thus far suggests otherwise.
But it does seem like there's still a bit of disappointment from investors when that guidance doesn't come in and show continued record-breaking earnings growth. Are any dips off of earnings, let's say NVIDIA, for example, if they disappoint on guidance and there's a dip in the stock, is that always viable in your view for the big tech names?
Well, it has been viable. If you just look at what's been happening this far this year, retail investment flows and buying has been very, very strong for the first 6 weeks of the year. We saw it also in the tech space that when there was those pullbacks in NVIDIA, retail investors in particular were buying. So I think there's a buy the dip mentality. These stocks have done so well. I think a lot of people feel, if they didn't get in before, if there's a pullback of 15, 20%, that's a chance to kind of re-engage. So until there's a real crack or, significant crack in the thesis, I think those dips will be bought, not only in the mega cap names, but frankly, equities overall. I think that until those people really believe that the economy could roll over in some way, then any sort of pullback is great. Now valuations get a little more attractive and we'll put money to work. So I kind of think of it as there's an investor put in the markets. Anything that's, say for the S&P, like around 5,700 in that range, I think you actually get a significant amount of buying, sort of resistance, unless things look like they're really deteriorating in some way.
What about within fixed income? What is the pass-through there as you're hearing from Trump administration that's banging the table about lower interest rates?
Well, it was interesting. About 2 weeks ago, Scott Bessent, Treasury Secretary, came out and said, when Trump is talking about interest rates, he doesn't mean the Fed, he means the 10-year Treasury, which is kind of, I have this idea of there's an other Trump put, not just for equities, but for Treasuries, which means you don't want rates to go too high, so you have to have essentially kind of a floor on the price of Treasury bonds, therefore a cap on interest rates. To have that, you basically can't have policy that's too inflationary. So in some way, it's sort of like, I think the bond...
It's difficult when you're also rolling out tariffs at the same time.
This gets into like a whole discussion of are they credible or not? How much of a negotiation ploy? I think the market right now still believes it's much more escalate to de-escalate and they won't follow through. There is a risk that, of course, they do, that happens. But it was interesting when those tariffs on Canada and Mexico were announced on the Saturday of 25%. Monday morning when the markets opened, rates went lower and they actually went higher when they were sort of pushed back for a month. To me, that's an interpretation the market believes ultimately tariffs will be worse for growth than they are inflationary. The Fed will look through the inflation piece and you're much more about kind of growth slowing down. The uncertainty around it could cause growth to kind of slow quickly. And I think that's what the bond market, that initial 24 hours suggests that. So yes, it could be inflationary, but I think the market sort of view it as more of a growth hit.
But that might be a positive view for the market so long as the inflationary risk doesn't keep the Fed higher for longer.
Well, then you're balancing what's better, lower rates for the markets or the growth hit. I think the uncertainty at a minimum means you're probably sideways, you're probably range bound. Again, if the lower rates, if it's not recessionary, then there's only so far equities could sell off, but it's hard to get really, really constructive on equities as that's kind of playing out.
Really great overview, Jason. Thank you so much for coming in studio with us. Really appreciate it. We're going to take a look at a trending ticker on Yahoo Finance. Now, long-challenged EV maker Nikola has filed for Chapter 11 bankruptcy bankruptcy after failing to raise funds or secure a buyer. The company's downfall has been years in the making, mired by a series of scandals and funding struggles. Back in 2022, the former CEO, Trevor Milton, he was convicted of fraud charges related to misleading investors around the company's operations. And remember, the company is one of our SPAC plays, going public via SPAC back in June of 2020. At its peak, the EV company was valued at $30 billion, more than Ford at the time, which is just a great example in kind of these SPAC plays that were really risky. And you just see that massive run up in the stock following its IPO in 2020. And then obviously just the huge move to the downside following that rout in 2021 into 2022 that they just were not able to recover. As a reminder for folks too, this is an EV play. This is one of those EV names that was trying to compete in the broader auto space here. They were able to sign a multi-billion-dollar deal with General Motors at one point, and they were this kind of darling of the auto space, but clearly falling from grace over the last couple of years amid a slew of financial and executive challenges.
Well, yeah, there's also the self-imposed challenge of going and pitching your product when it's really just a question of, man, this looks so good. Is it actually AI? And turns out it was actually closer to being fabricated and AI than an actual real produced vehicle that the company was going to be able to produce at scale, which became the issue. And so now you have the claims of fraudulence that came forward against Trevor Milton. And then you additionally had larger partners questioning, okay, what would be the timeline to delivery if we did even create a purchase order and decide to have you follow through on that? And so that's the larger impact here. They say, like other companies in the electric vehicle industry, they faced various market and macroeconomic factors impacting their ability to operate. In recent months, they also took numerous actions to raise capital, try to reduce their liabilities, clean up the balance sheet, and preserve cash to sustain their operation. Unfortunately, they say their best efforts have not been enough to overcome those challenges.
I want to end on this stat that I think is fascinating. Almost every EV company that went public via a SPAC has failed, which is just such an interesting reflection on that era of financial markets and the amount of companies that were going public via SPAC and kind of the froth in the market at that time coming out of COVID and seeing the impact that it has had on some of those names today. Obviously, not every name that went public via SPAC has failed, but interesting to see kind of the struggles in the EV space in particular.
Yeah, no, I'm taking a look, and one of them came to mind immediately, Polestar. Take a look at shares of Polestar, how far that's declined. That was a $20 billion SPAC deal, I believe, and ultimately, what? It's trading at 20 cents a share right now?
Yeah, so, penny stock.
All right, we'll continue to watch all these names, much more, everyone. All your markets action straight ahead. Stay tuned. You're watching Morning Brief.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
And that is your opening bell on Wall Street. Taking a look there at Fiverr at the New York Stock Exchange. You've also got the NASDAQ on your screen. Want to take a look at markets kind of sputtering into the trade this morning after hitting another record all-time high, the second of the year on Tuesday. By the way, this time last year, the market had already had 11 all-time highs. So when you put it into that context, the all-time high is not as exciting so far this year, but certainly good news for investors. It's interesting to see kind of the sell-off that we saw on Thursday in treasuries in particular. We saw treasury yields moving higher following this idea of more inflation to be baked into the market, perhaps a little bit fueled by the commentary we got from President Trump about tariffs to come on autos, chips, and pharmaceuticals. So we will continue to be having conversations about the impact of those tariffs. As I mentioned here, you see a little bit of a sell-off happening in the major averages. The S&P down nearly 0.2%. Your tech-heavy NASDAQ down nearly 0.2% as well. I want to pull up specifically the NASDAQ here because I want to take a look at the chips names in particular here. And it is interesting to see kind of the move to the upside that we're seeing in the chip stocks. In particular, on Tuesday, we saw chips names being the biggest drivers of movement to the upside in chips names. You can see on your screen here, you've got a lot of these big tech names moving to the downside. NVIDIA coming off of its highs from yesterday following that rally in semiconductor stocks, not necessarily driven by any huge fundamental shift in the semiconductor space, but especially given that news I just mentioned on Trump tariffs on chips names, you'd think there'd be more of a sell-off, but we saw a rally starting in those chips names to start the week of trade this week, and then that did continue into the end of the trading day. But here you can see a lot of pressure on those big tech names, Apple and Tesla and Google, all under pressure for your Mag 7 names in today's trade so far. Let's get to Yahoo Finance's Jared Blickery for a broader look at what's moving. Hey, Jared.
Hey, Maddie. Well, I thought we'd get back to the S&P 500. As you noted, we just hit another record high, only the second of the year. Same for the NASDAQ 100, but we're going very, very slowly. I'll show you the two-day price action, and just really not too much to the upside or the downside. We had a nice bang to the close, into the close yesterday that kind of saved some of the indices from being in the red, but just not a lot of movement, and that's just fine. I think when we have bull markets, a lot of the time, price action is just boring, at least at the index level, not necessarily at the security level. Here's the Russell 2000. That is leading in early trading. Let me show you the 3-month chart there. It's a little bit different. You can see we have these highs over here, and those aren't even the record highs, but we are down appreciably from those, so that's kind of a catch-up trade. Just going to note really briefly that the 10-year T-note yield and the U.S. dollar index both jumping a little bit. The movement isn't that concerning in terms of the risk rally, so I'll just leave it at that, and we'll skip over to the sector action. We had financials leading early. Financials and tech, those actually notched record highs yesterday. We're not seeing either of those in the leadership positions. We're seeing energy leading, and then the cyclical sectors like materials, discretionary, those are lagging today. Materials down, XLB down about 1%. Got to go over to NASDAQ, where I've been tracking Meta. This would be its second down day, and yesterday snapped that 20-day streak that we've been looking at. I'm going to do a deep dive into Meta in about 30 minutes and look into the potential for a bubble comparison, or we'll investigate that. And let me just show you the one-year chart, though. Very impressive, up 48.8% in that stock, just kind of going gangbusters this year. Want to close with the futures market, where we don't have a lot happening. The metals are kind of quiet today. We see crude oil jumping a little bit, but coffee is catching my attention. This is a one-year chart too. We came off of the highs, had a steep decline a couple days ago. You don't really see it right there. We stayed close enough to record highs that we are just right back there again. 120%, that is a lot. And these coffee prices, these are the input prices that affect your Starbucks and other retail coffee prices. So something we'll continue to monitor here, but just not a whole lot going on in the major indices. Brad?
Jared, thanks so much. Appreciate it. Teeing up today's trading activity perfectly. It's time now for today's strategy session. U.S. stocks pulling back to start off today's session from those record highs that we saw on Tuesday, but with the market trading near its peak, where can investors find their next opportunity for yield? Joining us now, we've got our markets reporter, Josh Schaefer. Josh, where's the next opportunity?
Overseas, Brad, right?
Okay, right.
That was one thing we wrote about this morning in our morning brief newsletter, right, was sort of the catch-up trade people have been finding among global stocks, global equities, actually starting to compete with U.S. equities to start 2025. But one thing I sort of broke down in that column as well, guys, is really it's kind of the same as the catch-up trade that you're seeing within U.S. equities, right? So if we look at the S&P 500 and look at the top performers this year, I'll read through a couple of them right now. Intel, Supermicro Computer, CVS, Airbnb. If we look at all those stocks and thought about what they did over the last year, they all have something in common. They weren't very popular stocks in 2024. And so I think what you're seeing really across the market, across sectors too, when you look at the sectors, materials, energy, some of the best performers in 2025 thus far, what do they have in common? They were laggards in 2024. So you're just seeing a lot of catch-up trade, a lot of rotation, something we were talking about yesterday off the B of A Fund Manager survey with cash levels so low. Investors aren't leaving the Mag 7 and leaving the market, right? They're leaving the Mag 7 and putting money to work somewhere else. So we're seeing a lot of action in these different catch-up trades. Of course, some individual stories going on there too. I mentioned Intel. There's potential M&A rumors. That's also why people are piling into that stock. But generally speaking, I think we're seeing a clear trend here of stocks that did not perform well last year. People are looking for some way to find outperformance this year, and it's outside that Mag 7 cohort thus far.
And it's interesting, too, given that we are in tax season. I remember Steve Sosnick teaching me that you see some of these underperformers starting to perform really well suddenly in the month of February every year. What does that tell you about what investors are doing with their capital gains taxes? Having said that, Josh, I think it's really interesting to think about kind of where we're seeing the market momentum coming from. And it does seem like we are cementing a narrative that it's no longer driven by those Mag 7 names. Does something like NVIDIA earnings coming up change that? Do we get a return to those Mag 7 names as people look for more of a safe haven trade? It
certainly puts them back into focus next week, right? When we think about the different sort of headlines we have coming at us, I would imagine the tariff headlines are going to heat up a little bit more leading into March next week. But also it seems like NVIDIA is probably the headliner next week, Maddie, yes. And we've sort of been waiting for more commentary post DeepSeek, right? And I bet that's going to be a big focus of that call. I mean, Mag 7 earnings outside of NVIDIA didn't really do a lot for that cohort, right? Save Meta, which has done very well this year, and the market seemed to like their earnings. Earnings haven't been that friendly to the group thus far, so it'll be interesting to see how it works for NVIDIA. I mean, NVIDIA, even the last couple quarters, hasn't necessarily seen a big pop in its stock, right? You look at NVIDIA shares over the last couple weeks, it's been on this trend of rallying into earnings, but not necessarily rallying post-earnings. But we know what they say can sometimes drive a little bit of an AI narrative. But I would argue, generally speaking, the AI trade is still performing. It's just not really the Mag 7 at this point.
I want to come back to what we can effectively call your passport trade a hot second ago here, because this was something that was also evident within what Macquarie was saying, and that hit our inbox yesterday, talking about globally they see areas of opportunity, valuations outside the U.S. more attractive, economic stability scarcer, though. They did warn and caution here. And I wonder how traders are kind of balancing that, the economic side of the potential instability of some of those markets versus where the valuations present an opportunity.
Yeah, Brad, so the valuations definitely present an opportunity, right? And then, as you said, sort of the variable is economic growth. But one thing that was interesting that I was looking at yesterday, if you look at sort of just consensus projections for the Eurozone or for UK economic growth, GDP growth, it's supposed to tick up slightly in 2024. Into 2025, if you look at the US, we're supposed to come down, right? And very often in investing, we're talking about rate of change, not necessarily level, right? Where is my growth increasing? So I think part of what investors are seeing across the globe is, okay, across the globe, economic growth hasn't been that great in a lot of areas for the past couple of years, not nearly as strong as the US. But if it's going to pick up, then perhaps that's my area of opportunity. Again, you mentioned variables. We haven't even gotten to the point of talking about Euro tariffs yet, right? And what if we start tariffing those countries, and how does that impact them? But just generally speaking, they're coming off a lower level, so there's perhaps more room to outperform. When you're looking at the US economy, we're expecting about 2.2% annualized GDP growth. There's not a ton of room to outperform there. I mean, there is, but that would be very impressive from the US economy. So we're sort of priced in a lot of positive growth here, and people are arguing outside of the US. We haven't priced in a ton of good news. So maybe there's opportunity for some more good news to come in and actually be a catalyst there. We've already had a lot of strong catalysts here over the last couple of years.
Certainly. One of them, though, that's a big question mark, and I love this line from BNP Paribas saying this morning that the Fed is comfortably numb right now, and that's not necessarily going to be a catalyst for Wall Street this year. So something we'll continue to monitor. Josh, thank you so much. Appreciate it, as always. Well, President Trump's economic team is focusing more on Wall Street and less on the Federal Reserve. Here to break it all down, we've got our Fed correspondent, Jennifer Schomburger. Hey, Jennifer.
Good morning, Maddie. Treasury Secretary Scott Bessent again pushing the administration's strategy to lower long-term borrowing costs for Americans by pushing down the yield on the 10-year Treasury. Comments he made again last night during an interview on Fox News. At the same time, National Economic Council Director Kevin Hassett also pushing that narrative over the weekend, saying if we can get inflation back down, that could take pressure off the Federal Reserve. Now, officials intend to try to push the yield down on the 10-year through policies that promote economic growth, productivity, and cutting government spending. Now, yields move inverse to price, so inflation tends to drive up yields as investors demand more compensation since inflation erodes the value of a bond. James Fishback, CEO of investment firm Azoria, says he believes the policies will lower inflation and boost growth, acting to push down the 10-year yield. He points to Elon Musk's Department of Government Efficiency, which he believes will trim wasteful spending and reduce fiscal pressures that can push inflation and yields higher. Now, Musk said on X that, quote, as it becomes clear Doge is working, you will see the long-term Treasury bill yields fall. Wilmington Trust portfolio manager Wilmer Stith said he believes Bessent's biggest tool for lowering the 10-year bond yield is to lower the deficit, pointing to Doge, and thus lower the supply of Treasuries. The Treasury Department indicated in its quarterly refunding statement on February 5th that it's not expected to increase the amount of Treasury supplies for at least the next several quarters. Now, tariffs could be a wild card depending on whether they prove inflationary. LPL Financial says initially tariffs could actually push yields lower as investors treat treasuries as a safe haven during uncertainty. However, if we see substantial retaliation and escalation and those tariffs do prove inflationary, then yields could ultimately move higher. Guys?
Jennifer, thank you. Coming up, everyone, the outlook for oil this year, what it means for energy companies, and one big bet by Warren Buffett. That's next on Morning Brief.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Welcome to Catalyst. I'm Madison Mills alongside Alexandra Canal. We are 30 minutes into the U.S. trading day. Let's get you the 3 catalysts we're watching this hour. First up, we're going to hone in on the big tech trade as Meta's $320 billion rally comes to an end.
Plus, we dig into investors' rate cut expectations with Fed minutes out later today.
And a look at antitrust expectations under the Trump administration as the White House looks to mirror Biden's approach. Shares of Meta extending declines after snapping a 20-day winning streak on Tuesday, closing down by nearly 3%. The multi-week rally adding more than $320 billion to the company's market cap. Joining us now for what's next on Meta and some of the other big tech names, JJ Kinahan, Tasty Trade at IG CEO. JJ, thanks for being here. You make a pretty bold statement on Meta. You say investors have turned bearish on the name. What do you make of that, given the run-up that we've seen into this really brief and kind of insignificant pullback in the context of that run-up?
Well, I think that you hit on it right in the intro there when you said, 20 days in a row, basically. This is a stock that in 2.5 weeks went from 670 to 740. Just seemed like a runaway train almost to the upside. And it's fantastic. And I just think what's happened over the last week, I actually don't know that this is necessarily a longer-term trade for many people. But I think what happened is people were looking at this and saying, okay, this is kind of insane of how fast this stock has gone up without really taking a breather. And so I think many people were just playing it for what has happened over the last couple of days and seeing, things come back to earth a little bit because the pace it was going at seemed absolutely incredible, especially given what was happening to some of its peers and the fact that, other stocks were acting, I'll use the quote, more normal in terms of how they were going up with some down days, et cetera. So I don't know that necessarily this is going to be, when talk again, hopefully in a couple of weeks, I don't know that this will be a stock that I'll be saying that our clients are necessarily bearish on longer term, because this is one that if I look back just a month and a half ago was, almost 75% of the activity was buys. And you have to remember, a normal for a retail trader is about 52% buys, 48% sells. And so when I see a stock like Meta right now, where we're seeing, almost 60% of the activity to the bearish side over the last 7 days, it just tells me that A, some people are taking profits, B, some people are just saying this move seems a little bit out of hand. And as I just looked at the numbers in the first, obviously we're only 30 minutes in, looking really quick coming in this morning, we are starting to see some people take off some of those positions and cover based on, be those options or stock positions based on the movement we've seen the last 2 days.
Now, JJ, that being said, though, Meta's run has outpaced all of its Mag 7 counterparts. So what does this signal about the investor appetite when it comes to tech? Obviously, we're still in a very concentrated market. Valuations are stretched. But does this signal maybe perhaps some buying opportunity?
Well, Alexander, I think it absolutely does. And the other part about it is, the AI game continues. I think it's still, as we're starting to see more and more in the last earnings conference calls, it's now okay, you've spent this incredible money, and besides helping middle schoolers cheat on their papers and an incredible search engine, what are we really getting done? And I think we're all incredibly excited about what can actually come from this, particularly not just in the technology sector, but in the medical technology sector also. I think maybe the most exciting place that is eventually truly transformed by AI. But that all said, it's been billions of dollars spent with returns that I think everyone's left scratching their head. However, with that said, you have the biggest players in the industry all here spending that money, all of them with lots of cash in order to do so. So we are going to start to see, in my opinion, over the next year, you are going to see a lot more developments happen there. And when you have a company like NVIDIA, which obviously reports next week, I think the one thing many of us will be looking for in that is, do we still see overwhelming demand, I believe was the term, perhaps I'm paraphrasing a little bit, from their CEO in terms of what they are seeing. And all what the stocks are showing us right now is that seems to be the case overall.
Yeah, it's interesting because you say that the bulls are back when it comes to NVIDIA, but the stock is down about 0.3% year to date. What is the bull case for the company?
Well, I think if you look a little bit more, though, and you say, okay, what happened with DeepSeek? Here's a stock that's made back just about 90% of what that DeepSeek news.
Coming back just a bit from more all-time highs. That's the sound of the opening bell from the floor of the New York Stock Exchange. At the open, the S&P 500 is down 0.2%, trading above 6,100. The Dow Jones Industrial Average opens 0.3% lower at about 44,400. And the NASDAQ Composite is down 0.2%, just shy of 20,000. 10-year Treasury yield up about a basis point to 4.56%. This latest action follows President Trump's latest tariff announcement on cars, chips, and drugs.
It'll be 25% and higher, and it'll go very substantially higher over a course of a year. But we want to give them time to come in.
The president said he may announce those duties on April 2nd. He didn't say if specific countries would be targeted. Joe Quinlan is head of CIO market strategy at Merrill and Bank of America Private Bank.
Kavil Vyaji, thank you so much for joining channel membership. If you have any question, you can ask in the comment box. Graphs चल तो रहा है. पीजे support graph नहीं चल रहा क्या? Graph is working.
Zelensky accused the president of living in a Russian disinformation space after the president said this at Mar-a-Lago.
The leader in Ukraine, I mean, I hate to say it, but he's down at 4% approval rating. And where a country has been blown to smithereens.
The latest polling of Ukrainians shows a 57% trust rating for Zelensky. President Trump spoke hours after Secretary of State Marco Rubio met with Russian counterparts in Saudi Arabia on ending the war. Bloomberg's Stephanie Baker says President Trump appears to be echoing arguments made by Russian President Vladimir Putin.
He seems to have convinced Trump that all of his talking points are actually true. Everything from it was Ukraine's fault, not Russia, that actually invaded Ukraine. But he also seems to have persuaded Trump of this Putin talking line that Ukraine's President Volodymyr Zelensky is an illegitimate leader and there needs to be elections.
Bloomberg's Stephanie Baker is the author of the book Punishing Putin. As for Putin, he says he assesses the Saudi Arabia talks positively and would be glad to meet with President Trump, but Putin says the meeting must be prepared. Later today, President Trump heads to Miami for an investment summit hosted by Saudi Arabia. Bloomberg's Tyler Kendall is covering the Future Investment Initiative and has more.
The week that President Trump took office, the Saudi Crown Prince said that Saudi Arabia would increase investment and trade in the U.S. by $600 billion. That was considered to be a pretty big pledge over 4 years, considering it makes up about 55% of the country's GDP. President Trump said that that wasn't enough and that instead he wanted to see that increase to $1 trillion over that same time period. Experts tell us that that is highly unrealistic, but it is still drawing many U.S. business interests here to Miami that could benefit from this increased flow of capital between the two nations.
Bloomberg's Tyler Kendall reports those business leaders include billionaire Ken Griffin, former Google CEO Eric Schmidt, Uber co-founder Travis Kalanick, and New York Mets owner Steve Cohen. Back in Washington, President Trump may be looking to restart budget talks. In a Truth Social post this morning, the president got behind the House version of what he calls a one big, beautiful bill. The president says legislation led by Senator Lindsey Graham does not implement his full America First agenda. President Trump's cost-cutting DOGE effort says it's saved the government $55 billion so far. Treasury Secretary Scott Bessent told Fox the figure he's seen is $50 billion. But as Bloomberg Government's Jack Fitzpatrick reports, the DOGE website tells a different story.
When Scott Bessent talks on Fox News about finding cuts that could be a couple points, percentage points of the U.S.
Vilvyaji, क्या आंसर दूं मैं बताओ? इसको अवॉइड करने के लिए वॉइस को कम कर सकते हैं. कोई भी स्पेसिफिक क्वेश्चन होता है तो पूछ सकते हो बिकॉज मैं भी बोर हो जाता हूँ स्क्रीन के सामने बैठे बैठे. सो फॉर दैट आई कैन ओपन द न्यूज़. कुछ न्यूज़ ही बदल जाती है. फिलहाल के लिए देखोगे तो क्रूड ऑयल रेंज के अंदर था काफ़ी देर. यहाँ पर नीचे सपोर्ट, ऊपर रेजिस्टेंस, ब्रेक ही नहीं कर पाया. सपोर्ट रेजिस्टेंस ब्रेक कर दिया तो बीच वाला लेवल आप रिमूव कर देना, नीचे वाला आप सपोर्ट की तरह है, ऊपर एक और रेजिस्टेंस है, वहां से वापस सेल कर सकते हो। ठीक है, ये बीच वाले लेवल को अब रिमूव किया जा सकता है, कोई प्रॉब्लम नहीं है। बाकी 7 PM का डेटा था वो तो हो चुका है, एफओएमसी मिनट्स रिलीज होंगे, एक बार नज़र रखेंगे एफओएमसी मिनट्स पे, क्या कहते हैं एफओएमसी के, क्या उनका व्यू चल रहा है एफओएमसी के रिगार्डिंग। रसिया की ओर से, रसिया के जो प्रेसिडेंट है उनकी ओर से एक स्टेटमेंट आया था थोड़ी देर पहले कि रसिया के जो प्रेसिडेंट हैं व्लादिमीर पुतिन, वो खुद चाहते हैं कि जो अभी रसिया यूक्रेन कॉन्फ्लिक्ट है उसको प्रायोरिटी बेसिस पे रिजॉल्व किया जाए, ऐसा स्टेटमेंट आया था यूएस की रसिया के प्रेसिडेंट की ओर से। तो हम एक्सपेक्ट कर सकते हैं आने वाले टाइम में जल्दी रसिया यूक्रेन वॉर के बीच में कुछ ना कुछ डेवलपमेंट हमें देखने के लिए मिल सकती है। कि अब यूएस मार्केट भी ओपन है तो वॉल्यूम ठीक ही है, ऐसा कुछ नहीं है कि वॉल्यूम अच्छा नहीं है, वॉल्यूम इज़ गुड। भी करते रहो गाइस। बाकी नेचुरल गैस सपोर्ट पे था, बीच का रेजिस्टेंस मूव कर दिया, यहाँ पर देखो लेवल कोई बना नहीं है इसलिए मैंने बनाया नहीं है, ये ऊपर का जो लेवल है ये भी 2 आवर्स का है, हो सकता है इसके बीच में भी कोई रेजिस्टेंस बना हो, बट बिकॉज यहाँ पर 15 मिनट पे इतना पीछे चार्ट जा नहीं रहा है तो इसलिए लगाया नहीं है कुछ भी लेवल, देखना पड़ेगा और कोई लेवल बनता है। बाकी एफ को रिमूव कर दो, इसके ऊपर चला गया प्राइस, इसके जस्ट ऊपर एक और एफ है शायद अगर मैं गलत नहीं हूँ तो। हाँ प्राइस को भी निकाल चुका है लेवल को, तो इस लेवल पे प्रीवियसली कहीं पर अगर रेजिस्टेंस बना होगा तो रुकेगा प्राइस, बट या 15 मिनट में नहीं दिख रहा है, ना ही 30 मिनट में, नहीं बना टाइम फ्रेम पे, तो कोई नया लेवल यहाँ पर बनाया नहीं है इस वजह से। तो ट्रेल करते रहो, अगर कोई बाइंग में भी रुका हुआ है यहाँ पर और कोई लेवल बनता नहीं है ट्रेड करने के लिए। एक ही नीचे एफ यहाँ पर बन गया है, अब ये कैंडल मोस्ट प्रॉब्ली क्लोज होने वाली है, 15 सेकेंड रह गए। दिस इज द नाउ एफ एरिया अगेन, नॉट दिस वन, दिस वन। ठीक है, ये एक एफ है जहाँ पर थोड़ा बहुत ही सपोर्ट की तरह काम कर सकता है। बाकी अगर थोड़ा सा ऊपर चला गया तो 2 आवर टाइम फ्रेम का रेजिस्टेंस है एग्जैक्टली, अगर जाता है उस पर्टिकुलर लेवल पे। 2 आवर में दिख जाएगा एमसीएक्स में, 15 मिनट में दिख, चार्ट जा नहीं रहा उतना पीछे। कि एक बार देखते हैं अगर 15 मिनट में यहाँ पर अगर कुछ सेल हो सकता है अगर। ठीक है, यहाँ पर एक अगर, यहाँ पर एक सेलिंग का अगर प्लान करें, एक बार देख लेते हैं एसएल कहाँ तक हो सकता है अप्रोक्सीमेटली। ठीक है, ये एक ऐसा रखना पड़ सकता है, ठीक है, यहाँ इस एरिया के आसपास अगर सेलिंग का प्लान कर सकते हो। बट नीचे एफ है, तो अगर ये एफ ब्रेक कर गया तो वापस डेलो आ जाना चाहिए, नहीं तो इतना ही टारगेट रहेगा। थोड़ा सा एसएल बड़ा बन रहा है, बड़ा नहीं काफ़ी बड़ा बन रहा है, 6.6 पॉइंट का, थोड़ा संभल के ट्रेड करना, क्वांटिटी कम रख सकते हो। कोई एग्जैक्ट लेवल नहीं है, बट या जितना दिख रहा है फिलहाल के लिए उसके बेसिस पे ये मार्क कर सकते हैं। 15 मिनट में और कोई लेवल नहीं है। एसएल थोड़ा सा बड़ा है बट इतना ही है। बाकी थोड़ा सा जो मेजर रेजिस्टेंस 2 आवर टाइम फ्रेम के अकॉर्डिंग वो मैंने बता दिया, हाई लेवल पर है। फोर 403 के आसपास, अब वहाँ 2 आवर टाइम फ्रेम पे चला गया तो बढ़िया बात है। ठीक है, ऊपर ये रेजिस्टेंस 2 आवर टाइम फ्रेम के अकॉर्डिंग, ये 15 मिनट के अकॉर्डिंग नहीं है, 2 आवर टाइम फ्रेम के अकॉर्डिंग। ये यहाँ पर कोई ऐसा रेजिस्टेंस है नहीं, बट मार्क किया हुआ है, अगर थोड़ा ट्राई कर सकते हो छोटे एसएल के साथ। इन नेचुरल गैस मेजर रेजिस्टेंस 2 आवर टाइम फ्रेम का 400 पे मिलेगा। हाँ वैसे तो स्टार्ट नीचे से ही है। लाइक भी करो गाइस, जिन लोगों ने लाइक नहीं किया स्ट्रीम को फटाफट से एक बार लाइक कर दो सभी लोग। आज इन्वेंट्री नहीं है, क्रूड ऑयल की इन्वेंट्री आज नहीं है। ठीक है, क्रूड ऑयल और नेचुरल गैस दोनों की इन्वेंट्री कल आएगी। अब आज एफओएमसी मिनट्स हैं, इसलिए इन्वेंट्री उन लोगों ने कल शेड्यूल कर दी है वापस। देखते हैं नीचे आता है तो क्रूड भी, अगर ये मेरे अकॉर्डिंग अब ब्रेक हो जाना चाहिए, लास्ट टाइम ट्राई कर चुका है, तो ये एक टारगेट रहेगा। बट या अभी भी है तो थोड़ा बहुत पहला टारगेट इतना ही रहेगा। ब्रेक करेगा तो फिर नीचे 6280 230। हाँ लगा है 15 मिनट में नेचुरल गैस में। देखते हैं नेचुरल गैस भी एफपीजी जाता है निकाल के या नहीं। नेचुरल गैस की इन्वेंट्री भी कल ही आएगी। क्रूड और नेचुरल गैस दोनों की इन्वेंट्री कल ही है, आज नहीं है दोनों इन्वेंट्री। अब लाइक कर दो, 50 लाइक्स हो चुके हैं, 100 लाइक्स टारगेट है। कम ऑन गाइस। ठीक है, एफपीजी तक तो आ गया नेचुरल गैस। एक बार देखते हैं लगा से ब्रेक करता है या नहीं। एफपीजी इंपॉर्टेंट है नेचुरल गैस के लिए। टारगेट लगाया हुआ है, थोड़ा सा और ऊपर आने का वेट करना अगर क्वांटिटी ऐड करनी है तो। 6296 अगर ये सपोर्ट ब्रेक हो जाता है तो फिर ये एक फाइनल टारगेट रहेगा जो पहले का टारगेट था। और अभी भी ये सपोर्ट इंटैक्ट है तो यही टारगेट है 50 पॉइंट के अप्रोक्सीमेटली। नेस्डेक का व्यू क्या है, नेस्डेक को देख लेते हैं एक बार 15 मिनट टाइम फ्रेम पे। एक सेकंड देना। बाकी देखो एफईजी को अगर ब्रेक करेगा नेचुरल गैस तो 350 का एक फाइनल टारगेट रहेगा अगर एफईजी ब्रेक हुआ तो, ठीक है, यहाँ तक अगर एफईजी ब्रेक हो जाता है, नहीं होता है तो फिर एफईजी पर ही रुक जाएगा ऑब्वियसली है, ऑल डिपेंड अपॉन द एफईजी. नाउ लेट्स सी Nasdaq 50-minute time frame. श्योर कपिल जी, आई रिमेंबर जितने भी स्टूडेंट हैं सबके नेम सेव है मेरे इसमें. Definitely, if you need any help, you can contact me on my WhatsApp actually directly. Okay. US Tech 15 minute टाइम फ्रेम पे, सॉरी, देख लेते हैं सपोर्ट पे है या फिर नहीं है. ओपनिंग से थोड़ी बहुत सेलिंग आई है, प्रॉफिट बुकिंग थोड़ी तो आएगी. ओके, देखोगे इसको थोड़ा सा इस पर्टिकुलर लेवल पे तो एक बार सपोर्ट ले चुका है, दूसरी तीसरी. देखो ये सपोर्ट तो यहाँ पर पिछले दो तीन तीन बार ले चुका है ऑलरेडी. लास्ट टाइम इसने ब्रेकडाउन भी कर दिया था बट फेक ब्रेकडाउन था, वापस रिकवर कर लिया. फिर से ब्रेकडाउन देने की कोशिश कर रहा है. अगर ये सस्टेन किया वापस 22,100 के ऊपर तभी बाई करना, ठीक, क्योंकि लास्ट टाइम फेक ब्रेकडाउन करके रिकवर कर गया था. ज़रूरी नहीं हर बार रिकवर करे. ब्रेकडाउन रिटेस्ट कर दिया तो पूरा सपोर्ट ही ब्रेक हो जाएगा. नीचे भी देख लेते हैं एक सपोर्ट, अगर कोई पास में और सपोर्ट है इसके पास. 3 बार ले चुका है, 4th टाइम आया है इस पर्टिकुलर एरिया पर. नहीं, अगर ये देखो लास्ट सपोर्ट ही है, 3 बार टेस्ट कर चुका है, चौथी बार आया है. अगर ब्रेक डाउन कर देता है तो बेटर ही रहेगा मेरे अकॉर्डिंग तो, ठीक है, क्योंकि फिर एक नीचे और सपोर्ट है वो अभी तक टेस्ट नहीं हुआ है, वो भी टेस्ट हो जाएगा. नीचे वाला सपोर्ट है वो अप्रोक्सीमेटली आपको मिल जाएगा 15 मिनट टाइम फ्रेम पे 21,950 में, 950 टू 940. ठीक है, तो अभी ये सपोर्ट पर ही है, बट जैसा मैंने बताया 3 बार सपोर्ट ले चुका है, 4th टाइम आया है. वो जो रेड कलर की कैंडल है वो फेक ब्रेकडाउन कर चुकी है. दो चीज़ हो सकती है, या तो ये रीटेस्ट करके गिरेगा, अगर रीटेस्ट करता है 22,050 के नीचे तो वापस सेल कर देना. अगर ये रिकवर कर गया 22,100 के ऊपर और ये डब्ल्यू टाइट फॉर्मेशन देता है जैसा लास्ट टाइम दिया था, तब कर सकते हो भाई. ऊपर रेजिस्टेंस भी देख लेते हैं बिकॉज वो भी ज़रूरी है. ठीक है, देखो ऊपर रेजिस्टेंस देखोगे तो रेजिस्टेंस इंटैक्ट ही है, डे हाई, उसमें कोई चेंज नहीं है. ठीक है, डे हाई इज़ द रेजिस्टेंस, डे हाई इन द सेंस ऑफ एग्जैक्ट लेवल देखोगे तो 22,160 इज़ द रेजिस्टेंस जोन. वैसे तो यहाँ से कल रेजिस्टेंस ले लिया था प्राइस ने, बट आज भी देखोगे वहीं पर ओपन होने के बाद हल्का सा ऊपर वीक बनाया, रेजिस्टेंस से रेजिस्टेंस लेके नीचे गिरा है. देखो वो रेजिस्टेंस 15 मिनट में वहाँ पर शो नहीं कर रहा है इसलिए लगाया नहीं है 2 आवर टाइम फ्रेम पे 400 पर एक रेजिस्टेंस फॉरेक्स में भी नहीं दिखा रहा एक्चुअली इसलिए प्राइस बहुत पहले आया था इस लेवल पे नेचुरल गैस में 400 कब आया था याद करो 400 लास्ट टाइम
Ended it 3 years. You
News when you want it with Bloomberg News Now. I'm Nathan Hager. Ukrainian President Volodymyr Zelensky is hitting back at President Trump a day after the president said this about Ukraine being left out of talks with Russia on ending the war.
You should have ended it 3 years. You should have never started it. You could have made a deal.
That suggestion that Ukraine started the war 3 years ago has President Zelensky accusing Trump of living in a Russian disinformation campaign. Bloomberg opinion columnist Mark Champion says Trump's push for a quick end to the war is causing concern.
The quicker you want to end it, the easier the path is that takes you to giving concessions to Russia and enforcing concessions on the weaker parties, which is both Ukraine and Europe.
Bloomberg opinion columnist Mark Champion joined me this morning on Bloomberg Daybreak. President Trump is also suggesting he would like to meet with Putin before this month is out. The Kremlin says Putin is open to that, but the meeting would have to be arranged first. Back in Washington, President Trump is looking to kickstart budget negotiations on Capitol Hill. In a Truth Social post, the president got behind a House budget plan that calls for a $4.5 trillion tax cut, slapping back Senate Republicans' proposal to rush through funds to bolster his immigration crackdown in favor of a larger bill that would likely take months to negotiate. This evening, the president heads to Miami to address an investment summit organized by Saudi Arabia. Bloomberg's Tyler Kendall is covering the Future Investment Initiative event and has more.
There really is a sense on the ground here that the Saudis would like to focus on areas of agreement between the two countries, including potentially investment when it comes to artificial intelligence and advanced manufacturing, instead of disagreements that are hanging over the balance, such as President Trump's plans when it comes to the future of Gaza, something that we know many Arab leaders, including Saudi Arabia, have disagreed with.
Bloomberg's Tyler Kendall reporting from the Future Investment Initiative Summit in Miami. This afternoon, New York City Mayor Eric Adams faces a federal judge who will decide whether the Justice Department can drop its corruption case against him. We get more on that from Bloomberg's Ed Kalegi in New York.
Judge Dale E. Ho said the parties must be prepared to address the reasons for the government's dismissal request. On Sunday, Adams told reporters his his ability to lead through turmoil should be noted.
Go back and do an analysis from the day that I was indicted to what we have accomplished. That is my ability to lead through turmoil.
Adams has pleaded not guilty to charges that while in his prior role as Brooklyn Borough president, he accepted over $100,000 in illegal campaign contributions and lavish travel perks from a Turkish official and business leaders seeking to buy his influence. Ed Kalegi, Bloomberg Radio.
Thanks, Ed. Italian Prime Minister Giorgia Meloni has paid a visit to Pope Francis in the hospital. Meloni says the 88-year-old pontiff is alert and joking. This morning, the Vatican said the Pope slept well, got out of bed, and ate breakfast after tests confirmed he has pneumonia in both lungs. Francis was admitted to Rome's Gemelli Hospital last Friday after a week-long bout with bronchitis. Back on Wall Street, stocks are moving lower after President Trump's latest tariff threats. The S&P 500 is down 0.25%. The Dow Jones Industrial Average is 0.3% lower, and the Nasdaq Composite on the decline by 0.5%. The president said he would likely impose tariffs on cars, chips, and drugs of about 25%. That announcement, he says, could come as soon as April 2nd. New home construction took a big hit last month as wildfires tore through Los Angeles. Bloomberg's Michael McKee has housing starts and building permits for January.
We do see a decline in housing starts of almost 10%. Negative 9.8% down to 1,366,000 from 1,499,000. Building permits are up by just 0.1% to 1,483,000.
Bloomberg's Michael McKee reporting. Shares of Bumble are tumbling. Bloomberg's Kriti Gupta has that.
First quarter revenue for this dating company or this dating app, that forecast missing estimates. They're really talking about a complete change in the environment, talking about a loss in some of the app paying users as well.
Bloomberg's Kriti Gupta. Right now, Bumble shares are down more than 27%. Nikola is down 36%. The one-time electric vehicle darling has filed for bankruptcy, culminating a long slide that's seen it cycle through CEOs in the wake of a fraud scandal. And Uber and Lyft could lose customers if they keep raising prices. That's according to an analysis from Gridwise that shows the average ride jumped 7.2% last year, and more than 72% of riders say they would cut back if those rates go up even further. Uber is down 2% right now, Lyft on the decline by 5%. That's news when you want it with Bloomberg News Now. I'm Nathan Hager. This is Bloomberg.
There are two kinds of people in the world. People who think about climate change and people who are doing something about it. On the Zero podcast, we talk to both kinds of people. People you've heard of, like Bill Gates.
I'm looking at what the world has to do to get to zero, not using climate as a moral crusade.
And Justin Trudeau.
There are still people who are hell-bent on reversing our approach on fighting climate change.
And the creative minds you haven't heard of yet.
Really don't need to have a tomato in December. It's going to taste like nothing anyway. Just don't do it.
What we've made here is inspired by shark skin. Yeah. It is much more simplified than actual shark skin.
Drilling industry has come up with some of the most creative job titles.
Yeah. Tell me more.
You could imagine tool pusher,
no,
driller, motorman, mudlogger.
It is serious stuff, but never doom and gloom. I am Akshat Rati. Listen to Zero every Thursday from Bloomberg Podcasts on Apple, Spotify, or anywhere else you get your podcasts.
क्रूड ऑयल का देखो टारगेट हो चुका है, बुक करना है तो बुक कर सकते हो क्रूड ऑयल में। बाकी मुझे लग रहा है शायद अभी सपोर्ट ब्रेक हो तो जाना चाहिए, काफ़ी देर से रुका हुआ है सपोर्ट। पहले एक्सपेक्ट था पहले ब्रेक हो जाएगा, नहीं हो पाया, तो नाउ वी कैन एक्सपेक्ट कि अब हो जाए ये ब्रेक। एक्सपेक्ट तो कर रखा है ब्रेक हो जाए, होता है नहीं होता देखते हैं। कोई न्यूज़ तो नहीं है आज, ठीक है। वैसे निकलना चाहो जो, अगर सेलर अगर निकलना चाहे तो निकल भी सकते हैं। बाकी अगर कोई ट्रेल करना चाह रहा है क्रूड ऑयल में, तो अगर ये सपोर्ट ब्रेक हो जाता है 6287, तो एक ये फाइनल टारगेट रखेंगे जो पहले का भी था, ब्रेक नहीं कर पाया बट पहले का भी था, ठीक है। बाकी अगर कोई निकलना चाह रहा है चॉइस उसकी है, निकल भी सकते हो। 50 पॉइंट हो चुका है, 1:3 का टारगेट मिल चुका है। थोड़ा और नीचे जाएगा तो 1:5 मिल जाएगा, बट ये अभी ब्रेक नहीं हुआ है तो हम कह नहीं सकते ब्रेक होगा नहीं होगा। लॉजिकली तो पहले ही हो जाना चाहिए था जिस तरह का प्राइस एक्शन बना था, बट या नहीं हुआ तो नहीं हुआ। बाकी सेम नेचुरल गैस का है, अगर एफईजी ब्रेक होता है तो फिर 350 के आसपास का एक टारगेट देखते हैं। लाइक करते रहो गाइज, लाइक में नहीं रुकना है। कोई क्वेश्चन हो कोई डाउट हो तो पूछ लो कमेंट बॉक्स में। ब्रेक नहीं करेगा तो कैसे चला जाएगा विदाउट ब्रेक किए हुए? ब्रेक करना ज़रूरी है अगर और नीचे जाना है क्रूड को, इसलिए मैं बोल रहा हूँ जो निकलना चाह रहा है निकल सकता है। थोड़े बड़े टारगेट के लिए वही ट्रेल करना जो एक से ज़्यादा क्वांटिटी ट्रेल कर रहे हैं। ये नवंबर नहीं मार्च मंथ का चार्ट है, फरवरी का नहीं है, और आज क्रूड ऑयल की इन्वेंट्री नहीं है। एक एफओएमसी के मिनट्स ही आएंगे अब 12:30 के अराउंड। बाकी कल काफ़ी बिजी शेड्यूल है। इंपॉर्टेंट डेटा है अनएम्प्लॉयमेंट क्लेम्स, क्रूड ऑयल इन्वेंट्री, नेचुरल गैस इन्वेंट्री, एफओएमसी मिनट्स भी कल ही एक तरह से। फिर रुक रहा है, लुक एट दिस, स्टिल होल्डिंग।
Vanguard's S&P 500 ETF VOO has overtaken State Street's SPY as the biggest ETF in the world, with almost $632 billion in assets after adding about $23 billion so far in 2025, according to Bloomberg. So what does this tell us about where investors are finding opportunities in the ETF space? Here with more, we've got Gavin Fillmore, the Chief Revenue Officer at Tidal Financial Group, joining us now for this week's ETF report brought to you by Invesco QQQ. Great to have you on. So VOO, now the biggest ETF beating out SPY. And I've had people explain this to me as VOO is better for investors, SPY is better for day traders. Would you agree with that characterization? And for those looking to build wealth and have a little bit more of a passive ETF approach, which is better?
Yeah, I mean, it does come down to basically that. So that's a great point. And it's a real milestone to see these two products at such large AUM levels. But as you suggest, SPY, which has been around the longest, still arguably has the best liquidity in the market, which is good if you're trading more often. It becomes more important. That being said, VOO's fee is lower. So if you're kind of a buy and hold investor, VOO might be more favorable than SPY. But obviously, both very healthy products. We can see in that chart they're both growing, and that's probably a reflection of the top line growth of the ETF market more than anything else.
So you mentioned that lower expense ratio for VOO, so appeals to those fee-conscious consumers. I guess the question for me is, in what case would you want to pay up for that higher expense ratio?
Sure. I mean, active management obviously comes to mind there. You can't get active management for the same price as a passive ETF. And that should be fairly logical, right? It takes dedicated active managers behind the scenes, these PMs that are managing those funds. So paying up for that type of management, certainly in different market environments or when you're trying to get niche exposure, makes a lot of sense. And then there's other factors, just like the competitive nature of the business itself driving fees down. So if you're looking for something more unique, more novel, you might expect to pay more for it, but it may have a very good use case in a portfolio.
It's been interesting to see how ETFs have evolved specifically since the pandemic. And I want to talk specifically about the Meet Kevin ETF. The YouTuber closed that ETF after a slew of challenges, including a negative performance and high fees that led to not a lot of popularity in the ETF. But how should investors be finding clarity on both complicated but also potentially just not high return ETF opportunities like something like the Meet Kevin ETF?
Yeah, I mean, to talk about the Meet Kevin ETF for just a quick second, we're actually pretty impressed by what it was able to achieve. Obviously, we don't like to see product closing. That being said, it was very unique, very novel, and it did garner $50 million in AUM rather quickly, and then it sort of fizzled out a little bit, and I think Kevin decided to move on and focus on other things. That being said, it was a good example of innovation in the market. Back to your question with respect to, how should people look at their portfolio, look at performance, look at fees, it comes down to education, obviously knowing what they buy, and reassessing their portfolio on a very regular basis, and making sure that their products are performing as they would like, looking at other alternatives, and sometimes making changes when appropriate.
Let's talk about some of those alternatives, derivative ETFs. They're gaining popularity, but they can be a bit complicated. What types of derivative ETFs exist on the market? And really, who's the buyer here? Because oftentimes they can be volatile, correct?
They can be volatile, or they can be the opposite of volatile. The amazing thing about derivatives is that they allow you to express exposures that can't be done without derivatives. So if you want, for example, protection on the downside, the defined outcome ETFs, which for me were very much a watershed moment in the utilization of derivatives for the ETF market, those are protecting downside and giving people more muted exposures. That became very important during times of stress like COVID and so on. Other products, as you suggest, may focus on other areas like leverage. So one of the first utilizations of derivatives in the ETF market were with leveraged ETFs, because you can't get leverage without derivatives. And those are more for day trading. And then recently, it's really become income that's been a focal point. And I think that started with the zero interest rate environment, but now has just led to further adoption. So, pulling back a little bit, what we've seen is a lot more acceptance of derivatives as tools to can be very, very effective in portfolios.
All right, Gavin, we got to leave it there. Thanks so much for joining us this morning. Appreciate it.
Thanks for having me.
Let's get a check-in on shares of Apple ahead of its plans to launch a new product today that CEO Tim Cook described as the newest member of the family. The stock is down about 0.3% ahead of the event. We're going to have more coverage on that event and the product announcement later this afternoon, but I do want to take a look at the major averages still under pressure here. You got the S&P 500 down about 0.2%. Your tech-heavy NASDAQ down just about 0.3%. And it's interesting seeing some of the big tech names sort of faltering so far this year. You've got 7 of the S&P 500's top 10 contributors this year being non-Mag 7 names, which is interesting in the context of the Mag 7 being responsible for so much of the double-digit rally that we saw in the S&P 500 over the past 2 years. That leadership change-up still happening, especially when you take a look at some of the sectors like financials and energy leading the gains so far today. Well, that's going to do it for me and Allie. Coming up, we've got Wealth. It's dedicated to all of your personal finance needs. Brad Smith will have you here for the next hour, so stay tuned for more.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
It's time for Yahoo Finance's Market Minute. Stocks edge lower, the S&P 500 retreating from record highs amid tariff threats from President Trump. Shares of EV maker Nikola tanking after filing for Chapter 11 bankruptcy protection and announcing an auction of its remaining assets. Nikola said it plans to provide services for vehicles in use through March. Etsy sinking after revenue missed Wall Street's expectations, the e-commerce company citing slower consumer spending, competition, and challenging year-over-year comparisons as significant headwinds. And home solar provider SolarEdge shares jumping as a revenue beat and positive free cash flow offsetting a wider than expected loss. The CEO saying SolarEdge expects to maintain positive cash flow for the full year as the company is, quote, just getting started on our turnaround story. And that's your Yahoo Finance Market Minute. For more on what's trending on Yahoo Finance, scan the QR code below to track the best and worst performing stocks of the session.
Welcome to Wealth, everyone. I'm Brad Smith, and this is Yahoo Finance's guide to building your financial footprint. Our community of experts will give you the resources, the tools, the tips, and the tricks that you need to grow your money. Hey, on today's show, Portfolio Checkup. We'll break down how investors can be smart with diversification. And how much is Meta CEO Mark Zuckerberg worth? Well, it changes day to day, and we'll explain. Plus, yesterday we tackled tips for first-time home buyers. Today I talked to the chief economist at Realtor.com, and we'll discuss moving out from your starter home to your second home or perhaps your first family home. All that and much more coming up during this hour. But first, we are 90 minutes into the trading action. Let's take a look at where major averages are. We are lower across the board for the Dow, the S&P 500, and the NASDAQ. Stocks falling amid new tariff threats. The S&P 500 pulling back from a record high. Joining me now, we've got Will McGough, who is the Prime Capital Financial Deputy Chief Investment Officer. Good to have you here with us. You say being smart with diversification is the name of the game. So how are you doing that right now?
Thanks, Brad, for having me on as one of the top wealth firms in the country. It's great to be on a show dedicated to wealth. Diversification matters more than ever this year. If you think about 2022, 3 and 4, especially in 23, market was up 20%, 24, market was up 20%. I doubt we're going to see another plus 20% trifecta here, 3 in a row. Got a new regime in Washington, D.C., which is going to add a lot of volatility to the markets as well. So I would be very prudent with asset allocation and maintain diversification this year more than ever.
And so with regard to that, where are you kind of broadening out your diversification at this juncture?
Yeah, so I think you have to look at it in equity and fixed income a little bit differently. With regards to an equity portfolio, everybody loves the Mag 7. Mag 7's great exposure. We're recommending to core it up this year, which means kind of get rid of the overweight to those growth companies, look a little bit broader, value bellwether companies that are just going to be a little bit less volatile than the Mag 7. Earnings growth numbers are hit right now, but I would say that we're at peak earnings growth. It's hard for it to exceed the team that we're in right now. And so I think you're going to see a rotation. So being diversified across core large cap equities and also looking into small caps is a prudent play. Now for fixed income, we're actually working with our advisors to help educate clients that, you should actually be in some duration bonds. Everybody can go get, 4 or 5% short-term risk free, but the risk for where rates are going to go is down, not up. So you might as well get the yield and plus any potential capital appreciation from bond prices going up as rates may go down.
Of course, one of the primary components to that Mag 7 trade, NVIDIA, they report earnings next week. What are you going to be listening for to further perhaps cement the themes that have really propelled the Mag 7 to the outperformance that we've seen in the markets?
Right. So they've been delivering on earnings growth. As I just mentioned, they're predominantly driving earnings growth for the S&P. Right now, forward guidance is the name of the game. The markets are a discounting machine, so you have to follow trends. There are massive trends in the market right now, and most companies are reporting good earnings looking backwards, but they're being very cautious with their guidance going forward. And so I think we have to watch NVIDIA here. Are they going to follow this trend of hitting earnings backwards looking, but being cautious forward looking? And that's just kind of the narrative that's creeping into the market right now that, there may just be a little bit of a slowdown in the Mag 7 with regards to earnings growth. You're talking about phenomenal earnings growth to above average earnings growth. But again, that's all taken into consideration with how investors are positioning their portfolios And we think it is prudent to own the Exxon Mobil's, Procter Gamble, Walmart's of the world alongside the Mag 7, especially coming off the last 2 years.
It's interesting. And in some of those names that you just mentioned, a little bit more exposure to the everyday consumer. And as we think about that in the macroeconomic backdrop, that takes us to what the Fed is going to be signaling, at least through the meeting minutes once they get published here today. What should we be keeping close tabs on there as to how the Fed and the FOMC is thinking and talking about the consumer right now?
Yeah, so the consumer is the name of the game. I think the stats like the U.S. economy is 70% driven by the consumer. We've got to watch what's going on in Washington, D.C., which is both fiscal and monetary, and now executive with Trump. So the Fed is in a precarious spot. You know, inflation numbers last month ticked up. They've been cutting rates. So you've got a potential distressed consumer coming aboard with tariffs raising prices. Energy markets are still high. Trump wants to bring those down. You've got a potential for, you know, all these government employees that are being laid off or taking the package to leave coming into the unemployment numbers. You've got a lot of the big companies moving more towards AI and less towards workforce. So I think we could see a situation where the narrative starts to change and the Fed is all of a sudden kind of stuck. Did they raise? Did they lower? Did they stay? And it's going to be, I think long term, they're at a higher neutral rate, which is good. We haven't seen that in decades. And so that could bring some, real earnings growth alongside nominal. But again, it's all going to come down to, how efficient is the government, especially Doge, at reducing the deficit, because if you look at every economic indicator through COVID, there was a spike and a return to normalcy. It doesn't really matter what it was, except the U.S. deficit. It spiked and it stayed. And so that's a big problem with regards to what's driving inflation. And so a lot of folks, peers of ours, other asset managers are seeing inflation come down. Again, it's forward-looking with the efforts of Doge, which could give the Fed a little bit of pause, comfort in staying where they're at right now. Otherwise, if this inflation trend, if they're not successful, inflation ticks up where everybody's forecasting 2 cuts this year, you could see a potential 1 or 2 token increases just to help them combat inflation. But again, it's going to be a wait and see, and it's a fun market out there. It's we don't really have this many macro drivers at play at the same time. We haven't had it in a while, and it just makes it more fun as an investment professional, helping advisors help clients position their portfolios to meet their goals and objectives.
Yeah, well, more fun when you're able to get some gains along the way and navigate what is extreme volatility, as some of our guests have talked about as well. Just lastly, while we have you, Will, as you're really parsing through, and you started to mention this, some of the policy decisions that are coming out of 1600 Pennsylvania Avenue. At what point do you believe that the Fed will have enough of the data and the read-through and the pass-through from some of those policy decisions into the economy in order to then start to clearly make their own decisions and rate policy?
Yeah, so they've been in a tricky situation. Everything they have done to combat inflation was offset by the government with their deficit spending causing inflation. So I think that, again, they're independent bodies as they should be. It's how they were set up in the early 1900s. It's going to obviously factor into their rate decisions. And especially if we can get into a situation where they can have a higher normal rate and then the market, the longer term treasuries tend to plus start to come in like the folks in Washington, D.C. are aggressively trying to do, you could be in a good spot to where, that's why we're advocating for investors to have duration in their portfolio, because, the short term, if crisis happens and we get a recession, some geopolitical shock, the Fed is going to have a put in the market. So they're going to reduce rates. So the curve coming down is the more likely scenario, and you might as well be able to clip the yield and participate if the curve does come down as well by having duration. So again, it's a wait and see with regards to how the data is coming in and what the Fed says with their statements. They did a pretty big rewording last time, so it'll be interesting to see how much of their rewording Fed statements are like super tankers. They don't change much. When you're on the open waters, it's hard to change the course direction. So they started to try to turn the wheel with the last meeting, and we'll see if they continue to do so or not.
Right. Will, thanks so much for taking the time here today. Appreciate it.
Thank you.
Let's check in on Meta shares here, extending losses after Tuesday's down day. The stock breaking a 20-session win streak on Tuesday. It closed 2.7% lower. A multi-billion-dollar drop in the bucket hit to co-founder and CEO Mark Zuckerberg's wealth. Mark Zuckerberg is the second richest person alive, according to Bloomberg, worth $252.2 billion, trailing only Elon Musk, who has around $397 billion. You can spot some other familiar names among the top 5. The majority of Zuckerberg's wealth is in Meta, and he holds a 13% stake, or 342.8 million shares worth around $245.6 billion. Rounding out, Zuckerberg's net worth is around $6.6 billion in cash and other assets. But with yesterday's losses, Zuckerberg's net wealth, it fell 2.7%, shedding just over $7 billion in value. And here's some added context. Zuckerberg's wealth has still grown more than 20% so far in 2025. That's a gain of $45 billion. And for comparison, that equates to over 2 times the size of Snap's market cap. Since Zuckerberg's net worth is so closely tied to Meta's performance, his wealth will fluctuate day to day, week by week, and so on. This wealth driver is not atypical among tech founders, CEOs, or heirs to family fortune, as financial growth can largely be tied to the success of one business until an asset diversification strategy is activated and managed across other investments. Coming up, everyone, I speak with the CEO of freelance services marketplace Fiverr about how creatives can utilize AI to grow their businesses. That's next on Wealth.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
It's time for Yahoo Finance's Market Minute. Stocks are mixed as investors digest potential tariff threats, but some individual names are on the move. First up, Hims & Hers. Shares jumping after the health platform announced the acquisition of an at-home lab testing company, which will allow the opportunity to offer whole-body testing to subscribers. Notably, Hims & Hers is also a heavily shorted stock. Next, Occidental Petroleum. Warren Buffett's favorite energy company popping after it reported a surprise profit growth in the fourth quarter, along with progress towards its debt reduction goals. And shares of computer networking company Arista falling on concerns over Meta concentration. Meta's contribution to sales in the quarter fell to 15%. That's down from 21% in the prior year period. And that's your Yahoo Finance Market Minute. For more on what's trending on Yahoo Finance, scan the QR code below to track the best and worst performing stocks of the session.
Welcome to Trader Talk, where we serve up the latest buzz from Wall Street, helping you keep your portfolio sizzling without getting burned. I'm your host, Kenny Polcari, broadcasting live from the iconic New York Stock Exchange, the heartbeat of capitalism. And after decades here as an institutional stockbroker, it feels incredible for me to be back home again. This place still gives me a thrill. And while it's evolved and modernized over the years, the New York Stock Exchange remains a cornerstone of capitalism, entrepreneurship, and above all, freedom that's woven into the very fabric of our nation's history. Tariffs aren't the problem. Investor panic is. Every time tariffs hit the headlines, the market throws a fit, stocks dive, the media screams trade war, and investors act like it's 2008 all over again. But let's just take a step back. Are tariffs really the disaster that they're made out to be? Tariffs are taxes imposed on imported goods to regulate trade, protect domestic industries, and generate government revenue. While they can be beneficial in some cases, they can also have some downsides. So here's a breakdown of the pros and the cons of tariffs. So one, it protects domestic industries. It encourages local production. It supports domestic jobs. It increases government revenues. Money from tariffs can be used for infrastructure, healthcare, and even national defense, or paying down the national debt. It encourages domestic consumption. It limits foreign dependence. It strengthens national security and protects critical industries. It reduces overall reliance on rival nations, i.e., China trade tensions. It encourages fair trade practices, leverages trade negotiations, and countries can use tariffs as a bargaining tool in trade agreements, i.e., the NAFTA renegotiation into USMCA. Look at what's happening right now. The knee-jerk reaction was ridiculous. Stocks tanked, volatility spiked, and algorithms panicked. But none of it was a surprise at all. I just think markets were betting on an 11th hour deal that didn't happen. But what happens when the dust settles? Executives adjust, trade deals get renegotiated, and investors realize that the world is not ending. Those who stay calm and position themselves accordingly will usually win. The real problem isn't tariffs, it's how investors react to them. If you're dumping stocks because of tariffs, you're doing it all wrong. If anything, tariffs create an opportunity. They expose which companies have pricing power, which sectors can pass costs to consumers, and which ones are too fragile to survive. The ones that weather the storm, they become market leaders. So what should investors do? Instead of running for the exits, pay attention to where the money is moving. Look at companies with strong balance sheets, pricing power, and diversified supply chains. Watch how the industries shift. This is where real opportunity is found, not in panic selling, but in smart positioning. The bottom line, tariffs are not the end of the world, but emotional trading, that's what really kills your returns. Now, my next guest is a powerhouse in the hedge fund world. He is the founder, chairman, and managing member of Great Hill Capital in New York City. Tom has been at the forefront of long-short equity investing, delivering actionable ideas that have reshaped the industry. His weekly hedge fund tips, videocast, and podcast are trusted by professionals and individual traders alike, and his expertise has earned him features on Fox Business, where I appear with him, and I love to do that, CNBC, Bloomberg, and more. He's a Columbia University alumnus and a dedicated community leader. Tom's dynamic approach makes him a truly influential voice in finance. Ladies and gentlemen, please welcome me in joining Tom Hayes to the podcast. Tom, it is a pleasure to have you with me today.
Thanks so much for having me.
Thank you
Kenny.
for coming in from California these days.
Yeah, that's right. That's right.
So look, there's been a lot happening in the markets, right? Yeah. So the market's been very volatile. We've been talking about not only this new presidency, but new policies, but the tariffs. So talk to me just on long-short strategies, kind of what you're thinking about when you think about the markets and how to position yourself.
Yeah, this is a question that we get regularly. This reminds me a lot of 2016 to 2007. What happened right after the election was entirely different than what happened after the inauguration. After the election, yields blew out. The dollar went straight up. Tech went down. Emerging markets went down. International went down. After the inauguration, things normalized. Tech went back up. Yields came down. The dollar came down. And you know what? International and emerging market stocks outperformed in 2017.
Right.
So these were some surprises.
So why do you think that was? Why do you think emerging markets outperformed?
Well, I think that it's a fear of the unknown. Okay, this is the big thing. And this creates opportunities, like you said earlier in the segment. Dislocation is where you find outperformance.
Right.
So when people sell off due to irresponsible, it's funny, I had a question. We have this little company, it's called Cooper Standard, and they manufacture auto parts. They do the sealing systems around the windows, they do the fluid transfer systems, and where do they manufacture? They manufacture a lot in Canada, they manufacture a lot in Mexico, and everyone was worried, is this gonna hurt it? I said, look, at the end of the day, the average car on the road is 13 years old. Okay, there's going to be a refresh no matter what. No one is going to put up $500 million to stand up a factory in Minnesota from scratch to produce these parts that have been produced for decades from this company that's a leader in the business, even when you price in the effect of tariffs.
Right.
So at some point you have to step back when these stocks sell off because they have exposure to China or they have exposure to Mexico or they have exposure to Canada. You say, wait a second. If I look back at their free cash flow and revenues 2 years from now, it's going to be a little blip on the radar. It gets evened out.
Right, and so I think that's a very key part. But I think the other part of this whole conversation is these tariffs were only going to be imposed if Mexico and Canada didn't come to the table to help us with a problem that's got nothing to do with investing, right?
It's interesting. This version, Trump 2.0, is more benign than Trump 1.0.
Right.
Trump 1.0 was a legitimate trade war.
Right.
Trump 2.0, as Hassett came out and said, is actually about drugs and about illegal immigration. And they put 10,000 troops in, and we said, okay, we're going to back off.
Right.
You keep the troops there, probably we're going to be okay.
Right. So I think the part that caught me the other day when the markets actually had a nervous breakdown on the Monday that it wasn't like he hadn't been talking about it.
Correct.
He talked about it for 7 months during the year. He talked about it before the inauguration. He talked about it after the inauguration. He put them all on alert that this was coming if they didn't come to the table and have this conversation. Nothing about trade wars really, but it was about helping us out at the border and stopping the flow and stopping the drugs.
Yeah.
Right? And so I think the market was expecting an 11th hour deal. And they didn't get it. And so on that Monday, they all had a panic attack. And then suddenly Mexico comes to the table and says, okay, we're going to help. And then he backs right off.
Yeah.
Right? So I think it is a negotiating tactic.
100%. This was the most telegraphed surprise in history. We'd say buy the rumor, sell the news. This was sell the rumor, buy the news.
Yeah,
100%. No question about it.
Yeah, no, 100%. But tell me now he's talking about, over the weekend, he talked about imposing tariffs on China, which have started. Now reciprocal tariffs. I think that's really aimed at Europe, reciprocal tariffs, right?
Correct. I think, look, China is doing the exact same thing that they did in 2016 right after the election, which is they devalued the yuan in anticipation of the tariffs.
Right.
So what he's put into place is actually a net zero because they've devalued the yuan. Now that the tariffs are in place, you've seen the yuan stop going down. It's starting to appreciate relative to the dollar. So that's kind of priced in. And if you look at pricing, people say it's going to be inflationary, okay? And people go crazy. In the short term, for first couple of months or whatever, maybe you see something. Intermediate term, it's net neutral, and long term, it's actually, you've seen in the case of washing machines and stuff, prices actually go lower.
Right. But you know what's interesting is that it's a one, if it's inflationary at all, it's a one-time inflationary bump because it just adds a fixed cost to the price and then it doesn't keep going up.
That's correct.
Right? It's not like it's a 9% inflation every time you turn around. It goes up once and then it adjusts.
That's right.
But to your point, then once it all settles in, it seems to find its level.
Yeah, and you have Doge, which is actually taking costs out of the system, which is deflationary by nature. There are a lot of different offsets that are coming that people are not pricing into the potential risk of inflation of tariffs, and I think you're going to see that it more than net washes, and you're seeing it in bond yields, by the way.
Right.
Everyone was pushing. Look, it's one of the two most crowded trades right now. What are they? Short bonds, I'd take the other side, and long Mag 7, which I think you got to start to moderate your view on long Mag 7.
All right, so talk about why you think people should moderate their view on Mag 7, because while I like the name and I like all the names and I own a lot of them,
of course,
I'm not chasing them up here at all.
Exactly.
Right?
Exactly.
You got to go ahead. So talk.
So I think you want to go where earnings growth is accelerating. Okay.
Right.
So last year, earnings were the name of the game for the Mag 7. Okay, They had 33% earnings growth, which was double the market. They should get double the multiple. This year, earnings growth is decelerating from 33% last year for the Mag 7 down to 21%. The multiple has not contracted in line with that decelerating in earnings growth. The rest of the market had negative earnings growth the last first 3 quarters of last year. It's now accelerating, and the multiple is half of the Mag 7.
So let's talk about that for a minute. So if the multiples in the Mag 7, it's decelerating. If earnings are decelerating,
earnings growth is decelerating.
Now but that's what your analysis tells you. That's just what is that what all the
bottom up consensus estimates? Yeah. So earnings growth is going to decelerate from 33% to 21%, and we're seeing it. It's a function of capex,
right?
And people say that this is offensive. It's defensive,
right?
It's defensive capex because you have no return on invested capital yet.
That's the key.
So for the next 2 years, they're going to spend a lot of money, and we're going to find out in 3 to 5 years if they're going to get a return on that.
Right, but they've made it very clear. Look at the last earnings season. They've all made it very clear that they're spending huge amounts of money building out AI and data centers and all that stuff, which I think is going to end up coming back. But it might take 3 to 5 years before they really realize the return on that investment.
Yeah, this was the first quarter since 2022 that you had 0% revenue surprises in the Mag 7.
Right.
So we all know what happened in 2022 with tech. It was a little bit softer than people expected.
Right.
Everyone was euphoric going into it. We also have the highest percentage of S&P components trading over 10 times sales since 2000. So there are a lot of multiples and a lot of metrics that point back to 2000. I don't think we're going to have anything like that at all.
Yeah, I don't.
But I do think we're going to have a relative slowdown in terms of, those groups are going to have to consolidate their gains.
And that's actually okay.
It's very healthy.
To do that.
Very healthy.
You can't keep, trees don't go to the sky, right?
100%. So they could underperform, which could imply the indices could be more subdued than last year. Maybe high single digits, low double digits.
Which also, again, over historically would be fine, but a lot of people look at the indices and go, oh my God, that's a failure. We were only up 12% because the last 2 years were up 25, 28%.
Yeah.
They'd look at plus 12% as a failure.
Yeah. And what's so beautiful about that environment is that people are like, oh man, only 8 to 12%. Well, under the surface, you can make fortunes. Some of these companies that didn't perform last year because Mag 7 took the air out of it. And we started to see the rotation starting in July. It took a break in December, big break in December, kick back in January, February. I think the other area you got to look at besides Unmagnificent 493 relative to Magnificent 7, I think you got to start to look at small caps relative to large caps.
Okay.
Why? Because again, earnings growth acceleration. So if you look at S&P 600 small cap, 8% earnings growth last year, 21%, 8% earnings growth last year, 21% earnings growth this year.
That's consensus, 21% earnings growth.
All consensus bottom up. 15 times versus 22 times for the indices. That's interesting. If you look at the Russell, you go up to 55% earnings growth. Why? Because you had so many companies not earning any money. And when you go from 0 to 1 cent, it's infinity, right?
Right. So explain that just so the audience understands. When you say it's 15 times versus the market's at 22 times, suggests that it's undervalued.
Correct. Right?
I
mean, meaning you can get more equivalent earnings growth for half the price.
Correct.
Okay. So if the Mag 7 is going to grow 21% down from 33, and small caps are going to grow 21% up from 8,
right,
and you're paying 15 for one and 33 for other, well, most people, when they go to the store, they want more for less.
Right.
When they go to the stock market, they say, I want to buy the most expensive thing ever.
Yeah.
You know, Wall Street.
But then they panic the minute, right? They panic right away.
I always say Wall Street is the only market, the only store in the world when they throw a clearance sale, everyone runs out of the store.
And it's so funny because I always use like the Bloomies analogy, right?
Yeah.
When Bloomies puts dresses on sale for 30%, women run in there, they got to buy 3 of them because how can you leave it on the shelf?
Yeah.
But yet you get a name like Apple or Amazon, they sell off 15 or 18 or 20% and people are panicked. Oh my God, I'm going to lose all my money. Like, are you nuts?
Yeah.
I mean, you're not talking about some nano cap or micro cap.
Correct.
You're talking about a mega cap stock.
Correct.
Apple makes $124 billion every 3 months.
Yeah.
Am I missing something?
Yeah, exactly.
But anyway, so I think, because then I want to go on and talk more about your broader kind of view of the bond market and all that stuff. But let's just talk about this. So when you talk about, looking in other places, like the last will be first. I have that same kind of view. So tell the audience what you mean by that.
Yeah, so I think if you look at last year, you look at two of the worst performing sectors. You had healthcare and you had materials. Lowest earnings growth, lowest performance.
Right.
Shocking, right?
Right.
Well, this year, they're going to be in the top 4 sectors, the second and the fourth, healthcare and materials, in terms of earnings growth. 19% earnings growth and 17% earnings growth. Relative to the S&P overall, 14% earnings growth in that neighborhood. So I think we're going to see a lot of catch-up from these type of sectors that have high earnings growth, low multiples, and that's where you're going to see some outperformance.
Right, and these let's be honest though, there are no names in either one of those sectors that's really sexy, like tech. When you think about Nvidia, right? There's nothing in there that screams, I got to have you. But when you think about where it's been. Yes. Right? Last year, the underperformer versus where it can be this year in terms of consensus estimates and all this stuff. There are some great opportunities in those sectors.
No question about it. I mean, one material stock, and you got to look at boring ones, Albemarle. Okay, the top lithium producer. Lithium prices are cyclical. Okay, Albemarle always comes through. They've got $3.5 billion of liquidity. They're taking tons of costs out of the business. All of them are lowering their production. And by the way, we all think of EVs and we say, oh, no one wants EVs anymore in the U.S.
Right.
Well, the global stock is going to go. It's a 100% China story because it's government subsidized.
Yeah.
It's going from 40 million to 120 million by 2027. All driven by China. They're going to need the lithium, and lithium uses are even beyond EVs. So Albemarle is a leader. It's down materially. It's got the liquidity. It's gonna rebound over the next 2 to 3 years.
But again,
not next 2-3 minutes.
No.
Not next 2-3 weeks. 2 to 3 years.
That's right. So you have to know that going in, and you have to realize that you're going to put this money to work, and it may take you a while to see it return. But it's on sale, so you need to put some money.
And when you can get stocks down 50, 60, 70%, that are high quality, durable businesses through many cycles, and you make a double in 3 years, that IRR is going to beat the market every single day of the week. And that's why they call me Turnaround Tom, because that's what I do for a living, my man.
But I think that's absolutely right, and that's what a lot of people miss, right? A lot of people. Well, first of all, you get a lot of people that just want the names that move all the time, right?
Correct. In the headlines.
In the headlines,
sucks them in. It's like a magnet.
That's right. But if you're a long-term investor, if you're a day trader, that's fine. That's all you want. You want chaos and you want all that stuff.
Yeah.
But if you're a long-term investor, you really want to start to think long-term.
Yeah.
And you want to think about opportunities and names that it might be boring.
Yes.
But sometimes big and boring can be beautiful.
Yes, I'm the captain of boring, baby.
Hold on one second. Let's just take a quick break and then I'm going to come back.
All right, good.
Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail. Oh yeah, you're not gonna forget to cancel those free trials this time, right? Uh-oh. Free trial alerts to the rescue, so you cancel on time from Yahoo Mail.
Welcome to the Opening Bid Podcast. I'm Yahoo Finance Executive Editor Brian Sozzi. Like I always say, this podcast will make you a smarter investor and a better leader. Before we get to our really cool featured interview guest for this episode, have to do our stock of the day. Stock of the day is Apple. The iPhone SE is rumored to be dropping today. First blush, you think, this is an iPhone priced under $500. Apple will sell some phones, and it's all good. But this could be a real money-making opportunity for Apple. Don't get misguided by that sub-$500 price point on this phone, potentially. New note from Evercore ISI tech analyst Amit Dariani estimates that Apple could sell 20 million of these phones within the first year, could bring $12 billion in annual revenue just from this cheap iPhone, and that could lead to 20 cents to 25 cents a share just from this iPhone alone. And that is not including, does Apple charge anything on this phone for Apple Intelligence? So again, you may see a cheap iPhone from Apple, but it can bring in big money, and it might send street estimates higher. All right, let's get to our featured interview for this episode. I'm really excited because I've followed this guy's entire career. Bausch & Lomb Chair and CEO Brent Saunders. Brent, good to see you, man.
Great to see you, Brian. Thanks for having me on.
Of course, it feels like we joked off camera. You've had like 9 lives in the healthcare industry. And before we get to Bausch & Lomb's earnings, I mean, they dropped today as well. Good quarter for you guys. But is this number right that you've done over $160 billion in deals in healthcare over your career?
That's actually wrong.
Wrong.
I think the number is over $300 billion.
$300 billion.
Yeah. Yes. I had JP Morgan do an analysis of it about a year or so ago, and I forget the exact number, but it was somewhere close to $300 billion.
Yeah, so let's go through a little bit. I mean, this is your second stint in Bausch & Lomb, but for those not familiar with your career, I mean, you started essentially at Bausch & Lomb 2010 to 2013, sold the company, ended up at Forest Labs, bought Allergan for billions, then Allergan went to AbbVie for, $63 billion? I mean, what has made you, or what has driven you to drive all these big deals?
Yeah, it's interesting. It's funny because I think, and appropriately so, I get it. A lot of people think of me as a deal person, and it's so counter to what I think about myself, and so there's always that juxtaposition of the outside view versus the inside view. Look, my whole drive as a company CEO is to create value for shareholders, and I hope to do that through operating well. But sometimes you create such a valuable company, somebody else is willing to pay more for it and give that return to your shareholders. And so I'm always open-minded about that. I always say as a public company CEO, your stock's for sale every day on the stock exchange. And so if you can get a great return for your shareholders, you have to be open-minded to that.
And you have really your childhood was rooted in healthcare, no?
My father was a doctor, and my first job, I was a lawyer early in my career, was at Thomas Jefferson University and Health System in Philadelphia, and so I worked in a hospital for a couple of years. Then I went into managed care for about a year, and then into consulting, and then the pharmaceutical industry. So my whole career has been in all the different aspects of healthcare.
I read some story, it was a profile of you, I think over a decade ago. You were selling shampoo at the age of 6. I mean, you were somewhere, you were always, you always seem to be evolved, just involved with healthcare. I mean, what fascinates you about it?
Yeah, I always, and it's funny because I once got offered a job at a well-known office supply retailer to be CEO. And I thought about it for a night. And I remember saying to myself when I woke up in the morning, will I be obsessive? I always want to be obsessive about the job I have. Can I really motivate myself to sell paper clips and staplers and notepads? Or do I really love selling things that change people's lives, hopefully for the positive, right? And the quest to solve unmet needs in healthcare, the science, and really, like at Bausch & Lomb, helping people see better, to live better, really is extra motivation that allows you to get to that obsessive kind of level in your mind.
That wasn't a recent offer, because who the hell wants to run Staples or Office Max or Office Depot?
This was back in 2013.
Okay.
Yeah, this was 2013.
Oh,
yeah,
God, you walk into a Staples, Brent. I mean, I can't think of a more depressing experience. Holy cow.
Oh, it wasn't Staples, to be fair, but a competitor to Staples. Yeah.
Okay, all right. Fair enough. So let's talk some Bausch & Lomb. Like what, you didn't have to take this job when you came back a couple years ago. Like, what is so attractive in your mind about the eye care market?
Yeah, it's interesting. I almost didn't take the job. I actually went back and forth with the board for about a year before I ultimately did it. And I was drawn to it because of my passion for eye care. I started in this industry, as you mentioned, in 2010 as CEO of Bausch & Lomb. And then ultimately when I acquired Allergan, Allergan was a big eye care company. It actually started as an eye care company. And so I have been more or less in this industry for 14, 15 years. And the one thing that's really cool about ophthalmology is if you really, I'll pose the question to you, Brian, what's the most important sense you have, right? And if you lost it, the profound negative impact on your life, it's your eyesight. And we've surveyed humans, for decades, how important eyesight is to the quality of life. And the community of ophthalmology and even optometry is a great community of eye care professionals. They really appreciate innovation. They like to try new things. Many of them are inventors and contribute to the innovation ecosystem. And it's a really close-knit community, even though there are hundreds of thousands of them around the world. It's a really close-knit community of people who are really trying to help people have a higher quality of life through better vision. And it's a really cool field.
And looking at the results for the most recent quarter, I mean, the contact lens business up double digits, U.S. up double digits, international constant currency up double digits. The margins look to be pretty good on the business overall. Is there a breakthrough? I mean, I looked at the slide deck, but like for the lay person out there, is there a breakthrough product in the business of contact lenses that you're working on?
We are actually. It's interesting. In when was it? 1999. We introduced the current materials that are the vast majority of contact lenses, silicone hydrogels. And the whole industry now is driven by silicone hydrogel growth. Those are the daily disposables, and even the FRP, the monthly replacement lenses, are predominantly in that technology. And no one has innovated a new technology since 99. So if you're an optometrist in your mid-40s and you're fitting contact lenses, you've never really experienced a new material. You've seen new deviations of silicone hydrogels, perhaps with new optic designs on it or new modalities, daily, monthly, weekly, but you've never had a true innovation. Our scientists in-house created a new material that we're going to drive into clinical trials this year and potentially launch in 27. Could be a breakthrough, a biomimetic lens that really mimics the biology of your eye in a contact lens. And we're hoping the clinical trials will prove it out, that it's healthier